founder and CEO of Lost Dog. It's great to have you all here. There's so much to talk about this Monday morning, but before we jump into all of it, Tom, just want to get your thoughts on what we are seeing with retail trading as we do come into a big week with NVIDIA earnings.
NVIDIA.
It's been, actually, the markets have been pretty good. You really did name the top five, and of the three individual equities, Tesla, Micron, and NVIDIA.
Oh, Tom.
You've seen an incredible amount of action in the derivatives market on all of those. So I think that's a pretty fair list. It's been choppy, so I can't say much more than that. But you've seen most of the retail activity has focused on those three names. No question about it.
Stephanie, I want to get your thoughts on this, especially since even as the S&P has been range-bound, there's been so much volatility under the hood. Is NVIDIA
We've had three white soldiers
for the markets this week, or is it going to be some of these software names like Salesforce, like Workday, like Snowflake after the downdrafts we've seen?
Yeah, well, certainly NVIDIA is front and center. I do think the quarter is going to be good. The management has been showcasing all quarter long that things are good, that money is being spent. They can't keep up with the demand, and that the supply chains have actually improved, which is a good thing. The good news, Morgan, is that the stock has done nothing, really. It's been kind of sideways for a while.
That's good
it's only
news.
up 2% year to date. And so the expectations are low. What's more important in my mind, excuse me, rather than just NVIDIA, because it's important, but it's going to be the whole food chain. The food chain you know very well. It is not only AI, but it's data center, it's the grid, and it's power. And we know that the industrial companies that have reported so far, like GE Vernova, Vertiv, Quanta Services, all have reported blockbuster numbers with blockbuster orders. So for that trade to continue, NVIDIA better be good, and I think it will be.
Jimmy, we've asked the questions, the investor questions around AI, but now it seems the political questions around AI are percolating as well, especially as there's going to be a big focus this week, the State of the Union on affordability.
Affordability is a huge issue. So they're going to talk about what their housing plans are. But it would not surprise me if AI makes it into the State of the Union, and if it doesn't, it will be the last State of the Union in which we don't talk about AI. Already you have some potential 2028 candidates talking about AI, generally very critical, and I mean that's of some concern to me. Not just about the data center issue, which I think is going to be ongoing. But I think as these concerns, and somewhat fueled by these CEO predictions about all our jobs are going to be automated in 18 months, I think you're going to see this a much bigger issue going forward, and it actually could give some momentum to the idea of some actual AI regulations, something that never really happened during the social media wars, but could happen this time around.
Jimmy, you just mentioned housing. What else are you watching going into this address tomorrow night, especially as we did see all of this? We are seeing all of this tariff policy evolve here and shake out in real time.
Yeah, well, I think he's going to talk about. Listen, the president's his two core issues here are both sort of deeply unpopular. One, that's trade policy, and one is immigration. Sticking with trade for a moment, the president needs to make the case why these tariffs are good, and there's going to be a lot of uncertainty. I think it's actually underplayed how much uncertainty going forward is going to happen with these tariffs. The new 15% tariff under Section 122 of the 1974 Trade Act. I'm not sure that's actually legal. There'll be litigation there. If the president tries to renew it after 150 days, that could be more litigation. So I think the president needs to sort of refocus the American public to the extent he can why his core economic policy actually makes sense.
We've seen risk off in the markets here, Tom, and I realize I'm saying that even as we're actually off the lows in U.S. stock futures this morning. We're seeing Bitcoin start to move back off the lows after dipping below 65,000 yesterday. But in general, is it still safe to say that we're past peak tariff talk?
I mean, you can say it. There's no question that this is nothing like last April. So we're in a new era right now where in 2026, I think the tariff talk is just doesn't move the market as much as it used to. I think people just kind of suck it up and just take it as it's kind of just normal chatter right now. So as a trader, I don't pay any attention to the tariff talk. I pay more attention to, what happens in individual equities and what happens, in different commodities and things like that, like gold and silver, and to a certain extent, Bitcoin and things along that line. I don't think the market right now, given where volatility is and given the way every single sell-off has been met with buying, and you saw the same thing last night in the overnight session. At one point, we were down over 50 handles, and now it's down, just about 15 handles. I think that there's been buying met at just about every level. So it seems more like just like two-sided nothing more than it is markets concerned about anything.
Okay, Stephanie, I want to give you last word here. We didn't even touch on OpenAI, which is curtailing, if you want to call it that, its spending levels and expected to burn through more cash through the end of the decade than previously anticipated.
I mean, it's not really a surprise. There's all kinds of numbers being thrown out there. It's whether or not this company can eventually see a return on their investments. That's what everybody's waiting for. So,
okay,
stay tuned.
All right. Thank you to our panel. Squawk Box starts now.
Good morning. A powerful blizzard slamming the Northeast. Tens of millions under warnings and hundreds of thousands without power. Meanwhile, the U.S. Is set to halt tariff collections that were ruled illegal by the Supreme Court. President Trump responding with some new types of levies. And the U.S., as the U.S. positions warships in the Middle East, the president is said to be weighing a larger attack on Iran if diplomacy or an initial strike doesn't force the regime's hand on its nuclear program. It's Monday, February 23rd, 2026. Squawk Box begins right now.
Good morning and welcome to Squawk Box right here on CNBC. We are live at the NASDAQ market site in Times Square on a very snowy Monday morning. We'll talk about the blizzard in just a second. I'm Andrew Ross Sorkin along with Joe Carney. Becky is off. Take a look at U.S. equity futures at this hour. This is the Monday after we got that tariff decision. A lot of folks over the weekend trying to figure out what to do and what comes next. The Dow off about 116 points right about now. The NASDAQ off about 92 points. The S&P 500 off about 15 points right now. Take a look at treasuries as well. You're looking right now at the 10-year note at 4, call it just 4 flat, 4.07. You're looking at the two-year note at 3.47. Why not take a look at crypto right now? Look at the crypto prices right now. Bitcoin sitting just at about $66,000. And that price, we should mention, fell below the $65,000 level overnight. It's briefly tipped back up since then, but clearly pressure in the crypto world as well, amid some additional questions about what's going to happen in Iran potentially this week. So a lot on tap, and then the State of the Union.
Well, the market, obviously, the tariff news was out on Friday already, and the Dow closed up 230 points. NASDAQ closed up 203. So initially, I think there was some trepidation, but by the end of the session, it was up. So it's down a little bit today. I don't know if it has anything to do with tariffs. People don't. Do you want tariffs or you not want tariffs? Depends on.
I just think we're now into a different land of uncertainty.
On Friday, though, we're not responding to the tariffs. We responded to the tariffs because it was early in the morning.
I think there's a lot of people who are still trying to figure out.
It's 100 points. It doesn't matter anyway, right? It's like 0.2%.
I can tell you that a number of CEOs that I spoke to have set up war rooms all over the weekend trying to figure out, are they going to seek refunds? Are they not going to seek refunds? Are they going to move supply chains? Are they not going to move supply chains? There's a whole bunch of things that are going on. And by the way, a number of hedge fund managers and professional investors who've been trying to sort this out all weekend. So while I recognize that there was an immediate reaction, I don't know if this is a reaction to the tariffs or not. I think the tariffs are clearly in play here.
I wasn't talking to CEOs. I was actually watching a hockey game. So, a coastal winter storm slamming the Northeast. More than 40 million Americans under blizzard warnings. 200,000 plus power outages reported. New York City has already seen close to a foot of snow at the southern tip of Manhattan. A lot more I'm hearing from, I wasn't there, but out in the burbs, there are some serious totals as far as snow. More than a foot, maybe 2 feet. Mayor Zoran Mamdani announcing a travel ban, closing schools for a snow day for the first time since 2019. East Coast airports virtually closed. And according to FlightAware, New York's LaGuardia Airport has canceled 98% of its flights. Boston's Logan Airport, 92%. New Yorkers were hoping for some quick melting because that's what we finally got from the last storm. It was finally starting to go. It was very mushy, but we may be in luck. The temperature is forecast to be above freezing for the next several days, including 40 degrees on Wednesday. Meanwhile, the price of natural gas jumping this morning. We'll get a live report on the storm later in the hour.
And now to the story of the day, the tariff story. U.S. Customs and Border Protection saying it's going to stop collecting tariffs imposed under the International Emergency Economic Powers Act. It's going to start at 12:01 Eastern Time tomorrow. Now, on Friday, the Supreme Court ruled that President Trump's tariffs imposed under that so-called IEEPA law were illegal. The president said he would impose a 10% global tariff, which he then upped to a 15% rate a day later. U.S. Representative Jameson Greer, a trade representative, commenting on how the administration intends to keep its tariff regime in place despite the court ruling.
There's a 15% tariff now. It's roughly equivalent to the types of tariffs that we had in place under IEEPA. As this tool expires, I'm going to be conducting Section 301 investigations. The Commerce Department has existing tariffs under Section 232. A lot of tariffs are still in place. The reality is we want to maintain the policy we have as much continuity as possible, make sure that business understands this is the direction we've been going. We're going to continue going this way.
It's unclear when or if American companies would be refunded tariffs they've already paid. Treasury Secretary Scott Bessent was asked about that yesterday, but didn't directly answer.
That's bad framing because the Supreme Court didn't even address that. The Supreme Court remanded it down to a lower court, and we will follow what they say, but that could be weeks or months when we hear them. So the Supreme Court did not address refunds.
Following Friday's ruling, the president said on Truth Social he was ashamed of certain members of the Supreme Court. He praised Justice Thomas and Alito and Kavanaugh, but then criticized by name two others he appointed, Barrett and Gorsuch, and effectively at one point said that that he was ashamed of them and their family should be ashamed, and really
Should be interesting.
went after them.
Are they sitting in the front row as they do? Who's going and who's not?
They will. He said that they were, quote, hardly invited to the State of the Union.
That went the wrong way.
And somebody asked, would they be welcome there? And he said they're hardly invited anyway, basically. And honestly, I don't care if they come or not. But I would say, I mean, on that front, we don't even just talk about.
Do you remember what was it, Obama or Biden, where he was saying something and Alito was going to say, no, that's not
Right,
true.
no. And by the
which
way,
one was it? Do you remember?
I believe you're talking about Obama, but
Was it Obama?
there has been times where the President of the United States has been critical of the Supreme Court before. I don't
Right.
think we've ever been so critical on a
Well, there's
personal
never been a person like
basis.
Trump, obviously.
In this way, and I do think the decorum of the court is one of the sort of last bastions, I hope, of what's left.
Andrew, the court on the left had an approval rating of 10%.
It's okay.
And they want to put 15 people on the Supreme Court anyway. So if the left suddenly is holding up the Supreme Court as someone that they admire and they don't like that the president is disparaging them, they already hate the Supreme Court. So that's false.
But I don't think it has to be considered in that political context.
Okay.
I think the bigger question
that's what we're doing is talking about it, about Trump again.
The bigger issue right now is going to be the refunds. So
Right.
all of these big companies
And how it
thinking
happened.
about how now you have a short window, by the way. There's a formula to when you actually have to even put in for a refund, first of all, and two, whether a company that raised prices will quote unquote have standing, whether you're effectively going to have to show losses. And that's going to be a very interesting question mark. And clearly, I think the comments that Bessent had made on Friday at the Economic Council in Dallas suggested he doesn't think that companies are going to get anything back, and the American public may not get anything back.
I heard that they were saying that
the way he described it.
I heard someone saying that do countries get tariffs back? And here all along we've been told the countries don't pay any of the tariffs. So what does that mean?
Well, I don't know what that part means, but
They were talking about are countries owed things for tariffs that they have paid? I guess if they raise prices on their exports, then
well, I don't know if it's the country that would get the money back. I think it would be the company. I mean,
Well,
companies like
this was
Toyota,
country that they were talking about.
companies like, well, here's the bigger issue though.
Yeah.
The bigger issue is, if you're Japan, for example, or Indonesia, or Malaysia, or name a country, South Korea, that committed to the President of the United States that they were going to make a massive investment in the United States.
Because they were coerced.
Based on the back of this idea.
No, I heard him say that we expect all these countries that did these trade deals to follow through on it regardless.
Now, most of these deals, even though they were touted by the administration and
they're
the
not totally
headlines,
done.
so many of them are not done to begin with because they require authorization, oftentimes, by a whole other legislative branch in the foreign country.
In a foreign country.
And if you read through some of the press, in the international press over the weekend, in some of these countries, I mean, the idea that some of these countries are going to pursue and follow through with those commitments seems very hard to believe, because the citizenry is looking at this saying, I don't understand. You negotiated with these people based on this assumption. Their own courts are saying this is illegal. How is this even happening?
I would think that everybody that doesn't like tariffs would be excited, but obviously they're not going away. I don't know how they're going to be back, or whether they'll be back, how long they can be back, but it's 150 days,
Well,
right?
it seems, you know...
Isn't it 150 days?
It's 150 days, so you get through the summer.
Right.
By the way, it's now a blanket situation.
Wouldn't
so
Congress have to do something?
Well, no. Here's what's going to happen.
They'd have to okay it to go
over the
past
next 150 days, this 15% will be here, which is basically roughly in line with where it is. But by the way, countries like Britain, which were at a lower rate, are now going to be paying a higher rate after they made all these deals. So all of these deals have been completely gone back on just by default of this situation and the ruling. So then you're going to have Jamison Greer go on an individual basis, and if he's look, you can actually implement tariffs legally, I believe, if you do investigations and you can argue that this is not fair and this one on a specific either company by company, industry by industry, or country basis for certain things. And so likely what they're going to do is try to do that and run that clock for the next, call it 2.5 years. But that makes it very difficult if you're an American company or an international company to decide where you actually are going to put your supply chain, because what's going to happen at the end of this period, and how different is it going to be for the next couple of years? I think it could actually really stymie investment. That is the fundamental question.
Well, thank you for that, because I was wondering what it was. Anyway, if Canada had become the 51st state, they would have brought home the gold yesterday. That's not going to happen, though. For the first time since the Miracle on Ice 46 years ago, the U.S. winning gold in men's hockey. The U.S. faced Canada in the finals. The game went into overtime after being tied at 1-1 at the end of regulation, and Jack Hughes scored the winning goal. Not only did he score the winning goal, he made this move to get it, or it really looked like Canada was ready to score. Kind of stole it, passed it down to his teammate, and then he's the same guy who went up to the left, and it was mind-boggling. And then the goalie, Connor Hellebuck, had 41 saves and 2 giant saves in the period. You've seen everything on social media, and there's a shot from above. Have you seen the shot from above?
I did.
It looks, I think Sweden, when they won a gold medal, they had a stamp, I think it was 1994, of a similar shot from above on a save from the goalie. And there's so many iconic shots from this yesterday. Earlier, there was a 4-minute power play. I think that was one where a high stick got Jack Hughes in the mouth. You know, that's when he lost his teeth, Sorkin. His teeth weren't gone. They weren't gone until yesterday in the first or second period. And it was like a 4-minute power play that the U.S. did not score. And it was wild, because then we had a power play, and then during the power play, there was one of our guys, I think it was Jack Hughes, wasn't it? I think Jack Hughes.
What did you make? I know this is taking it away from the sport itself, which is an amazing thing for our team. The Cash Patel imagery.
So
partying in
I was
the
thinking
back with the team.
I was thinking I was just the FBI.
On the same day that there was a shooting in Mar-a-Lago, as this Savannah Guthrie
I didn't think of it that way. It didn't even occur to me. I was wishing I was him.
You were wishing you were Kash Patel at the
Yes.
Olympics.
Yes, in the locker room with those guys drinking beer.
Did you think it was appropriate
I didn't
for
think
the
about it.
FBI to be there?
Didn't even think. No, didn't even. That
On
didn't
behalf
even
of the
occur to me.
American public?
Didn't occur to me.
Didn't occur to you?
Didn't occur to me.
Did it
Not
occur to
even
you
for one iota.
that the taxpayers paid for him to go
You
party
know,
at the Olympics?
As a human being, it didn't even occur to me. I was just too ecstatic, and I was happy for him. I liked all the shots. Coming up, the markets reacting to President Trump, but I was watching the game. I was excited about it. President Trump raising global tariffs to 15% following the Supreme Court's decision. What this could mean for key sectors like tech and retail. We'll get into that. Plus, what to expect from earnings this week. NVIDIA, the big name set to report Thursday. More Squawk Box after a break.
Welcome back to Squawk Box on this blizzardy day here in New York on this Monday morning. Got some corporate news to tell you about. Shares of Novo Nordisk, they are down sharply this morning. The company saying its next generation weight loss drug, which is called Carglumic, didn't achieve its primary target when compared to Eli Lilly's rival drug, tirzepatide. This is after 84 weeks. Novo exploring additional trials to test that drug, including higher dose combinations. So we're going to keep our eyes on that. Eli Lilly shares right now. You can take a look up on the back of that news, given that they may have the better performer right now. Take a look at the futures as we talk about the markets right now. Dow up about, or I should say off about 91 points. The NASDAQ off about 82 points. The S&P 500 off about 11.5 points. Joining us right now is Brian Levitt. He is Invesco's Chief Global Market Strategist. Good morning to you. Thanks for joining us. Brian, thoughts about the markets, but maybe thoughts about the implications of the tariff piece of this on the markets as we were trying to sort of wrestle with where this all heads and what it all means.
I don't think the Supreme Court announcement was a significant surprise. That was, in essence, where we thought we were heading on it. What becomes now, and you mentioned it in the first minutes, Andrew, is the uncertainty now on where we go and what that potentially means for business investment. But remember, we were down 20% on Liberation Day, peak to trough, and ended up in a positive year, so a significantly positive year. So for markets, it's the uncertainty creates some volatility, but ultimately, it'll get back down to fundamentals, and businesses will figure this out.
And when you say it gets so zero impact, a lift to the market. I mean, look, there's an argument to be made that if you think that tariffs aren't going to be here long term, or they're going to be at lower rates long term, that could actually be a benefit potentially to the markets. But there's other people on the other side that say the tariffs were a good thing for the country.
I would view it as a positive for the markets. I mean, the reality, if you think about tariffs in the short term, they'll create a less optimal outcome. Now, there might be a reason for them. There's always going to be a cost, but there might be a reason for them. So when you think about it from a growth and inflation perspective, you'll end up with a less optimal outcome if you move away from free trade. Over the intermediate to longer term, that's a debate that was left to be played out depending on what type of investment we saw in the country and what type of return of jobs we may have seen in the country. But yeah, I would view it as a positive. Anytime look, we still have a very high effective tariff rate compared to history, but if we start to see that move lower, that should be beneficial for prices, that should be beneficial for growth.
As you look ahead just for the week in terms of where we really are in the markets, we've had some earnings reports. Where are we? And what are you doing with your money?
Well, I think we're still very much in the same business cycle. You're not seeing, the cracks in the public credit market that you would expect. You don't see a Fed that needs to raise rates. So the cycle continues. In fact, what you have been seeing is leading into the indicators of the economy actually picking up in most places, not just the United States, Europe, UK, most of the emerging markets. So that's a positive. That's been guiding this this rotation trade where you're seeing smaller caps, where you're seeing value stocks perform well. What you've also seen now, everybody was so worried about the AI trade, you've seen valuations on a lot of tech companies, very high quality tech companies, come down. So I think we're in a good spot. We continue to be bullish on risk assets. I like the idea of diversifying, moving into mid-cap, moving into some value, also moving into non-US as the dollar weakens here.
Okay. Brian, it's nice to see you this morning. Hope you stay warm here on the East Coast, Northeast. It's not as bad as I thought it was going to be here in the city, but it may be bad where you are. I don't know. We'll talk to you soon. Thanks.
Coming up, President Trump as a warning for Netflix. More on this new drama. That's next. My time now for the Executive Edge. President Trump calling on Netflix to fire a board member and former Biden administration official Susan Rice. In a post on Truth Social, the president said Netflix should get rid of Rice or, in his words, pay the consequences. During a podcast last week, Rice said that things wouldn't end well for companies, news organizations, and law firms that caved to President Trump's demands in his second term. She added that when Democrats regained power in Washington, she didn't think that they would forgive companies. And Netflix spokesperson declined to comment on the president's remarks, but Ted Sarandos basically brushed them off. He's over in London, said that President Trump likes to do a lot of things on social media, but this is a business matter and not a political matter. That must have thrown a chill into you a little bit when she said some of those things, because we don't, maybe it started in one administration, another administration does the same thing, then the next one goes back and says, we're going to get you for what you did, but since we don't like anyone to do it, I know that as an objective person, you don't think it's a good thing for her to be saying that there will be hell to pay for these companies.
I think it's terrible. I think it's terrible.
I mean, I got a little bit scared.
I don't think it's good for her to say. I think it's actually a very bad thing for her to say.
Very good. That's all I wondered, because I know how you take a stand on this.
No. I think it's bad for her to say.
Okay.
And I also hope that if, in fact, this transaction ultimately gets in front of the Department of Justice, that the president doesn't have retribution
immediately thought
against Rice.
On Twitter. People are saying, are you crazy? In the middle of all this, you're saying this stuff as if it could come back to haunt Netflix that a board member was saying those things when it's trying to do this acquisition.
You're saying that about the president?
No, I'm saying that everywhere I saw that people immediately were jumping to the conclusion that it was a very bad move because it could cause problems with the administration in allowing the deal to go through.
There's two issues. I disagree with what she said, and I think on the merits of what she said, she should not be saying those things.
I understand it shouldn't have anything to do with the.
But I also
that's what
think
Sarandos just said.
If she so chose to say those things, that should not impact whether this transaction is approved or not.
Exactly. That's why I just read that Sarandos said.
No, I'm sure that's what Sarandos said, but Sarandos was saying that, I believe, in part, to try to tamp down the potential that the president would try to block the deal.
Because already there's musings that he's always liked the Ellison.
The Ellison's better,
and he's just been saying, I'm not going to do anything about it, but people didn't really, we'll see. But it got pretty interesting with it. But that...
What's that?
Well, it just is... I mean, do 77 million people that voted for Trump have to worry?
About which part?
Susan Rice said there are... she's never gotten a vote by anybody. She's never been elected to anything. Anybody that has, taken up with this bad orange man it could go to, it sounded really strange. You talk about fascism.
No. Well, I'm not so sure about that either.
Orwell.
No, I think there's
what was she saying?
Take it out of Susan Rice's mouth and put it in Jamie Dimon's mouth. One of the things that Jamie has said repeatedly is this idea that he fears that companies that make specific kinds of deals with this administration that potentially could look like some form of corruption or bribery or something else will be prosecuted by the next administration. Now, I think that unto itself is a uniquely interesting thing. But the point
did it really come out that JP Morgan debanked? Did that all come out? Didn't the New York Times report on that? Did that happen? Because I was seeing that on social media too.
Well, look, the president is suing JP Morgan over what he argues is being debanked. Now, the reason that JP Morgan would tell you that he was debanked or his family was debanked or whatever it was related to January 6th because of the regulations that the government has in place that actually forces the banks, this is the argument JP Morgan would make, to debank certain people who could create genuine risk to the bank. That is the argument. And if you looked at January 6th at that time, that's what was taking place.
So they did debank.
And one of the things that Jamie Dimon has said, I think for the last decade or more, is that the rules should be changed. He's been arguing about some of these debanking rules, but these rules come from a combination of the Federal Reserve and from the Treasury.
Do I have to worry about being debanked now? Will Susan Rice debank me because I've...
Susan Rice doesn't work at a bank.
That you're sure I don't... There's nothing for me to worry about?
I mean, you got to worry I'm going to debank you. Coming up, attention...
I'm going to buy you that watch.
Attention TSA, you see your bribery. You're trying to bribe me so I don't debank you.
The fight watch, because that's all you like to do with me is fight.
Attention TSA pre-check users, the government says you're still going to be able to get through lines faster despite the partial government shutdown. We will explain for those of you who even make it to an airport and where planes are even taking off. We're coming right back. Welcome back to Squawk Box. We have 5 things to know ahead of the opening bell this Monday morning. U.S. Customs says it's going to stop collecting President Trump's reciprocal tariffs early this morning, and the Supreme Court ruled that those tariffs are illegal. In response, the president now says he's going to impose a 15% global tax, and he can do that for the next 150 days before having to look for other ways to implement tariffs. Meantime, the TSA says that pre-check airport screening lanes are operational in the United States. That's a change after the Department of Homeland Security had said early yesterday that faster security checkpoints were paused amid the ongoing partial government shutdown. And Axios is reporting that Defense Secretary Pete Hegseth will meet with Anthropic CEO Dario Amodei at the Pentagon tomorrow. Sources telling Axios that meeting likely to focus on the terms for the military's use of Anthropic's Claude AI, saying it will likely not be a friendly sit-down. And Goldman Sachs raising its end-of-year projections for the price of Brent crude and WTI by $6 a barrel in the fourth quarter of this year. The bank sees Brent at $60 and WTI at $56, but the forecast assumes no supply disruptions related to Iran, and dark comedy, one battle after another, taking high honors at Great Britain's top movie awards. It won for Best Film and Best Director. The BAFTAs are seen as a good indicator of what could happen at the Academy Awards next month. I want to say this meeting with Dario and Pete Hegseth is a super important meeting because the Pentagon is currently using Claude AI. And one of the things that's so interesting about Anthropic, which is different than OpenAI and some of the other models, Joe, is just this idea that they wanted to preserve certain rights over how their models are used, that even though they have a contract with the Pentagon, they can't be used in certain ways. If, in fact, they continue down the path of trying to either create a board or some kind of model, which I assume Pete Hegseth is going to say, hey, if it's legal, if you're contracting us, we can do whatever we want. It'd be very interesting to see whether the Pentagon's going to threaten to either break that deal with Claude. Right. Interestingly, Claude is the best model currently out there. So if you wanted the government to have access to the best model, that's the one.
Across the board, not just for certain things?
I think for what the Pentagon is trying to do right now.
Oh, for the Pentagon.
And probably even more broadly in this moment.
I'm looking for a new
lot of this is going to change.
I'm looking for a new chatbot.
Look,
again.
It may be that Gemini or OpenAI becomes better in the next month or two, and they are going to keep going back and forth, back and forth. But it also means that maybe they'd be able to break their contracts. Also, interestingly, Claude is used in Microsoft. So for example, Microsoft is now using it in a certain way. I mean, it could break the whole sort of ecosystem. By the way, Microsoft has a contract with the Pentagon too. Other tech companies. So the role that Anthropic plays in this is going to be super important in terms of how this technology ultimately gets used. It's going to be very interesting to see what happens after all this.
Well, I would talk to you about that because I need a new chatbot for a lot of reasons. I'm back to thinking it's total gigo. And I'm also back to thinking it's pretty, like ChatGPT is pretty woke. I mean, I won't get into it. It's too political to get into something. But there are answers. And then
I don't know how you're using this. Some of this stuff is amazing.
But some of it is not. And it's not intelligence. It's like the simplest, having to make the simplest leap to what I'm talking about, they can't do.
Joe, it's very hard to understand the leap you're making even as a human. So if you're the AI, you're going to be struggling.
I know,
by default.
Not for every human.
Oh, I know that you have a very special type of intelligence. A very special type of intelligence that's very difficult.
And I was going to talk about the BAFTA thing, because it truly if someone described to you what that movie was about, you'd say, oh my God, what a mess. But if you watch it, I'm talking about one battle after another, neither side is to be taken seriously at all. And it's funny. It's a dark comedy, and Leo's pretty good.
It is well. I think he may get the Oscar out of this whole thing.
He might. Coming up, the Trump administration's next move on tariffs following the Supreme Court ruling. We're going to speak with a former Commerce Department official who served during President Trump's first term. Let's Squawk Box comes right back. If you... President Trump announcing a global 15% tariff following the Supreme Court's decision to strike down his reciprocal tariffs. Joining us now, Nazak Nektar, who served as Commerce Assistant Secretary in the first Trump administration. She's now a partner at Wiley Law Firm's International Trade Practice, serves as chair of the firm's National Security Practice. It is always great to see you. Good morning, Nazak.
Good morning, great to be with you.
Can you do anything other than try to guesstimate the outcome that we're looking at here in terms of what we do now and what the administration does, which tariffs it employs from here on out?
Yeah, I mean, it's a great point. I think everybody is looking at this guessing game. Obviously, we saw the president's frustration on Friday, but many of us also predicted, based on the oral arguments in November, the way that the justices were asking questions, the fact that they were focused on the text predominantly and less so on the foreign powers of the president, really led a lot of trade lawyers like myself to think that the IEEPA tariffs are going to be overruled. Anyway, the president's very upset. He does have, I do want to stress, he does have a lot of flexible legal authority. He's already imposed Section 122 balance of payments tariffs on the world. He has additional options. We've seen he already has Section 301 tariffs. Those are retaliatory tariffs against China that we imposed in the first administration. Section 232 tariffs, national security, steel, aluminum, autos, more coming, lumber, copper, more coming, and then Section 338. It's a dormant authority from the 1930s. The Tariff Act of the 1930s, but it allows the president to impose tariffs up to 50% for discriminatory behavior against the United States. All of that to say, he does have a lot of power still to impose tariffs.
What's going to happen with, I know Justice Kavanaugh termed it, I think, a mess in terms of sorting out the refunds and how that will work. The lower courts are going to have to do it. If the lower courts don't do something amenable to the administration, doesn't it just moves once again up the court system? So nothing's going to happen for how long in terms of refunds?
I mean, importers are going to have to wait for a while. The court has to render a ruling about the disposition of the tariffs and the repayment, and then the administration has to set up a process. I mean, tariff refunds are part of what the government does in terms of trade disputes, right? Litigants can litigate tariff levels. The government sometimes often corrects it, and litigants get the tariff guys. This order of magnitude is unprecedented. So if the Court of International Trade, the court in New York, the lower court, quickly issues an opinion on how this should happen, the government still has to set up a process in the order of magnitude that it's never seen before. That said, importers are now going to be petitioning for tariff refunds and then on the other hand, paying these new Section 122 tariffs, and then looking ahead to see what other tariffs are they going to have to grapple with. It will be a little bit messy, but the president is trying to accomplish a lot of things really focused on the massive $3.8 trillion debt the United States is in, and he's going to keep pulling levers to figure out what ultimately works.
Zach, would you think that countries will be emboldened at this point to I guess you can't use that word anymore, but to back out on some of the trade deals that they've been coerced to enter into because of tariffs, or do they know another one's coming if they raise the ire of someone like President Trump?
Yeah, in speaking with countries, a lot of countries didn't think about the IEEPA's reversal, so they hadn't built in sort of an escape clause in their agreements. At the same time, the key negotiating leverage that the president has with these major trading partners, and we're talking about Europe, Japan, South Korea, India, those are really the Section 232 tariffs. Taiwan also, the new trade agreement. The 232 tariffs that are already in place for South Korea, Japan, Europe, and India, and then for Taiwan in particular, the forthcoming Section 232, in particular semiconductors. So the legal authority that the president so far seems to be rock solid on, those are the basis of the core basis of the negotiations. So the countries, I don't think any of them will try to back out.
Now, Zach, one of the things that I heard over the weekend from number in the folks in the political class is that to the extent that some of these foreign countries would want to renegotiate these deals, that there's a different form of leverage that the United States has. So, for example, Taiwan, which obviously needs us for its defense and all sorts of other things, that you're all of a sudden potentially from a leverage perspective, you might hear in the discussion sort of the role that the United States plays in defending some of these countries to try to prevent them from undoing some of these deals.
You're absolutely right. When the U.S. government handles these negotiations, certainly tariffs is part of the mix, but there's a lot of other components that are not part of the mix in terms of investments in the United States. Tariffs, there are foreign military sales. We have lots of tech side agreements. So there's a lot that goes into the mix. Pressure from the U.S. government still to open up their borders to U.S. goods. So tariffs are one leverage, but as you pointed out, we have a lot of other points of leverage to get concessions.
Zach, thank you. We appreciate your time this morning. Thanks.
Great to be with you.
Okay, when we come back, a live report on this monster winter storm that is pounding the Northeast. We're here in Times Square, and as of about 4:45 a.m., the South Bronx has already been hit with 15 inches. You can see a winter wonderland right here in Times Square. My feet, by the way, were wet trudging through some of that snow this morning. I used a hairdryer to get them warm and nice.
I could barely tell which way I walked out of the hotel. I got confused where the hell I was. It was a blizzard in a whiteout.
It is a blizzard.
I got to 46th Street before I realized I was heading north.
Squawk Box coming right back after this. Welcome back to Squawk Box. New York and other parts of the East Coast blanketed by a blizzard this morning. For the latest, want to bring in AccuWeather meteorologist Bernie Grano. Bernie, it's great to see you this morning. Help us. We were all trudging through the snow trying to get to the studio this morning.
Well, I'm glad you made it to the studio. Don't even try to go at the airport. Nothing's flying out anywhere across the Northeast. Boston, Logan International, even in Dulles, they had 3 inches of snow. All flights are canceled. LaGuardia, Newark, JFK, Philadelphia International. Even in Pittsburgh, well west of the storm, there's some flight delays right now. Over 5,000 flights canceled right now, and there's going to be a ripple effect in the aviation industry across the rest of the United States here today. So there's going to be delays. Even tomorrow, we're projecting about 2,500 cancellations. Power's now beginning a problem as the winds continue to howl over 50 miles per hour. Look at all the power outages in New Jersey now starting to ramp up in Massachusetts and New York, most of that being across Long Island. Here's our bomb cyclone. It deepened right now about 32 millibars in 24 hours. A bomb cyclone is a storm that deepens 24 millibars in 24 hours. So this is quite a storm here. Back edge of the heavier snow now in toward New York City. The snow beginning to fall apart around Philadelphia, anywhere from a foot in the city, but north and eastern suburbs, 15, 16 inches of snow. We've had thunder snow during the overnight hours in Ocean City, New Jersey. Of course, we had the lightning strike that hit the Empire State Building after midnight last night. There's the back edge of the snow. Not a whole lot of additional accumulation around Philadelphia, but a heavy band of snow west of New York City in eastern New Jersey is putting down 2 to 3 inches of snow. The height of the storm now, though, is central and eastern Long Island to southeastern Massachusetts. Ready for a stat? We're getting 3-inch snowfall reports every hour now within this band of snow. And earlier, we had thunder and lightning just south of the Boston area. So the height of the storm, central and eastern Long Island, toward Boston, toward Providence, where wind gusts are up over 50 miles per hour. This is where the true blizzard is right now. Everything will start ending in Philadelphia. It'll end by noon, early afternoon in New York City, still get a few more inches. The park ends up with around a foot, but many of the surrounding suburbs, 17, 18 inches of snow. And then the snow starts to end not until this evening in the Boston area, where the true blizzard will continue throughout the afternoon hours. There's the snowfall map. All of New Jersey, for the most part, over a foot of snow, except the northwestern part of the state. And then look, there it is. There's the over easily 1 to 2 feet of snow, coastal New Jersey, Long Island, and southeastern New England.
Hey, Bernie, just in terms of the airports, because I know a lot of our viewers are road warriors. I was supposed to be on a flight tomorrow that's already been canceled. In terms of getting all those planes repositioned and back on the ground and then taking off, obviously, yeah. JFK is a huge international airport. There's a lot of folks who either stopping through New York flights and others. When do you think this all gets back to some sense of normal? Is it Wednesday? Is it Thursday?
I think it's Wednesday, and anybody that flies a lot, you know where your flight's taking off, it's coming from another location, and a lot of these airlines make sure they get all of the airplanes out of here. So by the time you get everything back, I think it's Wednesday. We're projecting tomorrow here at AccuWeather that there's still going to be about 2,500 flight cancellations tomorrow. I think it's Wednesday, unfortunately.
Okay, Bernie, thank you for that. Appreciate it. Stay warm.
Coming up, what the Supreme Court ruling against President Trump's tariffs could mean for drug companies. Former FDA Commissioner Dr. Scott Gottlieb is going to join us when Squawk Box comes right back. It's 7 a.m. Just about 30 seconds it will be. On the East Coast, you're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. And Becky is off this morning. Among our top stories, a coastal winter storm slamming the Northeast. More than 40 million Americans are under blizzard warnings. East Coast airports virtually closed at this point. Meanwhile, the U.S. and Iran are set to meet in Switzerland on Thursday for a third round of nuclear negotiations. The U.S. has been positioning military assets in the Middle East. And we were talking about this, J.P. Morgan acknowledging for the first time that it did close President Trump's bank accounts following the attack on the U.S. Capitol by the president's supporters on January 6, 2021. That news coming in a legal filing in Trump's court case against J.P. Morgan and its leader, Jamie Dimon, the president suing the bank for $5 billion.
Meantime, Wall Street trying to assess the potential economic impact of the tariffs that are going away and the tariffs that are maybe staying and on the way. Senior economics reporter Steve Leisman joins us with the latest. What are you hearing, Steve?
Well, it was an interesting weekend talking to lawyers and trade experts and economists, but with the end of emergency tariffs, with the beginning of a series of new ones, economists expect pretty much somewhat less inflation and a reduced hit to growth this year, but the impact will still be there. There will be greater uncertainty as we wait for how the administration ultimately fashions a new set of import tax measures. Erica York from the Tax Foundation, she wrote this weekend, the Supreme Court ruling was welcome news, but the economic pain is far from over. The Trump tariffs amounted to an average tax increase per U.S. household of $1,000 in 2025. Now with the IEEPA tariffs being ruled illegal, the president's remaining new tariffs will result in a household burden of $700 in 2026. Treasury Secretary Scott Bessent late on Friday said the administration plans to raise as much revenue through new tariffs as it did with old tariffs, but most think the effort will not quite succeed. Goldman saying the effective tariff rate will fall to 9% from 10%, saying 60 to 70% of the tariff prices have already been passed through the consumer, raising core inflation by about 0.7%. But economists don't think Goldman doesn't think there's much more left to pass through. Economists also don't see prices rolling back. Barclays writing over the weekend, quote, "We doubt that businesses which recently raised their prices due to tariffs will lower them back. They would likely wait for more clarity on the future tariff rates." And it's the lack of clarity that may take the biggest economic toll. Businesses now brace for a renewed period of uncertainty over what tariffs will be in place, over what time, along with, of course, potential legal challenges to these new authorities. Separately, NEC Director Kevin Hassett has publicly apologized for comments made on CNBC last week where he called for New York Fed researchers to be disciplined after they found 90% of the tariffs were paid by U.S. consumers and businesses. Hassett, writing to Larry Kotlikoff, an economist, he wrote, "I regret suggesting the office should be disciplined for their research. Indeed, I retract that suggestion. The authors of this study are all excellent economists. We differ strongly on this particular paper, but I did not mean to impugn their excellent reputations and regret my choice of words." As for the Fed, it's hard to imagine them doing anything but taking the administration at their word that they intend to replace the tariffs one for one. So the policy outlook unlikely to change when it comes to interest rates. And Andrew, this could be another round of legal challenges here because this Section 122, as you know, that calls for the use of declaring a balance of payments problem or crisis is something that's being disputed by a lot of people I'm talking to.
Look, even Neil Katyal, who we're going to talk to later, who was the lawyer who argued this case in front of the Supreme Court and won, meaning just this tariff case we're talking about. We're going to see him on our broadcast a little bit later. He made the point that the Department of Justice, in its own argument, effectively says that Section 122 might not be a path to doing what they're doing. So I think this is going to raise some really interesting questions. The biggie that I've been talking about all morning, Steve, that I wonder where you land on is not so much about the refunds or what companies ultimately do, or at least do in the short term, which is probably not much as they wait for all this to play out, is what countries that made large commitments to invest in the United States ultimately do. given that so many of them remain unfulfilled, and in so many cases, actually not just remain unfulfilled, but remain unapproved by their own legislatures in various countries around the world.
Well, I think that's another piece of the uncertainty, Andrew. I'm going to go back to the drawing board, perhaps, on some of these negotiations. I understand that Europe is going to vote this morning to just stop the negotiations or the approval of the European-U.S. trade pact. I think it changes the essentially the negotiation and the leverage of the president. What's interesting to me, Andrew, is this kind of ties back. The president is saying that there are investors willing to put, or countries willing to put trillions of dollars into the country. Now he goes to go to Section 122, which is just a balance of payment problem. So I talked to people from the Bank for International Settlements last night, or former people from there, and the balance of payments problem is when foreigners are withdrawing their money. You have a run on the currency. You have a surge in interest rates. You have all kinds of problems that we don't have if the president is right and people want to put trillions into the country. So it really all ties together that if these investments are being made as the president claims it, I think some of them are actual and some of them are exaggerated and hyperbole. But if they're being made, it's very hard to make the claim of having a balance of payments problem.
And that's going to be a very, very interesting issue. Having said all of that, you know, the other leverage piece of this, which we've also talked about a little bit this morning, Steve, is not simply using tariffs, though that was sort of the president's favorite cudgel, is going to be the defense issue, which is, you know, you think about Taiwan, or you think about parts of Europe and NATO and the like. There is part of an issue about whether some of these countries, and by the way, some companies, that may not even be seeking refunds, for example, because they are worried about retribution in some other way.
Yeah, I mean, I heard you talk about that. I think all of that is accurate. I think that's part of the negotiation, part of the relationship we have. But we start at another place here, and these Section 122 tariffs, I'm sorry to keep coming back to them, but they have this 150-day limit on them. So now you talk to a person on the other side of the negotiation table that has a different set of leverage, and that leverage is one that is potentially limited. Right. And again, coming back to this 122 thing, I keep talking to people and they say they don't know if Congress does not approve to extend them at the 150-day mark. It's possible the administration could come right back and declare the balance of payments emergency once again. So it could go on potentially forever. So I wish, Andrew, that the administration would figure out, or would incorporate in its policies, the uncertainty that's created for business here. That you want to be able to order stuff from overseas, tell me what the price is, tell me what the tariff is, and I can go about my business. Now I think there's another round of potentially debilitating uncertainty here.
And by the way, just one piece of uncertainty that I think doesn't seem to be on the table is the idea that Congress is not going to, at least this is my impression, but maybe you think politically it's different, that when these 150 days are over, I mean, part of what the Supreme Court effectively said was, Congress, it should be your decision to make, and therefore that Congress would effectively have to approve something after 150 days if you wanted to use, you know, either Section 122 or IEPA or something else. In this context, politically, especially ahead of these midterms, that does not seem to be, you know, tariffs do not seem to be a popular thing in this country.
Right, but the problem becomes again, Andrew, can the administration just declare it again? And by the way, there's a whole bunch of other declarations that are coming or may have already been made in Section 232, Sections 301. They're going to be using a whole range of by the way, Congress has ceded a lot of tariff authority to Congress. It's just what the Supreme Court declared is they couldn't use this particular IEPA tariffs in this case. But there are many, many ways Congress, the administration can implement tariffs. It appears the administration will be using those measures, and we're going to have to sit here and wait for each declaration and how it does it. It looks like they carved out some of the initial exemptions that were in the IEPA tariffs, and those pass over into the Section 122 tariffs. We'll just have to wait and see, and then we'll do more and more of this analysis to try to figure out what the ultimate impact is on inflation and growth, Andrew.
Yeah. I mean, we're still waiting, Steve, and you know, there are a lot of people that think that the axe will eventually fall on inflation and everything else, but I just, debilitating uncertainty will continue. I don't think the administration would use the word debilitating uncertainty for American business. That we just went through an amazing earnings season. The market's at new highs. It just hasn't. Maybe we're waiting for Godot. Maybe it happens, but I just don't feel the debilitating uncertainty that you're saying that companies have felt since Liberation Day. Maybe for the first week there was debilitating uncertainty, and then it all reversed itself. So it'd have to get a lot worse than what it's been up to this point.
I know a number of CEOs who think that they made a big mistake, by the way, already, with some of the supply chain stuff.
Okay.
I'm just
saying that markets at new highs.
I hear what you're saying.
The worst case scenario
from the stock market,
has not come to
from the
not just the stock market, earnings.
Well, that is the stock market, right?
Not necessarily. Well, you just said the debilitating uncertainty for companies. Where are you seeing it in either the stock market or the company's results?
Well, when you talk to people, Joe, who talk about the idea of trying to program their systems, Joe, we've had intraday changes in tariffs. We have had a period of time where the uncertainty about what the cost is going to be of fairly critical inputs. They have had exemptions.
No, I understand,
Joe,
Steve. You know
this
what I'm
is
saying.
Administration.
We'll call up Santelli and get. We'll call up and Santelli. Then it'll be fair. Me, and Santelli against you. How will that be better?
That's we got to move on. Against me. I get that. I'm not good.
We got to Steve. Let's stick with this because
we got to move on to Scott Gottlieb.
We'll get to Gottlieb in a second.
Well, my only point was that it hasn't been debilitating.
This is the biggest story.
And Scott Gottlieb is going to talk about its effect on pharmaceuticals.
I understand that in the whole, but this is the biggest story of the year, possibly of the decade.
You knew it was going to happen.
No, but I'm saying the tariff story, broadly speaking, what this president has done with tariffs has changed the entire global trade landscape.
Well, we did it in his first administration, and then Biden left him on, and now this is additional.
So the thing that I'm still just trying to understand, that I wanted to go back to Steve about, is the question long term. Let's say you get past these 150 days. Let's say you're able to implement other tariffs while this administration is this administration. Do you think, and this is the question I was hearing from CEOs about, which was, yes, their view is that the tariffs of some form will stay here, possibly for the next 2.5 years, but that's different than being here for the next 10 years in terms of making big infrastructure investments and some of the sort of long-term investments that they're going to be making. And my question to Steve is whether you're hearing you do the same thing or how you think that changes the dynamic.
Well, well, first of all, I want to go back to what Joe is saying. It is true that not every company has had debilitating uncertainty. That is true. It is certainly more true for those involved in importing of products and where imports are essential. The president's policies are based on, are in part a revenue issue, right? When they said, we're going to really replace the revenue. They didn't say we're going to replace the reasons for the thing being there. We're going to replace the revenue. There's a revenue component. There's also this component where the president is hoping to bring in manufacturing into the United States. Only a stable tariff regime can result in that kind of investment. And if you might recall, Joe, from the very beginning of this, I said, if the president wants to put tariffs on for that reason, he must go to Congress to create a more stable regime. And it was not a question of whether or not tariffs good, tariffs bad, but you want people to make investment, you got to have stability. So
because the next administration might not care. No, I understand. I understand that.
For the president's own plans.
Right. I mean, that's a perfect world, obviously, you're hoping for, because administrations change and we get whipsawed, businesses get whipsawed back and forth on all kinds of things, and not just trade and tariffs, but regulation and everything else.
This was supposed to be an administration that was going to come in and be very business friendly, and they have been in the sense of this accelerated depreciation and other deregulatory aspects. We've had this issue. We had Scott Lindsay come on. I don't remember if you were there, from the Cato Institute, who showed the graph of if you're trying to follow the law and pay these tariffs, that you must be out of your mind to follow the rules here, because it is so complicated, so complex, so changing every day, And this is antithetical to the administration's own central initiative of deregulation and being pro and business friendly.
Right. It's mercurial. I mean, I've actually, when I've talked to some of the president's biggest supporters, I've said, well, what about this? What about this? What about this? And they always say sort of the same thing. Steve, you know what they say? Joe, that's how he rolls. And I think when they said, "Go, yes, that is true. That's how he rolls." So let me get to Scott Gottlieb.
Okay.
Yeah, but, all right, thanks.
Nice talking to you.
All right, the Supreme Court's decision to strike down President Trump's reciprocal tariffs doesn't end his plans for pharmaceutical industry tariffs. Join us now, former FDA Commissioner Dr. Scott Gottlieb. He's a CNBC contributor, serves on the boards of Illumina, Pfizer, and United Health. You're not so sure, are you? Hasn't the pharmaceutical industry agreed to a lot of what the president wanted, and are future tariffs necessary at this point for where President Trump wanted to go with pharmaceuticals?
Yeah, look, I think you're right. I would be surprised to see tariffs put back on the table with respect to the drug makers, because a lot of the deals that the president struck with the drug makers, those most favored nation deals, the drug pricing deals, specifically excluded tariffs being imposed on those companies. I mean, it's possible that the president could seek to impose tariffs on companies that don't strike those drug pricing deals, but I think the administration got most, if not everything, that they wanted in the context of those deals. And remember, the most impactful piece of those deals is yet to roll out, which is that the big drug makers that struck those agreements with the administration also said that they wouldn't launch drugs at lower prices in Europe relative to the US, and so they're going to launch their future drugs at world prices. And so we have yet to see that roll out. You also saw the companies commit to build manufacturing back here in the US, which was a big pretest of the tariffs from the get-go. The president wanted to reshore manufacturing, and that was also baked into those deals. So I think the administration got a lot of what they wanted in those deals. I would be surprised to see them reach back to tariffs. They specifically excluded the drug companies from the Section 122 tariffs. The Section 232 tariffs are still hanging out there with the Commerce Department. You know, it is possible that they'll seek to impose those on companies that don't strike these drug pricing deals, but for the companies that struck those deals, I wouldn't expect this to be revisited.
Yeah, I mean, you said, so the 232 tariffs are probably, voluntary agreements probably exempted from those, either way, do you think?
Well, exempted from the 122 tariffs, that was in the White House fact sheet. The 232 tariffs address national security issues, and one of the reasons that the president talked about tariffs with respect to the drug makers from the get-go was his concerns about offshore manufacturing, and so they could reach to those 232 tariffs for companies that didn't strike the MFN deals. You know, I would submit, and I've said all along, I don't think tariffs are an effective way to try to reshore manufacturing. Most of the branded companies, to the extent that they manufacture overseas at all, do it in countries like Ireland, which really don't pose a national security risk to the United States. And to the extent that the generic drug makers do source their KPI and their API from the KSM and their API from countries like China, which does pose a national security risk, I think the president's absolutely right. Those are such low margin products that if they impose tariffs on those companies, it's not that they're going to reshore manufacturing. I think they'll get out of those markets entirely, and we will face generic drug shortages. So tariffs are a very inefficient tool, I think, to address what the president's seeking to do, which is reshore manufacturing. I think the MFN deals that he struck with the companies, the drug pricing deals, were much more effective, and you are seeing companies commit billions of dollars to reshore manufacturing here in the U.S.
Did you watch the Olympics?
I did.
Scott? Beautiful mountains in Cortina. You know what looks like that one mountain in Cortina? A Novo Nordisk 5-year stock chart. Maybe we can get one of those up. We are now, I think, below where that stock was when it first introduced Wegovy. And there was more news about there. See, there's where the woman's downhill was, right? Or the men's downhill. Doesn't that look like it? Look at that. That is a mess in terms of shareholders.
Well, look, I think the news today that you referenced really confirms what we've known all along. We've talked about in this show. I think Lilly has a best-in-class drug with respect to tirzepatide. Some people thought CagriSema could, meet that drug's efficacy. I think, I was doubtful, others were doubtful. And also keep in mind, Lilly has another drug behind tirzepatide, retatrutide, which is the so-called triple G, glucagon-like peptide, GLP, and GIP. which may be even more effective if you look at the data that they put out last year in their Triumph trial. That was more effective than tirzepatide. So I think Lilly's going to be in this game for a long time. I think they have a best-in-class portfolio right now, and it certainly looks better in terms of overall efficacy than the Novo compounds.
So there's even more data coming from Eli Lilly that could even make things even tougher for Novo.
Lilly's going to have data from that Triumph trial, their phase 3. They have readouts in 3 separate phase 3s in cardiovascular disease, sleep apnea, and weight loss, probably early to mid this year, and they could be filing this year for an approval next year. So that's their next generation product, the so-called Triple G, which could be better than tirzepatide. They put out data late last year which looked very good. It looked better than tirzepatide in a phase 2 trial. So they have a good portfolio. They've done a good job building out that pipeline. They also have the oral that's going to be coming this year as well. So they do have a good offering for patients who need to lose weight and have secondary risks associated with weight.
Well, Scott, tell us just real quick, because people are talking about this drug like crazy. I see Huberman and others on X and other things talking about how I can't even pronounce it. It starts with the R that you're discussing. How different it is than what Ozempic really is?
It has another compound in it, so it has this glucagon-like peptide in it, so it could be more efficacious. It could also have more potential side effects associated with that. We haven't seen it in the trial data to date. We'll have the phase 3 readout, but assuming the side effect profile is the same or if not better, it is probably going to be, in my view, more efficacious based on the data that we've seen than tirzepatide in terms of overall weight loss.
Okay, Scott.
And you get to keep the muscle, apparently.
You do?
Supposedly. Is that true?
It doesn't have a compound in it that restores muscle. That's another compound that Lilly also has in development, but it certainly shouldn't be any worse with respect to muscle wasting. And a lot of that is associated just with the weight loss. I don't think that that's an independent effect. You get muscle loss with weight loss, and so people need to compensate for that, probably by lifting weights while they're trying to lose weight.
But if people tell me they don't want to drink, they don't want to, I mean, it sounds almost like a psychological drug more than a physiological thing. It removes the craving for everything. Scott, does it?
It does seem like it does appear to work that way. Certainly, you see reports of people drinking less, and there's studies underway looking at these drugs for cessation of alcohol.
Do you want to do anything, or just sit there?
You talk to people on these drugs, and I had the same reaction you did. How could you take this drug and not enjoy a meal? But you talk to people who take these drugs, and they say, look, we enjoy our meals, we just eat less.
Right. It's a genius. It's genius.
Andrew had on his birthday 6 donuts.
No, 4 or 5.
They were the biggest donuts on the planet.
And I would have preferred to take this medicine so I could have 1 or 2 of them.
No. I watched you. You loved every bite.
Sure, but then I didn't love every bite later, and I wish that I hadn't. And therefore, if you could have these drugs and they don't take away the satisfaction of actually eating, which is what I believe they do, it's pretty remarkable.
That's right.
I'm dealing with a little regression to the reversion to the mean myself, and I mean I have to think about maybe with those pills. Can I order them on the TV? Does that work, Scott? Can't you get them on the
QVC?
TV?
You can get them through telehealth.
They say I'll send you these pills. I don't know. Anything you buy off TV, I don't think is
be careful with the compounded products.
All right. Will you write me can you still write prescription?
I can. I'm licensed in New York.
All right. Next time you're in here, we
I can't write for you, Joe. You're not my patient.
There you go.
Thanks, doctor. Coming up, top stocks on the move ahead of the opening bell. We're coming right back.
right, welcome back to Squawk Box. I'm Dominic Chu with your morning movers on this Monday. We're going to start with shares of building product supplier Fortune Brands higher by roughly 4.5% to 5% on a report that activist investor Ed Garden has built a stake in the maker of things like Moen faucets and Master Lock padlocks. Garden is seeking changes, including the replacement of the incoming CEO. That's according to people familiar with the matter, telling the Wall Street Journal. Those shares have struggled, of course, still down about 14% over the course of the past year, despite today's pop. Now, let's turn to the cyber sector, mostly lower following a big tumble on Friday that came after Anthropic unveiled a new security feature into its Claude AI models. The new tool scans databases for security vulnerabilities and suggests targeted software patches for human review. Now, Anthropic said it is available in a limited preview for now. CrowdStrike, which fell 8% on Friday, is down almost 1% today so far. Palo Alto Networks, Cloudflare, SailPoint, Zscaler, and others kind of a little bit mixed in trading so far this morning. And we're going to finish with a check on shares of Deere, lower by just about 1% right now, after analysts at Jefferies downgraded the tractor maker to an underperform from a hold rating. They say that the recovery in the ag cycle will be challenging, with U.S. farmer incomes projected to fall another 15% this year, so keep an eye on Deere. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get all the access to detail and context around those big analyst upgrades and downgrades. Keep it right here. We got more Squawk Box coming back after this break.
Welcome back to Squawk Box. Our next guests are the co-authors of a new book that's out this week. It is titled From Mistakes to Meaning, Owning Your Past So It Doesn't Own You. And joining us right now is Josh Steiner. He is a partner at SSW Partners while working at the Treasury Department during the Clinton administration. His private diaries became a focal point during the Whitewater investigation. And Michael Linton, he's chairman of Snap and former CEO of Sony Entertainment, at the helm of the company when Sony faced one of the worst cyber attacks in the history of corporate America by North Korea. So they both have lots to talk about in the context of all of this. It's great to see both of you. Congratulations on the book. Michael, I'll go to you first. This was something that was in the news for months, if not years. I mean, I think so many of our viewers know the story, but I think one of the big questions for somebody like yourself now living through it is what could have been done? How do you fix it? Which is what you talk about in the book.
Yeah, well, the mistake that I made, which is described in the book, is the decision to go ahead and make and greenlight the movie The Interview, which ultimately resulted in the giant cyber attack. And Josh should describe his own mistake as well.
You know, one of the things, Michael, though, that I was thinking about is you talk about it being a mistake to have greenlit the film.
Yeah.
But I didn't know if it really was a mistake. I mean, obviously, what happened as a result of greenlighting the film was something you wouldn't want to have happened, but
Exactly.
You didn't know that it was going to happen.
No, that's fair. But the normal process by which we greenlit movies in those days was you bring it to a committee. And in that particular instance, which is described in the book, it was done in the room in a moment that was very emotionally charged. You know, and in retrospect, if you look at the situation, given the fact that we were at the end of the movie killing, assassinating the head of a hostile state, you can argue that that was a real mistake to have thought, particularly because I was working for a Japanese company which has its own relationship with North Korea.
So there's no part of you that thinks that you were being a little hard on yourself?
There's a part of me that says that, but if I'm going to be truthful, which is the point to the book, to get to the bottom of why I made that decision, I would have to say it was a mistake, yeah.
Right. Josh, you had your own trial by fire of sorts. How much of it actually was a trial by fire? Because, I mean, Michael's was very, very public, and yours was public, but not as much.
It felt pretty public at the time. I was 28 years old, and my personal diary got subpoenaed, and I testified before Congress. Not the experience you expect to have as a young person in Washington. Having said that, Andrew, I think the point of this book is to step back and say, yeah, we made these mistakes, but what can we learn from them, and why did we make them? And in both Michael's case and mine, they revealed aspects of our personalities which we really hadn't identified until we began writing this book. And then when we started interviewing other people about their mistakes, in almost every instance, we found some deep-rooted cause. And that's what this book is really about, giving people permission to actually talk about their mistakes and reveal them and stop hiding them behind deep layers of embarrassment and shame.
So I want to ask you both about this issue of it. So mistakes and public mistakes like this can be very, very painful. And so even talking about them now or having written about them, did you find pain in that or did you find meaning in that?
Well, that really was the title of the book, and that's the purpose, I think, which is our belief is that if you actually take the time and to treat mistakes as seriously as we treat our successes and our failures, and be willing, even as you generously invited us to come on the show and talk about them openly, the pain dissipates very quickly. And it's really only by suppressing them and hiding them and pretending that we don't make them that they become so embarrassing and so shameful.
And so, Michael, here's a leadership question, which is, you're right. A lot of people try to pretend that when they make a mistake, they didn't really make a mistake because they think that if they acknowledge the mistake or if they talk about the mistake, that it's not an enhancement to credibility, it's a loss.
Yeah. You know, it's been interesting because an excerpt from the book was published in the Wall Street Journal over the weekend, and I got a lot of response to that from people from Hollywood and elsewhere. And they actually described me coming forward and taking ownership of the mistake and trying to get to the bottom of it as a real example of leadership. I think people are really very appreciative now of when you come forward and talk openly about something you've done incorrectly or wrong and own it.
Do you think that's a shift, though, in the culture? This sort of, you know, people talk about, they use this word authenticity. I so dislike the word only because it's so overused. But this whole idea that now we're supposed to be much more human than potentially maybe leaders were running businesses 10 or 20 years ago.
I mean, I think... Go
Go
ahead,
ahead,
Josh.
sorry.
No, go ahead, Josh.
No, I was just going to say, Andrew, both Michael and I grew up with this expression, repress for success, which is this idea that you're never supposed to show your emotions. You're not supposed to talk about them. That's clearly not the right approach. And at the same time, to your point, No one wants a CEO or the head of an investment firm constantly talking about her or his emotions. We don't need to be navel gazing all the time either. What we're trying to do is strike a little better balance and a willingness, instead of just standing up and talking about these incredible discoveries, these incredible successes, once in a while, stepping back and talking to your team about your mistakes in the same open, transparent way, with the same analysis and rigor that we do when things are going well. And that's what's in the book, a framework for helping really leadership and leaders talk about how to describe their mistakes in that same open fashion.
Okay, so well, real quick, Michael, walk through it in terms of, we want people to go out and buy the book, but for those who want the Cliff Note version, what is the right way to do this and the wrong way to do this? And by the way, what would be considered a mistake in how you do it?
Well, the first thing is to find somebody who you trust, who you can actually engage with and talk about your mistake. And obviously, in the first instance, recognize that you've had the mistake to begin with. After that, you go through a process. Josh, we should take them through the process of duet.
Yeah, I think, Andrew, to your point, and we believe that actually talking these things through is the best solution. You need to talk your mistakes to death. And so there's an acronym in the book called DUET. And that comes from the fact that Michael and I wrote this book together and talked about our mistakes together. The D is for disclose. You have to disclose what's going on. The U is for unpack. You have to really get to the bottom, to the root cause of what's happened. The E is for empathy. I recognize that's a little bit of a charged word these days, but at least try to be kind to the person who's telling you the story and kind to yourself. And then finally, T for trust. You have to trust yourself and the person with whom you're speaking. And if we can get into these dialogues about it, whether it's with your spouse or with a colleague or a friend, we find that it's actually incredibly revealing, and it makes you feel much better about the mistake you've made.
Michael, Josh, I want to thank you for joining us. Congratulations on the book, and we look forward to talking to you guys very, very soon again.
Thank you.
Thanks. Stay warm. Stay warm here in the Northeast. Squawk Box coming right back after this.
Coming up, fallout from the Supreme Court's ruling against President Trump's reciprocal tariffs for businesses, executives, the White House, and Congress. We're going to have a big debate. Two people who both hate tariffs. You're watching Squawk Box on CNBC. President preparing to deliver the State of the Union tomorrow night, and the state of the economy will be front and center. Probably get some comments on the Supreme Court ruling as well. I bet you might get a glimpse of some famous hockey players too. Maybe. I don't know. I'm just thinking. Joining us now, former Trump economic advisor and co-founder of Unleashed Prosperity, Stephen Moore, and Natasha Sarin, Yale University Law School professor. I was joking a little bit because, Stephen, you've never been a fan of tariffs, so I said there's going to be some debate talking about tariffs when both people are like finishing each other's sentences. You at least concede, Stephen, that it might tie Trump's hands in negotiating better trade deals and forcing other countries to reduce their tariffs, but you've always thought of it as a tax, I think, on companies and consumers as far as tariffs go.
Well, that's exactly right, Joe. And I've always been kind of conflicted on this because, on the one hand, I don't like taxes and tariffs, and I do think that the Supreme Court has made the right decision in basically saying that these kinds of decisions really have to pass through the House of Representatives and Congress. This Constitution is pretty clear on that. On the other hand, the court has basically taken an arrow out of the quiver of Trump's negotiating strategy. And again, as someone who's not a fan of tariffs, I am a fan of these trade deals that Trump has brought home. The trade deals with China, the trade deals with Canada, Mexico, Europe. He has forced other countries to lower their tariffs on our goods, and now he's sort of lost that negotiating tactic. So that's, I think, one of the reasons Trump was so angry about this decision.
And you do make one point that I think everyone could identify with a little bit, and then we'll get to Natasha, Steve. And if you do view tariffs as taxation, as a tax, your point is, imagine what would happen if and you say a Kamala Harris, President Kamala Harris, President Gavin Newsom, President AOC were to just tax anything he or she wanted without any congressional approval. That's nightmarish. That's a hellish scenario. By any,
That's right.
Maybe Natasha might like it. We'll find out. But that's a scary scenario, isn't it?
Kidding, it is. That's one reason that conservatives and free marketeers should probably be cheering this Supreme Court decision, because no president, not this president or an AOC or Kamala Harris, should have the authority to say, well, we have an emergency here, so we're going to raise taxes without any approval from Congress. And so, look, this simply means that Congress is going to have to do their job. Have they voted, Joe, up or down on any of this? I mean, the Congress is sort of the villain here. They've done nothing on these. They've never even taken a vote.
Yeah, well, they got an election every 2 years in the House,
right.
Steve. No one wants it. I can't imagine. Natasha, take it away. And I know you always come on, and you know you're gonna like needle you a little bit, but you smile when I do. I appreciate that.
Well, I have to say I agree with a lot of what you and Stephen are saying. I think the idea of taxation without representation is so terrifying that this country was founded on the principles that you have to have some sort of deliberative process that goes through Congress that determines the power to tax and spend. And so I too was heartened by the Supreme Court's decision on Friday. The thing that I think is challenging, and Stephen started to get at a little bit of this, with respect to our negotiating posture in other countries, I think we disagree on how positively we view these trade deals, but I suspect we agree on the following. Effective tariff rates today relative to where they were Friday morning before are actually in kind of a similar place. So the pre-Supreme Court ruling was around 16%. The effective tariff rate calculated by my colleagues at the Budget Lab at Yale says it's now about 13.7. But there is so much uncertainty and volatility about even the legal authority that's being deployed to effectuate these new tariffs, and they're temporary for 150 days, and then they do require congressional authorization. And if you're sort of an ally or an adversary looking at the United States right now, and if you've been looking at them for something over the last year, I suspect you're kind of wondering about the extent to which these types of authorities that the president is trying to levy are ultimately going to be supported by the Supreme Court. And I suspect this isn't the last time we're going to see legal challenges in this dimension. So I just think that this is a moment of great uncertainty and volatility, not just for consumers, not just for businesses, but also for our trading partners and for adversaries like China that are looking at the U.S. in a weakened position.
Natasha, right out of the box, you said this is terrifying. Terrifying. I'm going to start using that on Leesman. He's been terrified since Liberation Day. Get it, Steve? Huh?
I do what I can for you, Joe.
You went right through it, Natasha. I don't think, but I was listening. Like, oh my gosh, you just said it really is terrifying. Go ahead, Steve.
I was just going to make, an important point, which is this is, I think the word that the court made was that this is going to be very complicated and confusing about where we head from here on in now. Trump obviously came out with that temporary tariff, 10 or 15% across the board yesterday, and that would be, I think, only for a few months. But the big question that I'm being asked by all businesses, merchants, retailers, manufacturers, will they be repaid the money that they paid in the tariff? In other words, if the tariffs were illegally imposed, then do these countries get their monies? These companies get their money back? And if so, we're talking about $175 billion that would have to be returned. I don't know the answer to this, but I know it's going to be a big issue that's debated.
Yeah, I think the court called it, Stephen, a mess. both in oral
Yep,
argument
right.
and then Justice Kavanaugh in dissent, right? Trying to think through exactly what process is going to be used. And the decision says nothing about the refunds. And so it's really an
Terrifying.
issue that's been left to
Natasha, I think one of the big questions now, putting aside what you think companies ultimately do, is all of these unfulfilled commitments that countries have made to the United States in terms of investments here. Where you think that heads, what kind of leverage or not you think the president has. Some of these commitments effectively require foreign legislatures to approve them, many of which have not thus far. You read some of the international press in some of these countries now, and they're saying, you know, we were coerced into these deals that we shouldn't have been making, and maybe we're not going to now do them. How do you think that all plays out? And what kind of other levers do you think the U.S. has, whether it's about whether defense, we're thinking about Taiwan and other things that may pressure them to continue this path?
Yeah, and you saw the Europeans over the course of the weekend making the point that this, in fact, also using the terminology that the tariff uncertainty has created a mess with respect to trying to think about how even realistic it is that the United States is going to be able to make the kind of commitments and threats that they've been levying in the course of these trade negotiations. And so I think the thing is, Andrew, it has always been very legally questionable and dubious that the president was able to effectuate these kinds of across-the-board tariffs, which, as Stephen points out, are taxes. They're taxes on businesses and consumers with the stroke of a pen and changing them so dramatically. By my count, the effective tariff rate has changed on some 60-plus days so far in this administration. And so I think they were always pretty legally dubious. I suspect the nature of how other countries were looking at Trump was not through the lens of how likely it was the Supreme Court was going to uphold these tariffs, but instead through the lens of trying to appease and work with the United States, given their importance in the world.
But this gets to the question then, long term, Stephen, maybe you can speak to this, long term, how countries and companies invest or not, either in the U.S. or in these new supply chains, or do they slow roll this whole situation and say, you know what, I don't know what's going to happen over the next 2.5 years. I was thinking about this, but maybe I'll see where the world goes afterwards. And if that's the case, that actually is not a good result in many ways, because you won't necessarily get that investment.
Yeah, you need predictability and you need certainty, and we don't, needless to say, we don't have that right now. But one of the things, look, I'm not a fan of the tariffs, but as I said earlier, I think Trump has really recognized something that previous presidents haven't, which is that the United States is in a unique position in the sense that every other country in the world must trade with the United States. We're the alpha male economy. We're the hub of the world economy. And what Trump did, which I think was virtuous actually, is to say, look, you have to trade with us. You have to, your stakes are higher here than ours. You have to start giving us a better deal. To use a term that Trump has used, rip-off. A lot of these countries have been ripping off the United States by charging us higher tariffs than we charge them. And to some extent, what Trump is basically saying is, look, we want a level playing field, and what's wrong with that?
Yeah, but Stephen, that's actually not what these trade deals are doing. I mean, what can you articulate as to something that the United States has gotten out of them? And I think Andrew's point is a really important one, which is the type of volatility and uncertainty and lack of predictability, that doesn't just go away. Like, the world looks less stable and the United States looks less stable as a trading partner, and that's here with us for some time going forward. And as investors are trying to make choices about where to spend resources, they're looking at Europe, they're looking at Japan in ways that they wouldn't have been 16 months ago or 13 months ago, precisely because of this volatility. And I think that's a really unfortunate and long-term consequence for the United States going forward.
Okay, well, thank you both.
But look, you talk about investors, but what about our manufacturers, our farmers, our dairy farmers who've been really priced out?
Well, it takes time. But right so far. All right, thanks, Natasha. Alpha person. You get Stephen. Alpha person. Man, we keep inviting you on, but you got to get together. Well, thank you, Stephen. Thanks, Natasha. Squawk Box coming right back. Okay.
Welcome back to Squawk. It is 8 a.m. on the East Coast, and you are watching the one and only Squawk Box on CNBC on this very blizzardy day here in New York City, Times Square. I'm Andrew Ross Sorkin, along with Joe Kernan. Becky is off. Among our top corporate stories,
We're like mailmen, aren't we?
here's a big one, though. We are like the mailmen, but this is a big
rain or
story.
shine or
Paramount Skydance now facing a deadline today to make its best and final offer for Warner Brothers Discovery. We got some news to tell you about. Variety now reporting that Paramount's revised offer for Warner Brothers Discovery will likely come in at $32 a share. This is breaking news right now. We want to get straight over to Rich Greenfield, Lightshed Partners co-founder, and I'll just ask it to you straight up. If they go to 32, is it theirs?
Well, I mean, first of all, there's more than just the price, Andrew. You know, I think the board has been pretty clear all along that there's, it's the totality of the agreement. What are they actually agreeing to in terms of guaranteeing the equity? Obviously, this is going to be more equity, I presume, because you can't put more debt on it. How secure is the debt? Are they guaranteeing a solvency opinion? I think all of those questions, but my guess is, to answer your question bluntly, I think the board is probably going to have to entertain $32 as potentially leading to a superior offer. And whether that leads to Netflix immediately raising or raising in 4 days, I don't know. But I can't imagine a couple of dollars is going to scare Netflix away.
Well, that's the even bigger question. So, okay, so Paramount goes, let's say Paramount goes to 32 here. Now it's a horse race, if it wasn't a horse race before. You've seen, Ted Sarandos and others out there trying to talk up this deal for some time. Given what's happened also, though, to Netflix shares as a result, maybe partially of this deal, how high can they go before shareholders say no mas?
Look, I think shareholders are frustrated by the lack of visibility. I don't think shareholders hate the idea that Netflix is buying this. I think it certainly unlocks a huge long-term opportunity to improve the Warner Brother assets and leverage them. Investors, Andrew, you followed Netflix as long as I have. You think back over the last 20 years, there's been a lot of times when people have lost faith in the stock. Management's been pretty clear. They look at the long term. They don't really worry about Wall Street's short-term reactions to their actions. I mean, think about when growth slowed and they had to give up their religion and do advertising. People were really scared that it was over for Netflix. Like, growth was over. So they've been through a lot of these things before. Look, I think if Paramount were to raise their bid to 35 to 40, my guess is Netflix says, good luck to you, try swallowing it.
So, okay, but look, the question is whether Larry Ellison, on the other end, would be willing to pay that much. So I'm just asking you, rationally, if you look at both bidders, who can go higher and to what price? And by the way, kudos to David Zaslav on all of it, if he can get this to continue to move higher.
Andrew, let's step back. We've debated on this show with you and Joe multiple times the belief that Paramount has that Versant is worthless. Sorry, that based on Versant, Discovery Global is worthless. I shouldn't say Versant. Based on Versant's multiple, Paramount has repeatedly said the Discovery Global spin has no value, maybe even negative value. You've heard Paramount talk and tell David Faber and others on CNBC that there's no chance that Netflix could ever get regulatory approval to buy Warner Brothers. If that's really the case, why are they even raising their bid? I mean, certainly, I can't imagine. You asked the question, how high would Larry Ellison go? Well, if you believe that Netflix can't win ultimately, why would you bid too high? I mean, it seems like they could be buying this thing at a lower price in 12 months than overpaying for it now. And so I don't know how to answer your question. I don't know Larry Ellison's personal desire to own yet another film studio. But I will say, if they have such conviction that Netflix can't be approved, the smart thing would be to exercise restraint and really play this for the long term and buy it cheaper rather than getting caught in a bidding war where, I mean, obviously the big winner is who you just said, Warner Brothers shareholders and David Zaslav.
Okay, so let's go backwards, though, for a second, which is now you're raising the antitrust issue and whether you should just sit this out and let this play itself out. You heard some of these comments over the weekend that the president made, this President Trump, about Susan Rice, who's on the board of Netflix. What does that portend in this transaction?
You know, if you try to follow Trump's views on a merger, you sort of need like a day by day. I mean, look at how he flip-flopped on Tegna Nexstar. One day he loves CBS, the next day he's upset about Marjorie Taylor Greene, one day he likes Netflix, the next day he hates it. Like I think trying to bet approval on.
You're the analyst. You're the analyst. You have to actually make a prediction though for your clients who are saying, well, how am I supposed to play this? How am I supposed to think about it?
I don't think both of these deals should get approval. I mean, again, assuming the system is functioning correctly, I don't believe that the Netflix Warner Brothers deal will get blocked. May it take some time to for everyone to understand around the world all of the properly define the market and understand why this is not anti-competitive. Sure. Does it create a more powerful Netflix? It absolutely does. But we've got companies like Google and Google with YouTube, and you think about Meta and what it has. Like, there's a lot of very powerful companies. There's a difference between being powerful and being a monopoly. I don't think Netflix in any way is a monopoly, and I actually think from a consumer standpoint, the Netflix deal actually will lower pricing. You look at what happened with Disney and Hulu. Disney bought Hulu, and now the two services cost almost 50% less than buying them individually. So bundling certainly has been good for consumers. When you look at streaming services, that's probably what happens here. So I don't really see economic harm to consumers from this transaction, and there's still plenty of buyers in the marketplace. So my gut is both deals can close, and the reason Paramount's raising their bid is despite all of their talk about this deal getting blocked, they're actually fearful that it could go through, which is why you raise your bid now rather than wait and see what happens in a year and try to buy it cheaper.
Okay. Rich Greenfield, it's good to see you. Stay warm, my friend.
Snowy day.
Rich, you could do an arbitrage. We had Mario on last week.
Sure.
And he was talking about Versant as like so undervalued at this point. So that bolsters Netflix's case too. Maybe you short. I don't know which one do you short. You go long Versant in short. Short Warner Brothers or something. I don't know.
Joe, just think about this. Think about how crazy this would be. If you really believe the deal's going to break because you've got control of Trump and you've got control of the regulatory landscape, Discovery Global is going to spin out. You think it's going to trade like death, even worse than Versant. So go buy Discovery Global in 6 months in the public markets at a fraction of the cost that you're paying inside of WBD today.
If you really believe
and then,
that, yeah.
When the regulatory falls apart, go buy WBD at whatever the reduced price is, because there'll be less bidders, no Netflix anymore. You can go buy go buy this asset cheaper. That's the part that they're trying to say both things right now, and it doesn't make a lot of sense to me.
You're sick.
I'm definitely struggling with the snowstorm and sickness, yes, but I'm here.
Well, don't go out if you're already sick. Don't go out in the snowstorm. Like we did.
Duty calls, Joe. Duty calls.
Duty calls. That's the name of the pooper scooper out in my neighborhood. You believe that? It is. I don't use them. I am duty calls. Actually, I'm the pooper scooper. Anyway, thanks, Rich. Coming up, a live update on the blizzard currently slamming the Northeast. Squawk Box will be right back. News is breaking. Steve, can you fix it for us? Steve Leisman has some comments from Federal Reserve Governor Christopher Waller. Steve, what is it?
It depends on what you think is broken, Joe, but I can tell you that Fed Governor Chris Waller is on the fence about a March hike or a pause. He says data showing an improving labor market, but that may tilt his view toward a pause, but there could be an equal argument for cutting if job weakness continues. Big question about whether January was signal or noise, that stronger jobs report. On tariffs, he says the Supreme Court ruling on tariffs, quote, may have a positive impact on spending and investment, but it's unclear how large. He says there's considerable uncertainty to what extent tariffs will continue and how businesses react. He's going to look through tariff effects on inflation as he has done if the tariffs go up or they go down. The SCOTUS ruling, he says, is unlikely to have a significant impact on policy. Getting back to this January report, he has concerns that the January report may contain more noise than signal. He points out that job growth was concentrated in a few sectors, and you get a typical downward revision to January, also along with the idea that there was almost no job growth in 2025. 1 month of good news, he says, is not a trend, and he goes on to say that a strong February jobs report would support the pause, but it could be appropriate to cut if February jobs are weak. And basically the 50-50 probability. Point out, Joe, Waller dissented in January along with Governor Myron. And I'm looking here at the March probabilities, Joe, and they really haven't changed since this news broke. Still at just a 1.2 percentage point probability of a rate cut in the futures market.
Yeah, everything's, I mean, really what he said was it all depends. Again, 50-50 depending on what happens. Steve, how much did the government shutdown affect GDP? Did Waller talk about that? Where do we think GDP is running in a,
He didn't, but the data that we got, I think it was Friday, God, it seems so long ago now.
I know.
Showed a 1 percentage point, 1.15 percentage point decline from the government or contribution, a negative 1.15 percentage point.
That's still below
detraction.
So that'd be 2.5, which is below what the bulls were hoping, right?
Yeah, it was, but it's, come on. I mean, $30 trillion economy, you're within a half a point. It was a good number without the government detraction. What I'm seeing, Joe, when I read the forecast over the weekend, was they're putting it back into this quarter. So you're going to get a 1 percentage point lift, which is why Goldman and others are up around 3% for this quarter.
Did you hear Natasha? He came up with that word to describe what tariffs call. They're terrifying. And I go, how did Leisman not come up with that? Since April, you have been terrified. Terrified. You've been terrified, right?
Yeah, it's a good word. Joe, you know what I hate? What I hate is this. These tariffs cause huge spikes in imports, and then imports go away because people are trying to front run the tariffs. And so it messes with the data in a terrible way. You had like a 5 percentage point detraction from growth from trade in one quarter, and then a 5% addition. So we have no idea what's really going on in the economy because trade is going like this. Now we can get rid of that and look at the economy without the trade. But I would love for it to go away so we can have a clean read on the economy.
No, I hear you. I have a friend who has an import type operation that is no fan of tariffs. Believe me, I hear about it. I hear about it a lot, and it is true. If you're a small importer of things, it makes a difference. It makes a huge difference. Thanks, Steve. Squawk Box.
Different for big business and small business.
Right. See you. Let's talk about the Supreme Court ruling on tariffs and how that could play into the markets. Jason Trenner is chairman and CEO of Strategic Research Partners, a Baird company. The market should be up thousands of points if the tariffs aren't going to continue. Jason, that's what every anti-tariff person said. So it makes no sense if they're going down. There's other things going on, and I guess they're not really going away. You could always say that.
Yeah, Joe, I really get the sense, obviously, that investors have come to grips with the idea that in a Trump administration, things are going to be a little more uncertain than they normally would be. It's hard not to look at the market on Friday and think that this decision from the Supreme Court wasn't priced in. If you look at the prediction markets were, I think it's 74%
right.
That the Supreme Court would reject this move by the president with IEPA. But I also, and just looking at Secretary Besson over the weekend, I can tell you it doesn't look like the Trump administration is going to be very much deterred in trying to impose these tariffs through other legal means. And I think that's one thing that I think companies are also aware of, that things can change pretty quickly.
Do you think that any of the deals that have been much ballyhooed, if you will, by the president and the administration, any of them at risk, or were they all done deals already, or sort of we're waiting to see all of them fully completed or spelled out?
Joe, I really have no edge on that, to be honest. I do think that they're going to try to keep them because they do understand that this does create some uncertainty. That would be my guess, but it's guess. But this is also a midterm election year. You have to remember that. That is a very important part of the calculus for the administration, in my opinion. And so you want to keep growth strong, and you want to keep people engaged in the economy. But I also would say there's a lot of hand-wringing here for an economy. I think, as you're pointing out, earnings for the fourth quarter up 13%. And so it's really hard to get too wrapped around the axle on the idea that tariffs are having some sort of meaningful, deleterious impact on the economy as a whole.
Yeah, and even a lot of the Fed people, we just heard Waller, a lot of people thought tariffs were one-offs anyway. So maybe there would be a near-term effect on inflation. We had, I think, Joe Stiglitz say, well, that's what you always use when nothing happens. You use the counterfactual. How much better, I think he was implying inflation would be at target if it wasn't for tariffs. But you can always fall back on the counterfactual being better. But we really haven't seen the worst case scenario. I'm wondering, Jason, as a free market guy, are you in the camp that the economy continues to do well in spite of the tariffs? Or do you think that there are certain things about the tariffs that actually boost the economy, whether it's, we can use the revenue, if the U.S. gets to keep that revenue, you can use that to lower deficit projections. Maybe, you use the leverage to enter into some of these trade deals and some of these investments into the country. Where are you? In spite of, or you think it's a good cudgel?
I think it's a good cudgel, personally, and I think one of the things that's missed, in my opinion, about the tariffs is that they're not being applied recklessly. They're being applied because the world has changed, and the U.S. has been, in my opinion, put at a very much of a disadvantage, American workers, by these so-called free trade agreements that are thousands of pages long. It doesn't make any sense. If it was totally free trade, I'd be in. But American exports are not treated the same way as many imports in the United States. So, I'm for them in that way. But I also think, to your question, consumer spending is 70% of the economy. Add in capital spending and government spending, net exports are pretty small. So it's not a huge part of the economy. I know it creates a lot of problems for small companies. There's no doubt about it, and I'm very sympathetic to that. By the same token, if you're trying to look at the big picture, I don't think it's clearly that big an impact on the economy as a whole.
Jason, let me ask you a big picture question, though, that relates to this. Take the tariffs out of it for a moment. So many of the tariff deals came with massive, in some cases, hundreds of billions of dollars in commitments to invest in the United States by these foreign countries. And the question now, many of which are unfulfilled, and many of which haven't even been approved by the local legislator in these different countries. And so one of the big questions I wonder about longer term is 5, 10 years from now, when we look back on all those announcements, what those numbers ultimately look like.
You know, Andrew, it's a very good question, and you could say, you know, the other countries are bluffing, they're waiting the president out on this, but I also think that, again, the American workers are becoming a much more important factor, as they had been for a long time, in the political calculus. Unfortunately, we ignored them, and I think that suggests that if you change administrations, these tariffs are going to probably change, are probably going to be there. There is a big shift towards populism on both the left and the right, and that, I think, again, suggests that the tariffs are going to stay. And so I don't think companies are going to change their plans to invest in the United States, because I don't think they should, because I'm not so sure it's going to change if based on a Supreme Court decision or based on what is happening politically. It's my own opinion.
Okay, Jason Turner, thank you. Good to see you. Looking good.
Getting there.
Good.
Getting there.
Putting some weight on. Let's see. I wish I could give you.
I fell off a bike last week, so that's a good sign in a way.
Unless it's a good sign, unless you're president. Unless you're the president. Anyway, all right.
Right.
Thanks, Turner. I wish I could give you some of my weight. All right.
Yeah, no kidding. I'll take it.
Okay, coming up, why a lawyer who helped argue against President Trump's tariffs thinks the Supreme Court sided in his favor. We've got the former U.S. acting Solicitor General who won the case, the big tariff case against the administration, right here on the broadcast this morning. You do not want to miss it. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box. Investors and policymakers trying to figure out what comes next after the Supreme Court ruled against President Trump's tariffs. Joining us right now is the man who won the argument in the Supreme Court, Neil Katyal. He argued that case against the government in this case and won. Neil, good morning to you. You were in the court on Friday when you heard Chief Justice Roberts deliver the opinion. What was your reaction?
So the Supreme Court never tells you when a decision is going to come down. So we were not sure, but we did know the court was issuing opinions for the first time in over a month. So I did go to the courtroom to see what was going to happen. And the chief comes in with his colleagues at 10 a.m. and says he has the opinion of the court in the tariffs case. We didn't know which way it was going to go, and he read the opinion for a few minutes, talking about the facts without telling us. So we were in suspense. But then he did say that the tariffs were sweepingly unconstitutional and illegal, and we were thrilled beyond words. I think it's fair to say I probably had a tear in my eye.
So how does this change the dynamic going forward? We've all been talking this morning about everything from refunds to the commitments that countries made to invest in the United States based on these tariffs, to commitments that companies made to reshore in the United States or possibly even remake their own supply chains outside of the United States. Do you think this genuinely re-scrambles all of that, or that this is simply a procedural issue, which is effectively what the administration has tried to tell people over the weekend, and that we're going to continue to have tariffs in place, not just for the next 150 days, but at least for the next 2.5 to 3 years through the end of this administration, if not longer?
Yeah, so I don't see it as scrambling the constitutional or legal order as much as I do a return to the rules that have always governed this country. And that's what the Chief Justice's opinion for 6 justices said, that the American way is for Congress to pass statutes that authorize tariffs, and the president can't do it on its own. So taking those different examples that you're talking about on refunds, there's a clear principle in the law that if the government confiscates money illegally, they've got to give it back. Here, the Supreme Court has said very clearly, there's no ifs or buts or anything like that. They've said this money was wrongfully taken from Americans. And so we do think that the refunds follow in a matter of course. And that, by the way, Andrew, is not just my view, it's the view of the Trump Justice Department. In our case, they told the courts that don't worry, you don't have to, you don't have to worry about rushing this case to the court, because if the tariffs are declared illegal, we will pay the refunds back with interest. So that's a representation they've made.
Neil, before you go there, you did hear Treasury Secretary Bessent made a comment on Friday at the Economic Club in Dallas, where he suggested that Americans, and it was a little cryptic, Americans may not see that money. There's also a question of whether the government may say that certain companies that raised prices and therefore didn't lose money might not have standing in such a case.
Yeah, I mean, they are starting to trot out these kind of procedural gamemanship ideas to try and block refunds. The problem is they've already represented to the court they won't do those kinds of things. So I think it's tough. And Secretary Bessent, with all respect for him, has been wrong about this case from the very start. I mean, after I argued the case, he issued all these statements saying that they had won the case, that it was obvious, that it was legal, and the like. So I'm not sure he's the best barometer of, what the laws of the United States require. With respect to the other questions you had about kind of foreign countries striking deals, or businesses have investment deals and the like, I think all of those were done against the cloud of uncertainty over whether these tariffs would stay. So I do suspect that some of these, agreements will not be enforced now. Now, the president has said, well, first he said he was going to put 10% tariffs on. Today it's 15. I don't know what it'll be tomorrow, under a certain law called Section 122 of the 1974 Trade Act. Now, that does provide for the president to give tariffs for 150 days, tariff increases for 150 days, up to 15%. Here's the problem with that, Andrew. His Justice Department, in our very case, again, told the Court of Appeals and the United States Supreme Court that statute was inapplicable, that you couldn't use it for trade deficits. So, they're, I think, stuck with that position. So it's very hard, I think, now to walk it back.
Do you expect that the tariffs that have been put in place today for the next 150 days will be litigated and brought potentially again to the Supreme Court in this context?
100%. Yeah, I'm not sure it'll necessarily even need to get to the Supreme Court, but if the president adheres to this plan of using a statute that his own Justice Department has said he can't use, yeah, I think that's a pretty easy thing to litigate.
When you think more broadly, there's so many different business leaders who've been working over the weekend trying to think about their own supply chains and what comes next, and this idea that I think a lot of them believe that over the next decade, no matter what the procedural rules may be, that tariffs are going to be here in some form or another to stay. What do you say to them?
So I'd say two things. One, how brave of the small businesses that I got to represent to stand up and fight for the American people and fight for this at the risk of retaliation, losing customers and the like. You know, that's an incredibly heartening story. And second, yes, I do think there will be some tariffs. There have always been tariffs, and presidents do have authority under the laws to provide for some temporary tariff increases. What they don't have, Andrew, is the kind of sweeping power to tariff the globe for as long as you want, for whatever reason you want. And that's what the Chief Justice's opinion for the court said, and it was not some like liberal screed or something. The Chief Justice appointed by George W. Bush, he's joined in his opinion by 5 of his colleagues, including 2 of the 3 appointees to the Supreme Court that Donald Trump made. Neil Gorsuch and Amy Coney Barrett, both saying, President Trump, you acted illegally here. And I do think that that decision is going to set the parameters, not just in tariffs, but more generally for how our Constitution operates.
What do you make of a company or CEO who calls and says, look, I'm thinking of actually pursuing refunds, but I'm worried about potential other kind of retribution from this administration in terms of other regulatory actions that they could take against me? Do you imagine that that's something that should be considered?
Gosh, Andrew, I sure hope not. You know, the Supreme Court's spoken, it's spoken clearly. Presidents have always followed the Supreme Court, even when they have disagreed with those decisions. And I think this is a perfect opportunity to say, look, we made a mistake. We're going to give the money back. That's what we told the courts we were going to do. And certainly to retaliate against someone standing up for their rights is un-American and illegal.
Well, let me ask you separately, though, your thoughts about the president's comments about those justices personally. There have been times in the past, I believe, and you can speak maybe to the history better, where presidents have been critical of the Supreme Court. President Obama, I remember being very critical of the Supreme Court, and there's been conversations from the left for a long time now about trying to impact the court. But I don't know how you consider that with some of the comments that the president made in the immediate aftermath about this decision.
Yeah, I listened to them, Andrew. I couldn't really quite follow them. It was hard to understand exactly what he was saying. But, you know, from my perspective, the Supreme Court's spoken. It's spoken clearly. The American way is to follow the Constitution. They are and the Supreme Court. Supreme Court is the crown jewels in our democracy. It's so amazing to think what happened on Friday can happen. That I'm the son of immigrants, and I can walk into court and say the highest person of the land, the president, got something wrong, and to do it not in some rinky-dink traffic court, but in that highest court of the land, and to win. That is something remarkable about this country. It's remarkable our founders created a system like that said we're going to make mistakes and we're going to have a way to self-correct them and fix it. And sure, it takes the guts of small businesses, but what a majestic thing to happen. We should all be proud as Americans, regardless of what we think about tariffs.
They can't emphasize that more, Neil. And I think, I don't know how they figured it out, and we're going to celebrate it 250 years, but somehow they made a lasting system of checks and balances to where there aren't any kings. That's why I don't know if we need demonstrations. I think it's I think we're okay, and I think democracy survives, and that's used as a rallying point, the cudgel, where I think that nobody is above the system that these guys and gals came up with. It's phenomenal.
That's beautifully said. That's right.
Yep.
Neil, we're going to leave it there. We thank you for joining us on this snowy morning, also a snowy morning for you in D.C. Thanks so much.
Thank you.
Thanks.
That was Friday. I mean, that's something to be patriotic about. And then next thing you know, we got the first gold in 46 years in hockey. Coming up, violence erupting in Mexico after the country's military killed a powerful cartel leader. Details after a break. Squawk Box. We'll be right back. And now to the killing of Mexico's most wanted cartel boss. The Mexican army carried out an operation to capture the leader of the Jalisco cartel, the drug lord known as El Mencho. But he was wounded in a gunfight, later died from his injuries. The White House said the U.S. provided intelligence support for the operation. Cartel members then took to the streets in several cities throughout Mexico, setting cars and buses on fire. Americans in this tourist city of PV, Puerto Vallarta, and several other areas were left stranded, and the U.S. State Department is urging U.S. citizens to shelter in place. Flights from the U.S. to the area have also been canceled. Some already in the air were told to return to the airport that they left.
Okay. Coming up, will a new wealth tax proposal in Washington state have executives of three iconic corporations, Microsoft, Amazon, and Starbucks, thinking about leaving the evergreen state? We're going to talk to the state representative trying to make this tax a reality. Don't go anywhere. Squawk Box coming right back. Squawk Box snowy right here in Times Square this morning. Meantime, the state of Washington is considering a nearly 10% tax on the state's millionaires. A proposal has already passed the state Senate, and joining us right now is the prime sponsor of that bill, Washington State Senator Jamie Peterson. Good morning to you. This is becoming a national topic as other states like California, New York, and others have talked about wealth taxes, and there's been a bunch of people potentially moving from these states. And I'd start with just the very question to you, which is, how concerned are you, and how much do you worry that if you put these taxes in place, that some of the wealthiest in your state who work at places like Amazon and Microsoft and Starbucks and others are going to leave?
Yeah, so let's be really clear about what we're talking about. This is not a tax on intangible property, the so-called wealth tax that we're considering last year. This is an income tax on very wealthy people, so people who have more than $1 million of income each year. And the tax rate that's proposed, which is 9.9%, is actually lower than in most other states. So there are 41 states at this point that have some form of personal income tax. This would be a personal income tax that has $1 million standard deduction, so that the only people who would pay it are ones who have more than $1 million in income. So I guess what I draw from all of that is that our tax system is unusual, exceptional right now, in the sense that it does not tax income at all. If we pass the bill, it will make it much more like most of our peer states. And I don't think, therefore, that it would cause many people to think about moving.
I don't disagree with you that right now that tax does not exist. It's just that the delta is so high. You're not concerned that there are people who would leave the state and try to go to other states with lower taxes, and therefore what happens to your revenue base?
Well, look, if you have somebody, for example, who's thinking about going to Idaho, they have to have more than $1.9 million of income for it to pencil out, right? Because the amount there is a 4.4% tax, but from $1. So, you know, if you go to Oregon or California or Hawaii or most of the other jurisdictions that we tend to compete for talent with, the tax is actually higher on that level of income, and they have tax brackets that are lower than $1 million. So it is true that if you have somebody who really wants to move to Texas or Florida or one of the other non-income states, then they could choose to do that. But I think many of those people have probably already left for other reasons.
I think New Jersey has this already, right? So, something close to it. This is not a, I don't know why we keep calling it a wealth tax. So you said that right at the top. This is not a wealth tax, is it? It's an income tax. Okay, that takes away all the really potent ammunition for all the questions. So, I mean, it might be bad, but it's not you're not trying to tax intangible assets, at least, right?
We are not trying
even you aren't crazy enough to try to do that, are you, Senator?
I think one of the big lessons that I've had over this process is that we're a state that has a lot of natural advantages. We don't need to be exceptional in terms of our tax system. And what is really exceptional about our tax system right now is that we don't have any form of income tax at all. We rely primarily on sales taxes to fund government services.
Am I wrong in understanding at the same time you want to increase corporate taxes, though?
No, actually the proposal will decrease corporate taxes, both for large businesses, rolling back a tax that we had increased last year, and then also, probably more importantly, for small businesses, we would increase the small business credit so that 70% of businesses in the state would no longer pay any business taxes at all.
But what would be the impact on the biggest companies in the state? And I'm thinking about the Amazons, the Microsofts, the Starbucks and the like.
Yeah, so we have worked closely with a group called the Washington Roundtable, which includes most of the largest businesses in the state, in developing the proposal. And the proposal right now includes their top two priorities. Number one, reducing that what's called business and occupation tax surcharge of 0.5 point on gross receipts for businesses that have over $250 million in revenue. We would accelerate the sunset date for that by 1 year. And then we would also roll back the sales tax on services that we had started charging last year as part of our budget deal. So for, I think the business community, I won't speak for them, you'll have to talk to them directly, but I think the business community has been a participant all along the way in the development of this process, and many of them view it as preferable to charging higher business taxes.
Invariably, there are going to be some who say you don't need to be raising more money, you need to be cutting spending. What do you say to that?
Well, we are cutting spending too. Last year in our budget process, we cut about $7 billion of spending, and this year in the budget that my Ways and Means chair just rolled out, we are going to be reducing about $1 billion of additional spending over the next 4 years from what our budget had last year. The reality is that we are sort of in a position where labor and other costs for public services, education, for healthcare are going up. We've got a federal government that is pushing more costs onto us, including we're going to have to spend something like $370 million in IT costs over the next 3 years to implement a system that will kick more people off of food and healthcare benefits, which we don't want to do, right? But that'll be a condition for us to receive federal assistance.
Senator, let me ask you just a slightly different question, and maybe it's a philosophical one, and there have been folks who've obviously already left your state, like Jeff Bezos and the like, who've moved to Miami. But oftentimes, and here we are in New York, the mayor here wants to raise taxes on the wealthy, and we often look at the number of how many people left the state. But one of the things that a lot of people don't do is say, did they come to the state? Would have they come to the state otherwise? And I think about a firm like J.P. Morgan, which is based here in New York City, but now has more employees, I believe, in the state of Texas than they do here. And so when you think about an Amazon or a Starbucks or a Microsoft or any place else, you say to yourself, well, it's not so much simply that people leave the state, so much as what does it mean for people coming to the state? And clearly your tax rate, at least in the past, was one of the incentives that I think led people to come to your state.
Yeah, so look, we're talking about a tax that would be paid by something in the neighborhood of 21,000, I think is the estimate, out of 8 million people. And, it's going to raise a pretty significant amount of money. The projections are about $3.5 billion a year, which will help us to be able to fund public schools, to fund healthcare. I think that the people who are thinking about where to come, and it's important to point out that like the U-Haul data actually show that Washington is one of the states into which people are really coming right now. That data suggests that people want good public services and the quality of life that we have here. I don't think that it's all about taxes, and frankly, I don't think that it's going to have a significant effect on.
And the final question to you, which is when you do the math on this proposal, do you subtract anybody leaving? So when you do the modeling for this, I'm always curious. Do you say to yourself, okay,
so
some percentage of those 21,000 people that you say are going to get hit with this tax are going to leave as a function of this, and we're going to lose X amount of money, but we're going to make it up on the other. Explain how you do it.
Yeah, so the Department of Revenue does all of that work. I'm a lawyer, not an economist, but they assume in the first year that we'll have about 90% collection rate, and then in ongoing about 95%. So there is built in an assumption either of tax avoidance or by people leaving or not paying. So that is built into the assumptions that they have.
Senator, is there an actual wealth tax being proposed in Washington State? at this point?
There was a bill filed to do that, but that is not what we're moving
No,
forward.
I know. This is the way we intro. I mean, that almost is mind-boggling to say that.
This is.
But they
what
would
the
not say
Senate
we're
passed
considering
is
a
an
10% tax on millionaires. It's like, that sounds like a 10% wealth tax on a millionaire. When in fact in New Jersey, and I live in New Jersey, and I'm not saying this affected me, but Murphy, on anyone who made between $1 million and $5 million a year, he went to 10 3/4, the marginal rate.
So you think this is a good idea?
No, I'm just, he
So
lulled
it's
me,
so
no, he
fascinating.
lulled me into a false, he's speaking very reasonably, and it's not nearly as bad. We've already done it. I mean, people, Phil Murphy, I did not like what Phil Murphy did. I don't like what he's doing, but it's a far cry from setting it up as a wealth tax on anyone who's a millionaire.
The distinction is that there was no tax.
That's right.
10%.
So then it's even more. He can make a case that's even more reasonable, that no one will move.
Senator, thank you for joining us. We got to run.
Thank you.
We're up against a hard break. We appreciate the conversation.
Thank you.
We'll come right back.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Kington here with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures a bit soft after the S&P's first positive week in 3. Lot to process after Friday's SCOTUS decision. The EU may move to halt approval of its U.S. trade deal. Big week of earnings from NVIDIA to Home Depot plus State of the Union. Our roadmap begins with the fallout after the Supreme Court struck down Trump's tariffs. Trump saying he will now move to hike global tariffs to 15.
Plus travel chaos as the winter blizzard cripples the Northeast, forcing thousands of flights to be grounded. And the U.S. and Iran are set to resume talks. This comes as the president reportedly weighs a larger attack on Iran if diplomacy or an initial smaller strike doesn't force the country to stop its nuclear program.
Let's begin with this winter storm blasting the Northeast. According to forecasts, some areas could be hit with up to 2 feet of snow. You got blizzard warnings stretching from Maryland to Maine, including the first for New York City since 2017. Hundreds of thousands are without power. Since yesterday, more than 10,000 flights have been canceled, according to FlightAware. Today there have been more than 9,000 delays. Not exactly what the air travel industry needs, Jim, especially with this partial shutdown still in place.
Oh, what happened last week? That group fell apart, even after Americans said that the first 2 months of the year were good. We don't want to lose the travel bull market. People felt the company bookings was a little bit soft, too. I mean, David, if you remember the numbers that the president was talking about, like we had the government shut down, and that knocked off 0.9% of growth.
Yeah, from GDP.
When you have these, we used to say, uh-oh, bad for brick and mortar, good for Amazon. No one says that anymore. It's kind of like Amazon doesn't mean as much to retail. I'm trying to figure out what it means earnings per share to anything.
I don't know. It's just a part of the fabric now, Amazon.
Yeah.
So, yeah. Listen, we're all here. Subway work. Thank you, MTA workers, for getting in today so that we can get in.
No, I was trying to think of the earnings per share.
I know. I mean, it's weather. It's bad. It's not 2 feet, by the way. I don't know where that came from. It's like 8 inches of snow out there.
Okay.
All right. That's my forecast.
Now, when I say
Now, can we
tariffs,
move
is he
on?
going to say, well, it really doesn't matter, you see, because it was easy to get in today.
Yeah.
Tariffs, you said too?
Yeah, let's move on to that. Wherever else you want to go. I don't really have a lot of time for the weather. Do you? Really? You want to sit here and talk about the weather?
I discussed with my team, it's
We're going
earnings
to
per
sit here and talk about the weather? What? Like, we're here. Let's go.
Let's move to the markets. We're coming
Thank
off
you.
a positive Friday session for stocks. Of course, the Supreme Court ruled down the president's reciprocal tariffs. In response, the president announced this 15% global tariff, this time under Section 122. You might have heard of it by now, but under the 1974 Trade Act. Waller's on the tape today as well, issuing some comments. He says the ruling is unlikely to have a significant impact on monetary policy. Actually had some comments about the labor market, which is really where his calculus around rates pivots.
Well, look, I think that we have to look at what happened to the stocks. And the answer was they all jumped, all the usual suspects went up big and then came back down as people realized, wait a second, there is some way the president's going to do something and make it so you're not going to get it. I do think that the labor market could be affected. It's you know, remember, it's slower economy if you believe in, I want to get this right. I think that what happens is that if you're going to have more money for the Treasury with tariffs,
okay,
less without. Maybe interest rates go higher, slow the economy. But I want to say, I've not heard this. I'm just going to put it out there. You know how J.P. Morgan came out and admitted that they shut down the president on Jan 6th? They shut down his account.
Yeah.
And that's going to reverberate. We know that's not going to be. That's not the last we've heard of that.
You don't think so?
No, because what happens is
It's not
if you're
that he was
dumb
unaware.
enough,
It was not that he was unaware of that.
no,
though.
but if you're dumb enough to not pay the tariffs as the president wants, you're going to be singled out as un-American, and I don't know if you want that. We are in a different era. I don't think people realize, well, you know what, I'm just going to withhold my payment. It's like, you know, you withhold your payment, the president finds out, and he says, you know what, I think that people shouldn't buy Nikes. I think they should buy New Balance.
Who cares?
Well, I think that if I run Nike and I'm Elliott Hill,
We've been doing this for 10 years, Jim. It's happened to Apple, it's happened to Macy's, it's happened to Harley. I mean, we move on.
I guess we do, but if I'm watching, if I'm a Supreme Court justice and I am in front of the president and there's this, maybe you could say that this is the balance of powers. Maybe this is what we thought would happen at some point, where the president would make fun and say that these guys are un-American. But I still think it hurts. If you're a CEO and you're singled out by the president, I still don't think it means very little.
Yeah, well, a lot of them want to avoid that. We've talked about that many times.
You agree?
And that, well, I agree that corporate America is still unwilling to engage in certainly open conversation that's critical in any way of the administration.
But
even as you and I have said, even behind closed doors, more muted than I can remember during the first Trump administration.
But, you know, Carl's right.
All that said, though, back to tariffs, we get to 15%. I don't know what the revenue number is going to look like.
No.
Bessent, I think, indicating it's going to roughly be the same. So that's not completely clear. The tariff rate continues to be elevated versus certainly what it was a number of years ago, Jim.
There's a fuse.
150 days. It's very much unclear to me, though. Can he wait like a day and then impose another 150 days?
Well, he can. I mean, I don't think he really. You know, you have a guy like Gorsuch. I mean, I mentioned to my wife, I said, this man's a great principal. She said, oh, please. I said, no, he stood up to the president. And, you know, the Wall Street Journal saying it's one of the most important decisions ever. And then the president says 10% on Friday and then 15% on Saturday. And, and then it makes a mockery of the process.
The line from Gorsuch was worth reading. He's talking about tariff rates. Could be 1%, could be 1,000,000%. And he may change his mind at any time for nearly any reason. That was his problem.
Gorsuch is a heavyweight, but I guess obviously what was he called? What did they call the ones, the rhinos? But he also did something else.
The president had a lot of things to say. He was very angry, obviously, in that press conference on Friday. Yeah.
It doesn't matter.
What doesn't matter?
To what we do. It sounds like it doesn't matter to what we do.
It's not clear that it matters from the macroeconomic perspective, and it matters maybe on the consumer. The tariffs have been fascinating in that we thought there would be a big impact on the consumer. Now, the New York Fed says 90% of the tariffs have been paid by the consumer. It depends on who you talk to, whether that's $1,000 a household or less. But it hasn't seemed to have the impact, perhaps, that some had feared overall on the consumer and maybe on inflation. The trade deficit remains as high as it's ever been, so it hasn't impacted that. And manufacturing jobs have yet to come back. And it did raise 130. These tariffs in particular raised over 133 billion in revenues, which is helpful in terms of at least reducing the deficit.
Well, but look, I do think it's another reason why you can cut rates. Remember, I'm in the don't sell stocks. Warsh will get in, and he has a million reasons. I mean, he can talk about the price of eggs down 66%. What's to do with the price of eggs? Well, the price of eggs means inflation goes lower, and therefore you'll be able to cut more aggressively.
Although, I mean, we did get core PCE Friday, Jim. In April, it was 2.6. In May, it was 2.8. In August, it was 2.9. In December, it was 3.0. I'm not sure that's moving in the right direction, as they like to say.
You do see rent, key part, that's going to come down. Natural gas only spiked to $3.05 this time, not $5. Somehow they managed to flick the switch correctly.
Yeah.
Look, those who want to sell today, other than, and we're going to get into what's going on in Anthropic, those who want to sell today, you're up against the decision that you want to sell in an environment where rates are coming down. Short rates. And that historically has been a sucker bet. You own stocks during rate cuts, you don't sell them. And is there anything you hear that has made it so that Warsh doesn't have 4 or 5 great reasons to cut rates?
No, I guess not.
Right.
He doesn't take office till May?
Well, that's not that far.
I guess it's not. You're right. It's almost March.
There's the most important thing that is, I mean, let's just deal with that.
Well, I can get back to talking about the weather. It's quite some weather we're having, isn't it?
No, I'm just saying, okay, I think the impact of all this is more of a reason why we're going to cut rates. Because now Warsh can say, you know what, I just feel like I'm worried about the slow economy, I'm worried about, I mean, it's just...
Even with the core numbers I just gave you.
I think he can just say, look, that this caused inflation, and it's going away, and without this level of inflation, and with housing inflation going down, with fuel inflation going down, with food inflation going down, with Walmart saying it's only 1% inflation, Walmart numbers better than those numbers, let's cut rates. That's what he's going to say. We can't be oblivious. This man's going to be the Fed chief. He's not Jay Powell.
Well, we'll see what the process is trying to get through Senate banking. Obviously, there's a couple of hurdles in the way. By the way, oil got to 67 last week.
Well, if you're going to talk about whether to do a small-scale or large-scale invasion of an oil producer, I think it does impact and make people feel like...
an invasion is not what anybody's talking about.
An
invasion does imply actual soldiers. No, we have no idea.
30 to 40,000 soldiers in the area?
We do not know what's going to happen.
What could happen there?
I don't know.
Have you seen season 3 of Tehran?
Season 3, I don't think I got to.
Okay, when you get there, you'll be worried as I am.
Okay. I know you're worried, and
I am
not
worried.
saying...
You kidding me?
No,
this is not Venezuela.
No, it is
This
not.
is a country that may still have nukes for all I know.
Well, I don't think it does. This is designed to make sure they don't, but they do have 90 million people.
And Witkoff over the weekend, about a week away, he argues, from some kind of industrial-grade bomb material.
I know. I think to dismiss it or think that it's easy to cause regime change is, this is not.
You can't.
I'm not predicting disaster like Jimmy Carter.
From a market perspective solely, it's not clear that geopolitical things move the needle for a particularly long period of time. Now, this could impact the price of oil in the short term as well. I think
Okay, what
Our
does-
history shows that we talk about these things and then we move on to
Or so
the
what-
price of
or we
NVIDIA,
don't-
to
snow-
OpenAI and
All right,
Anthropic.
snow doesn't mean anything. Tariffs don't mean anything.
War with Iran,
War
no
doesn't
big
mean
deal.
anything.
Move on.
Will you please
Not
tell me
move
what
on.
means
First
something?
of all,
What means something?
that is not true.
What means something to you? The Olympics?
The Olympics were great. The tariffs we've discussed, they mean something absolutely, and I'm not saying Iran doesn't. I'm simply saying that the market doesn't seem to. Am I wrong in saying
No,
that?
you're not. I'm just giving you a hard time.
Okay.
The market cares about one thing only. What's Anthropic's next target? And I can tell you that this game, I want to draw the line. And I want to draw the line, and there's, a lot of people are talking about Halo. I don't know if you know about Halo.
No, tell
Heavy
me.
assets, low obsolescence. It means that McDonald's is immune.
Yep.
It means that tractors are immune. I have a post this morning on Twitter. This is where I'm worried. This is
Halo.
about the power of Anthropic.
Yep.
Right here. That you're supposed to run the.
Oh, there's something to run. What is
And
it?
just like I said, no, see, that I'm really stupid and I want to hang myself with this really nice Ferragamo tie. Okay, well, there it is. See? Anthropic has a solution to that weather.
You think because you brought us back to the weather?
Well, I mean, Anthropic's the most powerful force on Earth. They came out with something that is. George Kurtz has one of the best
From
LinkedIn.
CrowdStrike, the CEO of
Did you read it?
CrowdStrike. No, I did not.
Oh, first he starts at a bit of a joke. He says he's looking at the fact that this release came out that every single analyst went absolutely nuts on, sold CrowdStrike down from 420. He goes, in Claude, so he prompted, he goes, in Claude code, he spoke to Claude. I think Claude's always worth speaking to. In Claude code, build me a tool to replace CrowdStrike. Now, what did Claude say in return? It said, I appreciate the ambition, George, but I have to be straightforward. Building a replacement for CrowdStrike isn't something I can do here, and it wouldn't be responsible for me to suggest otherwise. And then he goes on and actually explains why, why CrowdStrike is. They are two different things. CrowdStrike does a totally different thing from what they're doing. People will sell and they'll short it. I'm drawing the line. I bumped into a guy, a very high-level executive from a bank this weekend, and I was not conscious of how angry I was, and I just started talking to him about this. I said, listen, can I just say I'm drawing the line? I said, that's. He goes, how was your weekend? I said, I'm not finished. Because I'm upset about it.
You are. Drawdown's 33%.
Yeah.
If it gets, you're going to get more angry, the bigger the drawdown.
Next thing will be Lehman Brothers.
What about Lehman Brothers?
Well, I'm just saying that we could make everything we could say could be trashed by.
Well, many things, and yes,
A press release
investors are
comes
certainly
out.
focused on whatever the next area might be that Anthropic could potentially
Well, did you see
disrupt.
Brent Phillips'
or to be fair, OpenAI or Alphabet with its Gemini, and that will continue to be a theme in these markets until we have a better answer in terms of how these companies are going to
You talking about the
fare.
Brent's Salesforce piece or what?
Oh, well, just he threw in the towel on a bunch of Brent Phil, Jeffries, and a bunch
Yeah,
of
well,
these.
Brent fell on our air was
Hello, retail
I'm
traders.
worried about, as many of us are, what are my kids going to do for a living?
What are my kids going to do?
Yeah, that's what a lot of us are worrying about, Jim.
Next.
Hello, retail
I've
traders.
already had a worry
How about those
that.
Olympics?
When we come back, a setback for Novo Nordisk in these obesity drug wars. Stock suffering here as this trial does fail to match Lilly's. We'll get you set up for the week with Depot, Lowe's, CRM, Dell, CoreWeave, all headed our way this week.
CRM,
Plus an update on the weather
CoreWeave.
in just a minute.
Video. Oh, I know what I forgot to get. Now I gotta go back out and get it. Oh God, it 17 degrees outside. Dug it. Sure did. $2 more drama would be better. Watch AMD. And the video has earnings.
Shares of Novo taking a hit in the pre-market today. The company says trial results show its next-gen obesity treatment was less effective than the Lilly drug marketed as Zepbound and Mounjaro. The study shows that Novo's CagriSema achieved 23% weight loss compared with 25.5% for Lilly's drug. This was an 84-week trial.
So we are a buyer here, and I think whenever you inspect, it takes one
Post-market earnings on Wednesday.
All-time highs.
NVIDIA.
That's where we're primed for that in a name like NVIDIA.
Yeah, and you have another Mag 7, and you have
It's NVIDIA.
Amazon in there. At the same time, you have the S&P equal weight. Are you doing a hedge thing there with that?
100%. So, you know, no longer is this market driven by just the 7 big names of the Mag 7, Nicole. We've seen this broadening out, so we're playing the RSP position here as a hedge, almost a way to play the other 493. And as we see names like Amazon specifically get cut on a, I would say a mixed earnings, but my goodness, they surprised in revenues. It was the earnings per share that got a little bit of attention because of their spin towards AI. We saw a name like Amazon get hit pretty significantly after the earnings call. We pull out of the RSP and buy into a name of that magnitude. I think that Amazon is much more than just the smiling face that you see on your front porch when you drive home and maybe you've got a package waiting on you. We've got a sticky customer base with their subscription. You've got cloud services that continue to grow, and their investment in AI is going to be something that we want to be a part of long term.
Yes, it will.
I think Amazon, again, another name that we are buying this dip and awaiting the rip to come.
I know you have Intuit and XLE in there as well, and we can get to this.
Buy the
but I
dip
do
and
wanna
wait
get
for the
a big
rip.
Picture.
Booyah!
Do you see the S&P around 7,000? Do you see a higher level at the end of the year than where we are now? Because you're talking about, you know, buying the dips and selling the rips. I mean, that sounds like volatility, but do you think that the market sort of climbs higher throughout this year, like in December? Will we be at a higher level than where we are now?
Bold prediction here, yes, and that is because of earnings continuing to grow. Anytime the earnings are growing, we expect the market to grow and to follow suit. The reality is you will not see a straight line to a higher point, though, Nicole. This is something you've got to be prepared for. We are screaming discipline to investors, to our clients. We are maintaining discipline in buying these dips and selling the rips, like you mentioned. This higher to December is going to come with volatility in just simply looking at the midterm elections. That's a huge piece of volatility historically that tends to put a little bit of volatility into the market. And the good news is, on the back of a midterm election, historically, again, over the next 12 months following a midterm election, almost certainly going to be higher in the market. Now, again, that's historical. We can't predict what's going to happen based off of history, but it's a good indicator. I think that going higher in the market is going to occur. You just got to be disciplined along the way. You mentioned Intuit and XLE. We're taking some profits right now from XLE. Still bullish on XLE, specifically because artificial intelligence is not just about chips and computers anymore. It's also about energy. And who's going to make that energy? I think XLE is the play here. We're buying dips on this because we are bullish. But right now in this high that we see, we're taking a little bit of profit. Again, artificial intelligence has impacted everything, Nicole. Last piece here, that Intuit piece that we like. I'm not necessarily buying it right now, but we're watching it. I think you're trying to catch a falling knife at this moment. But the fact remains that Intuit is a name that has been sold off significantly because of innovation in the AI sector. It seems as if when AI innovates, Wall Street holds a funeral for the old guard. I don't think that should be the thing that should be taking place right now on a name like Intuit. I think the market has it wrong here. And when we find the perfect opportunity, we're getting into that name.
Let's talk also about the AI revolution, the trade. Is that AI story still very much alive? I know that some people are moving away from software and hardware, moving more, like you're talking about, you're bullish on energy and infrastructure. But where are we in the AI trade, and what do you think works pertaining to AI?
Yeah, I certainly believe that artificial intelligence is going to make us more productive as an economy. It is going to be a disruptor, Nicole. It's certainly going to change industries. Could it put people out of work? Absolutely. Even people that are considered maybe white-collar workers, attorneys, CPAs, wealth managers. It's going to make us innovate, and if we don't innovate, we will die. This innovation, though, should not cause these overreactions in the market that we're seeing with software specifically. You know, I think it's Jensen Huang himself that even says a world in artificial intelligence where software doesn't exist, it's a dream. It's not realistic. I don't think that we should see these software names being sold off, especially the old guards, the ones that have the cash flow to buy up that new innovation. You got another one like DocuSign, which is not on our list to buy relatively soon because I think its PE's a little high. But those names that are getting hit pretty substantially. We saw another sell-off in software just Friday. This innovation is going to cause disruption, and the disciplined investor in times of disruption can make a profitable gain if they choose the right stocks.
Just a few seconds on crypto. You know, there are a lot of crypto investors out there. They're watching the Bitcoin trade around 66,000 today. Are you a fan? What are you hearing? Is this something that you watch closely?
Yeah, you know, we don't watch it very closely. And the reality is the client we work with is a client that is approaching or even in retirement, needing stability. Crypto, it just gives us a ton of volatility, so much volatility that it's almost impossible to predict any kind of steady income stream. However, I will tell you that crypto is a place where a lot of retail investors put their money in hopes to hit it big. And when we see money exit the retail sector, I think what we're seeing recently, at least, is it's entering into things like gold and silver, believe it or not. You know, this type of parabolic move that we've seen in silver, and then the sell-off, the parabolic move in gold, and then the sell-off, I think a lot of that has to do with these investors trying to find a place, and I call them investors very lightly, more speculators or even perhaps gamblers, trying to find a place to park some money to make it work quickly. I do see a cycle back into crypto coming. I think we see all-time highs again. It could be a year, it could be two. I don't think that crypto's headed to zero anytime soon.
Okay. Glad I asked the question. Dale Smothers, RDS Wealth Management. Dale, great to see you. Thank you so much. All right, coming up, we're going to have a quick break. Sam Vadas and I have so much to talk about this market, this week ahead, today, the action. Right now, stock futures are looking to the downside. Opening bell. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Welcome back to Opening Bell. We're counting you down to the start of trading. Joining me right here, Sam Vadas here on set, and we have so much to discuss because there's so many stories. I mean, Iran is in focus, tariffs in focus, and just the trends. I mean, the Dow's now having its 10th month in a row of gains, but the NASDAQ has a negative month. Some of your thoughts this morning?
Look, we're still within 2% or so of the S&P 500's all-time high, so I think this has really been the story, hasn't it, Nicole, that we continue to see this bifurcation, this churn under the surface as we see this push and pull. We've seen this sort of cyclical trade in force, very much part of the broadening out and that rotation that we've seen out of some of the tech stocks, but also keeping an eye on the macro and the geopolitics, as you mentioned. We've cut the S&P 500 coming off its first positive week in 3, so I suppose that's the good news. However, we do have the E-minis pointing to a down start this morning. We are off the session's lows, suffice to say, so we have actually picked up since the overnight session as far as the futures are indicating. In fact, the dollar is off the lows as well. It has been weaker against its trading partners, especially the Dixie, given what we've heard as far as some of the trade tariff talk as well over the weekend as we continue to digest this. Obviously, then Trump coming out of the weekend, upping that 10% to 15%. And now this morning, you have these lines coming out of Europe. We've got this caution, if you take a look at the Stock 600, for instance, pulling back on the fact that they actually might be delaying some of the ratification process as far as the legislation around getting their trade deals.
Hey, Sammy.
So I think this has really elevated the...
Elevated. So, use reverse psychology. They're evaluating still the same shit they were evaluating before. They still want more of a pullback in tech before they start jumping in it. Reverse psychology. I'm the best at it. For I'm ready. Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And the video is breaking out. We got less than a minute and they're breaking out already. Okay. We got the VWAP on the /ES to look forward to. And that'll be a higher low. Good morning. Well, here we go. Right under the 200. About to my third resistance on the SPY, 689.61. NVIDIA's already got 10.5 million on it in volume. Amazon down 272. PLTR is down $5. Tesla's at 405. AMD's down $5. We're at support levels on AMD. Then I'm trying to get snow. We're at resistance. We hit 689.61 on the SPY. And we broke a little bit above it. Three white soldiers. Okay. Let's see what she says. Ain't no rush. There's the pullback. Apple had a nice little breakout. So did NVIDIA. And now they're pulling back. CrowdStrike. tweezer top on NVIDIA on 5 minute. And 1 minute. Okay. Are we going to come down and hit the 200, or? That's the question. Oh, dang. That wasn't nice. I didn't get a chance. Woo! New high. 23rd. Well. That to suck. It looks like we're at resistance levels, but what it looks like to me, man, look at that. There's your big knife. Rick 690268. Oh, that's 6930s. Well, I like them right here. Okay, boom. /ES was triggered. Digest. Oh, here we come. 3 black crows. So we're off to 63. Double bottom with the wicks. One's a little bit higher than the other one. Up. Just went below it. We got the VWAP. They're digesting Supreme Court tariff ruling. The 6930s with the hammer. It's 2 hammers. Watch us shoot out with a green one here. The 6930s. $4.70. Oh, I don't know. Inverted hammer and a tweezer. Nope. We're at the VWAP on /ES. Old man Lulu took a big slap to the face. I'm trying. I want to try it so bad. I gotta wait. Write them in. There's a doji. Okay. Dang it. 350. But I didn't get it. It went to 330. Those are the 69.30s. Oh, here we go. We ain't broke out yet. Ah, man, that tastes good. Cheers. We kind of got a couple of hammers. Uh-oh. Now, what's that tape? Oh, there we go. Nope. It was $350 at the bid, but I won't ask. Okay. Mess around and find out. $340. Nope. Better stop. I'm thinking about buying in, adding on, 280. I know I could have got that. Did a bit more. Give me 440. If you're a rookie, get out now. There it is. Mirror. Oh, go mirrors. think they know I want to sell it. It's not right. See it double top. I should have sold it right there. Off that body right there. AMD recovered. Nvidia. Apple definitely pulled back. Apple. Okie dokie. Uh-oh. What jumped right off that VWAP that time? Tesla's at 402.55, right above 402. We got a double bottom on SPX. SPY. That's interesting. SPY's at a, oh, it was. It was at a good spot. It still is. If it stays right here. Okay. 686.44. We're about to hit it. More drama. I'm going to try a strategy here. Look at tomorrow's calls. On SPY. The 690s. Oh, there it goes. I was triggered. No panic, Jim. No panic. I'm gonna stop everything right now. Okay. It's a close call. I'm proud of that call right there. Although it didn't do nothing. It's triggered. The crowd's going wild here. Boom, baby. Boom, baby. We found support right around 686.36. Tweezer bottom on the 1 minute. I'm not sold on it. I didn't take the trade like an idiot. Let's see if we can. Oh, no. No. Don't take off yet. It's at the 200. Still hasn't broke the 9. I think today's going to be one of them days where you're going to see the perfect play. Probably about the time I cook my steak. Oh. Trying to right now. So these are tomorrow's spies. The 690s. Oh, they were getting close. Now 127. We're about now. I'm doing an experiment. February 24th. And the knife comes. Oh no, should chicken out. Buck, 2. Hot 2. Ugh. Hot 2. Okay, Jim, do it. Buck. Bingo. Okay, Jim's taking a risk. Oh. No, 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 no. There's a lot of puts out, remember last week? I think we're going to earn it here. Better break out. Or get out even. A buck. Now you're talking. You don't mess with me, you dirty rat. I told you. Get back up there. I'll take like a $1.25. These are for next week. Oh man, shoe fly, man. Come on, break the 9. Question was asked today, do we have to pay it back? Do we have to pay what we collected back? Do we have to make new deals? Come on. So we might have more red. I don't think it has much strength. Drama. U.S. factory orders. Oh. The EU halts U.S. trade deal as Trump turmoil creates uncertainty. Trump tariff turmoil. President Trump on the Truth Social says, okay. All right. Let's go. We're at the orb. I need to break it. We're at 21. Oh. triple bottom here. Let's see if we fill another support. EU halts the U.S. trade deal. Very, very good. Uh-oh. I'm going to have to start being a bear here real fast. Come on, US. Big old knife on IWM. I had 260.29 on this baby this weekend. I don't know how far down, if that was the first support or... I got 684.10 for this next one on the SPY. Dun, 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 dun. Take off my shoes. Okay. Google's up $1.15, and TSM and Nvidia, I said it right, AVGO, and the VIX 20.74. And 89 cents. I don't know. I'm doing a exercise here to see if it works or not. I'm gonna find out. I never got into a SPY early. Could have added on there, but I didn't. I'm still watching. If we get a reversal, it'd have been smart. It still could be smart. That are stupid. Oh. Apple cider. Okay. So it's smart on this time. Feel like I'm getting in a trap. So if I bought more 85 cents, which we were there, I don't know if I'd have got them though, but that was the spot. Yep, that'd have been a good one. There it is. Yep. Not much holding it up. Just this kind of channel that failed. Okay. Do something. Do it.
Years running now. So I do think that that's going to keep it yields elevated. And then also, if we look at the rearview mirror, looking at GDP, the economy continues to chug along. So yes, there were the concerns about the government shutdown stripping out some of the potential for GDP or some of the actual for GDP, excuse me. But if you look at the underlying metrics of GDP, the economy still continues to run relatively okay. So really all that means, Sam, is that we do think that there's probably the floor on how much lower treasury yields can go. And I think those are more of the bigger moves combined with Fed policy of where longer term rates could go.
Yeah, it's interesting because I suppose it's a question in the market right now of how low you can go, because as you and I have been discussing for many, many weeks, I mean, there seems to be a floor under just how far we can go here because of what we're seeing in sort of global fixed income markets, but also
687 puts.
long-term inflation. But I mean, there's been a lot of conversations in recent weeks just about how many do hope to go sub 4, but we'll have to wait and see. The other thing I wanted to pick your brains about is just obviously these sort of new credit risk fears in these markets. What are you seeing on that front?
Yeah, there's obviously some jitters in the credit market, starting with kind of concerns over what's happening with private credit. And I think the really big concern is ultimately, is that a one-off or does that spill into other parts of the market and ultimately the public credit markets? So far, if you look at spreads, we're not really seeing a blowout in spreads yet, so it doesn't appear as though the market is signaling that it's a major concern or a major warning out there. But I do think that it is something
so far
going forward. Now our view is for riskier investors, we do
not
still
too much of a hurry to make a lot of big trades.
Corporate bonds and investment grade corporate
Not
bonds.
yet.
So we don't think that investors should ultimately avoid all of those in large tranches. But we do think
Nvidia's
that
out here
for our riskier
on a 20-day
investors, we're
high.
comfortable taking on additional credit risk because although spreads are low,
Nvidia.
yields still remain high. So they are paying attractive levels of income in this point.
We pulled back
We
and
think
hit,
that we'd be a little bit
pulling back
cautious,
on it now.
going forward for some more conservative investors.
Okay, entering the final stretch of February here, you know, obviously time flies when you're having fun, Coop. Just wondering, with everything going on, what's the biggest thing on your radar this week for fixed income?
You know, I think the biggest thing that on the radar this week is to ultimately see what more comes out of the tariff narrative, if there is a big shift in that regard. So I think that that's going to be an interesting thing to come about, and maybe that's something that could really shift. We also have Fed speakers, so I do think getting more clarity about what the path forward for the Fed funds rate or kind of what parts of the economy they're watching is always an important piece.
All right, we're watching. Really appreciate it. Thanks so much for joining us this morning. Cooper Howard there, Director of Fixed Income Research and Strategy, Schwab Financial Research. Coming up, it's time for the morning trade. And what company will we be looking at? We will be looking at Alphabet.
Still got my practice for tomorrow.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Always
Whether you're an
clean.
experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I got 684.10 for my next support. If we hit
The
it.
most iconic trading floor in the world. This is Opening Bell with Nicole.
And SPY.
Live on the floor of the New York Stock Exchange.
I'll be right back.
The countdown, the setups, the
Oh.
stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back for Morning Trade Live. Let's focus on Alphabet. This stock is the clear outperformer in the Mag 7 over the last 12 months. The parent company of Google is up more than 75% year over year. The only other Mag 7 that's up more than 30% during that time frame is Nvidia. Meta, Microsoft, and Amazon are all down in the last 12 months, and we are trading higher on Google right now to the tune of 0.2% at $315 and change. So that is the focus of Morning Trade. Joining us now for a closer look at this name is Jenny Horn. Very good morning to you, Jenny. Hope you had a nice weekend and staying warm there. Wells Fargo upgrading Alphabet this morning, raising the price target. Just talk us through what exactly went behind this call.
Well, I will say Wells Fargo highlighting the fact that, first of all, a $387 price tag is optimistic, but they did note that Alphabet has this leadership position in the three key traits of an AI, for being an AI winner, which is customer data, distribution, as well as compute capacity. And so they did say that their capacity analysis confirms Alphabet has an opportunity to exploit data and distribution advantages for these consumer and enterprise AI products. They also did highlight the fact that Project Google does expand their compute capacity to 35 gigawatts by 2028 from 15 gigawatts that they had just at the end of 2025, which then extends their lead relative to some of the hyperscaler peers that they see. So overall, highlighting that capacity is king. We've definitely known that to be true as we've really dissected a lot of these hyperscalers that frankly have not been quite as resilient as Alphabet has been in the last, 12 months, as you pointed out, but really in the last back half of the year. So Alphabet is really, if you look overall, one of the highest conviction large cap ideas amongst analysts, as we've seen improving earnings revisions, AI strengthening, not threatening its ad model, and less regulatory downside as we approach the rest of 2026. So consensus I was seeing was still strong buy, or definitely buy leaning. The average price targets right now fall between roughly $350 to $370 a share, which does imply roughly 10 to 20% upside from where we closed last week. And so no meaningful sell ratings. And again, 387 is where now Wells upgraded shares to, so that would actually be even more optimistic than the bulk of analysts that are already fairly optimistic on Alphabet shares, Sam.
Yeah, they certainly have been, but as we saw post-earnings, I mean, this stock had come off quite considerably on some of the capex indigestion that we'd seen. It was $185 billion that they sort of penciled in for 2026. But it's interesting with this note, Wells Fargo, as you say, is really narrowing it down to being capacity that they say is king right now. And I suppose Google Alphabet is very much seen as having a lot more spending discipline, maybe than some of the others, but also these sort of more advanced AI partnerships as well. I did see that Wells did actually lower the price target on Amazon. They were been talking about, you know, the capacity here as well. Meta actually got a price target bump from this, but what are you seeing as far as the Mag 7 performance, particularly post-earnings, as we head into obviously what we're going to be getting from NVIDIA, as to how things are shaking out for some of these big names?
I will say that it does seem overwhelmingly so. Like the bearish theme, we could say, for all of these names, frankly, is the heavy AI capex spend that could at least limit or just dampen some of the near-term margin expansion. And so Alphabet has been a steady compounder, not a true like AI trade like NVIDIA, but I think that's important, right? I mean, I think that the de-risk to be so heavily tied to being an AI performer is not necessarily a bad thing. I mean, we saw actually last week Apple traded at its lowest correlation to the NASDAQ 100 that we've seen now in almost 2 decades. And so I don't think that that's necessarily a bad thing. For a name like Alphabet in particular, you have so many areas of revenue that are outside of just that Google Cloud. I know it's like there's a fine line between what does the market care about and what does, you know, us as consumers frankly care about, and we tend to pay more attention to what the market cares about, which is their cloud. But the difference between Alphabet and its cloud capacity and say like I would put Alphabet as well as Amazon in the same bucket, Meta's a bit different because Meta's capacity is only for Meta, whereas other major enterprises rent from say a name like Alphabet or Amazon, which I do think adds a bit more resiliency, not as of late, but in more the long-term picture for Alphabet.
Yeah, something to look at. We've just actually dipped lower on Google Alphabet this morning, but let's wait and see. Jenny, thanks so much for joining us this morning and getting us across some of the details there. Let's trade it now with Charles Moon, stock strategist at Prosper Trading Academy. Very good morning to you, Charles. How are you approaching your
No drama.
for Google this morning?
A lot more short term.
Yesterday's low.
Touch and go, and still remains that way as long as
Yesterday's after hours.
We're rattling towards Iran, and this is kind of the cloud that's been hanging over the markets. Initially, it was the SCOTUS opinion with tariffs. We're still kind of dealing with the fallout, and the market's trying to digest that information that came out Friday. But right now, it seems that, you know, things are a little bit more bearish across the board versus bullish. We've been kind of bouncing back and forth in this volatility. The VIX remains above 20, so I like keeping things short term. I'm looking at Google as a fade right now. As long as they remain below 320, I think it's a short. So
That yin yang right there.
Option, March 2nd, I'm looking at the 315 puts, trying to buy them at 525 or lower. I think the risk shouldn't be more than 50%. I think the initial
Google puts
taken at 50%, but if they roll over underneath 310 in the near term, they could just start breaking down to $300. We've seen a lot of these tech names kind of get the fade, the reversion plays. We used to be in a buy the dip market, and it just kind of, you know, we were getting this little, you know, more macro negative outlook on tech, especially with companies that have had higher capex expenditures. Amazon's gotten severely punished, and, you know, Google's held up relatively well, but in this environment, resistance is going to play a lot more prominent role than support role.
All right, thoughts in the market this morning? We've got the Dow almost down about 700 points. Obviously, we've got Mother Nature, we've got Iran, we've got AI disruption fears, credit risk concerns as well. I suppose it all makes sense, not to mention, obviously, with the tariff uncertainty and that remaining elevated. What are your thoughts this morning?
Yeah, that's exactly what we're seeing. You know, I was just looking at the financials. They're getting rolled over pretty hard today. They're probably the biggest wave on the Dow right now, with JP Morgan and Visa down quite a bit here. And we're seeing fiduciary services as well working lower. So it's a very, very broad reaction in financials. You know, the tech concern still remains, you know, very prominent. We saw cybersecurity names turn down on Friday on the Anthropic news, and, you know, we're seeing a little bit more demand for precious metals and, you know, some of these consumer staples it's a big reason why Walmart's been such an outperformer. Apple today is showing a lot of strength, but you know, names like Procter & Gamble, when I turn to them and I see they're up and the markets are down, it just seems like a bit of flight to safety. The market's just looking anywhere to, you know, at least play out a hedge or to look to take opportunities. So, you know, the overhang of the markets is all about news right now. The market's going to react to news, and as long as the VIX tries to remain above 20, you know, the buyers have to be really careful in the near term here.
Yeah, and an aggressive sell-off very much in software continues today as well. I mean, stocks down 7, 6, 8% as well, as we can see across the board. Charles, really appreciate it. Thanks so much for joining us today. That is Charles Moon, their stock strategist at Prosper Trading Academy. Coming up, we'll take a closer look at how the rest of the world is reacting to the Supreme Court's overturning of the Trump administration's sweeping tariffs. Morning Trade Live will be right back.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Line. Let's turn our attention now to international markets. The reaction to the latest tariff developments. We're seeing a more cautious start to the week for European equities. European trade deals struck with the US could now be in question. After reports the EU is set to halt the ratification process as it awaits more clarity on President Trump's new tariffs, political groups in the European Parliament have reportedly said they'll suspend legislative work on approving the deal for now. The Stock 600 have pulled back on the news. We're seeing the DAX lower, but the FTSE 100 is hanging in there. So is the French CAC right now. Out in Asia, traders largely looking past the trade uncertainty. The South Korean Kospi hit another record overnight before pairing those gains. The index climbing over 5,900 in the session, about a month after crossing the 5K mark for the first time ever. Over in Hong Kong, the Hang Seng Index rallying 2.5% to over 27,000 overnight, thanks to a rebound in tech. Mining companies also gained on high commodities prices. We're seeing the Hang Seng Index up 2.5%. India's Nifty 50 put on 0.5%. China and India are said to be among the winners from the Supreme Court's decision to knock down those Trump tariffs. Mainland China markets remain shut for the Lunar New Year. Japan is also closed today for a market holiday. We're seeing MSCI India ETF down 1.3% right now. All right, let's keep the international focus going. Joining us now, very pleased to say, across the pond is Richard Flynn, Managing Director of Charles Schwab UK. Richard, thanks so much for joining us. So what's your reaction as far as where you sit to what we saw, given, of course, now we've got the Europeans trade deal a bit in limbo with some of the developments coming out of the EU. Just talk us through your thinking here.
Yeah, morning, Sam. You know, every couple of weeks I come and join you to talk about what's happening in the UK and Europe, and it feels every time we're actually talking about Washington, which is the key driver behind nearly everything that's happening over here. You know, what we saw over the weekend was probably priced in, which is why, as you just said, markets have been a little bit muted this morning in Europe. The EU has been pretty strong. I think they felt that that Supreme Court decision was likely to come, and has said in no uncertain terms that, you know, they will effectively declare null and void the initial conversations and agreements that were made in the over the few months following Liberation Day last year. The UK government has just said exactly the same thing as well, which just leads to continued uncertainty, not just from a macroeconomic point of view, but also for the companies whose exports were going to be subject to those agreements, whether they're automotive manufacturers or whiskey exporters. A lot of companies now just, you know, have continued uncertainty about this 15% tariff, which I think can only last for 150 days, so 6 months will go by pretty quickly, and the uncertainty will continue.
Yeah, it seems uncertainty is remaining elevated at this stage, so we're just waiting to see, you know, where everything lands. But let's just not talk about Washington. Just park that aside there for the sake of this rest of the conversation now, Richard. You know, we woke up on Friday morning before we got that Q4 GDP print here in the US, and of course the PCE data with some pretty good numbers out of the Eurozone, particularly when you look at those PMIs. I mean, manufacturing left out some traction. I think that was thanks to some pretty good numbers as far as German activity was concerned. I mean, I was looking at that record UK budget surplus as well. UK retail sales were holding up. Not to mention out in Asia, you had that Japan inflation as well. Just talk us through how these economies are faring right now internationally, broadly across Europe, and then we can dig into the specifics about the UK in a minute.
Yeah, there is a lot of data which is coming out, which is better than expected. And you know, as Liz Ann Saunders talks about a lot for Schwab clients, you know, better or worse is more relevant to the market than good or bad. And so when you see those numbers coming through, it will generally be a bit of a fillip for European market investors. But looking at the UK and looking at the EU or the Eurozone, I think interest rate policy is really going to be driven by jobs numbers and inflation. And what we've seen today, the UK CPI is down to 3%, which is down from 3.4. So core inflation is pushing down pretty nicely over here in the UK. In the US, even though it's lower, closer to that 2% target, core inflation is still a bit sticky. And so that's why the Fed has decided, or is at the moment, continuing to keep rates pretty high. March, we're expecting to see a rate drop in the UK. The Bank of England is likely to drop rates in its March meeting. And while the Eurozone had seemingly come to the end of its easing cycle, now, again, increased unemployment figures and falling inflation could well do their job for them. So those numbers are really key drivers at the moment, and actually shows a bit of a contrast between markets over here and the US economy.
I suppose Reeves could take some comfort in what we got on Friday, particularly with respect to some of that economic data, but also, of course, that record budget surplus. Just talk to us about the specifics of that and you know, whether it can last.
Yeah, well, I guess the big challenge, again, it comes back down to uncertainty. You know, there's an awful lot of uncertainty which is going to feed into employers' decisions around capital investment and increasing jobs. One interesting piece of data which came out in the UK this week, unemployment is at a high, 5.2%, which is a 5-year high, but also the volume of open jobs dropped to below 700,000. And that number was 16% lower than the previous year's equivalent, and has been driven primarily by AI replacing those low-paid jobs, entry-level jobs. Now, the UK isn't the first country to see the impact of that, but I think it's something that we're likely to see in most developed economies, you know, over the next 12 months. And the big question from a global investment point of view is, what's the impact going to be on an economy like China when AI starts taking those jobs, and what will happen to consumer confidence, to retail spending, to all of those important data points which really drive economic decision making.
Okay, we'll be keeping an eye on it. Richard, really appreciate it. Thanks so much for joining us today. That's
Cheers,
Richard Wynn there, Managing Director at Charles Schwab UK. Take you next time. Coming up, it's time for Inside Out. We'll take a closer look at Domino's after earnings and bring you an example trade when morning trade right returns.
Hey, investors, you know the market moves. and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor?
We're about to hit that second
Our
support.
webcast series breaks down different investing styles.
683.19.
Value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back here on Morning Trade Live. Domino's is trading high this morning after earnings and hiking its dividend at 15% to $1.99 a share. Here's where the three biggest publicly traded future chains are trading this morning after that report. We were all higher across the board. Domino's is up 3% right now. Papa John's is up 3.5%. Young Brands 1.2%. Don't know if the weather has something to do with that. All these people working from home, kids not at school. I don't know. Just saying. All right, let's go inside out on Domino's earnings. Joining us now is Nick Secchia, who's the Managing Director of Restaurants Equity Research at Mizuho. Nick, hope you're keeping warm. Just talk us through the quarter here, of course, fresh out of the oven with these earnings. I do see that you did have a $500 price target going into this report. Just talk us through your thinking here.
Sure. Look, in an environment where there's not a lot of visibility, Domino's continually delivers, positive traffic share gains. You pretty much have that 3%, comp growth domestically in the U.S. You can count on that, quarter in, quarter out. And so, to me, that should be worth the premium. We got the same again, 3.7% same-store sales growth, in the U.S. in Q4, 3% guidance for the year in 2026, which was above, consensus and even lower by peers.
Okay, I mean, how does this one stack up against the rest? I mean, we just saw the performance of the others. I mean, all up in trade today. But, I mean, what is this one doing right? What is it not doing right? Because, it seems that it's very much about the value-hungry consumer right now.
Yeah, Domino's is uniquely positioned versus, the other big pizza chains, Pizza and Papa John's. In that it can take market share by focusing on value while growing the dollar profitability of their franchisees. They own the supply chain and the share the profitability of essentially selling the dough. So volume growth is the key metric for both corporate and the franchisees. Unlike the other two, right? The other two, when they continue to lower prices or stay in a low price environment, the franchisee's profitability remains under pressure for longer, whereas Domino's can actually grow profits. The Domino's franchisee can actually, grow profits even with this, hyper value focus.
Yeah, I mean, as we can see on this chart here, the stock has been coming off, but we've got a nice little bounce now. It looks like we're seeing a bit of recovery here. I'm just wondering, what about international as far as global growth is concerned, expanding that footprint outside of the West? Because I know that it seems like they have been gaining some market share, particularly in international markets. Just talk us through what you're seeing there.
Obviously, internationally there's a lot of different markets. China, India are the two big growth markets for them. The business continues to grow uninterrupted in those two big key markets. Western Europe, Japan, a little bit more under pressure, but we're probably in sort of the 8th or 9th inning of the turnaround there. So it does seem like even those markets are poised to now accelerate in 2026 and beyond. So, some headaches over the past couple of years in some of the international markets. Seems like those headaches are now going away as well.
Yeah, ironing some things out. Looks like the stock is being rewarded today, nonetheless. Really appreciate it. We've got to wrap it up there. That is Nick Seppian, Managing Director of Restaurants Equity Research over at Mizuho for Let's Trade this name now with George Sellers, Senior Markets Correspondent. Very good morning to you, George. So Domino's, an example trade for us this morning.
Well, I think the overall report was quite good if you look at the context of same-store sales and, of course, the dividend that they increased in terms of payouts. I think if you look at price action over the last year, the stock has actually been down, but one of these you'll notice is on an intraday basis, it's coming off the highs by about $20. It was trading essentially around $414 not too long ago. But if you look at price action on a weekly basis, it seems to be nesting back above its 200-week moving average. So I'm going to use that as a proxy of support when I structure this trade going forward. So I'm going to essentially use that as a benchline or a shelf of price. If you look at the March contract of 25 days, you can look at selling a put spread because spreads are relatively wide and the volume in the stock is not very high. So I'm going to sell essentially $380 put, then buy the 370 put below that. So altogether, it's a $10 wide spread that you can earn about $2.50 a share or $200 a contract on. So the whole premise behind the trade is price maintenance above the $380 level between now and expiration, and that premium of 250 will erode to zero. You have to consider the probabilities here that the delta on that 380 put where you sell has a 27 delta, which implies a 73% probability of profits and about a 33% return on risk. Now the risk is $7.50 a share, assuming the stock hits the 370 or lower by expiration. So the whole premise of the trade is we can drift another $15 to the downside from about here and still become fully profitable, but you have to consider that the full risk is if it hits 370 or lower by expiration. All of this is contingent upon essentially holding, like I said, that 200-week moving average, which it could do considering, again, the report was rather good, and there's not a lot of trading volume as a result either.
Okay, good to know. Really appreciate it, George. Thanks for the example trade on us. This one, Domino's today trading up 3% off the back of its strong quarter there, off the back of its report card. Let's just check in with these markets where things stand right now, because the Dow's at about 700 or so points right now, with the S&P 500 trailing by about 1%, as we can see here, down 66 points as we have a degree of caution in these markets. The Nasdaq, the Dow, the Russell, all down over 1% in trade right now. So obviously we are contending with some of these.
We are getting there.
Some of the uncertainty caused around the tariff policy.
I'm gonna give it one more shot.
Eyes on the geopolitics. We've got some of the credit risk concerns in these markets, as well as we have got software very much under pressure as well. The IGV down almost 5% as we stand. All right, that's going to do it for us here at Morning Trade Live. Thanks so much for joining us. I'm Sam Bartas. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. We've got Trading 360 coming up next. Have a great rest of your trading day. Stay warm.
Schwab Bank Investor Checking, the checking account built for investors.
What's that?
Highest in client satisfaction
taking a
by
shot at
J.D.
you.
Power for 7 years in a row.
Take a shot at me.
Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investor.
682.01. I have on the SPY. Okay, I just cooked a juicy ribeye. Sophie, bye-bye. I had support on it last night. We're at 682.01. On the SPY. Hmm. 1789 what I had. We just hit 1701. Oklo was another one. I want to see if it held. Push the other way. Let's see what Tesla's doing. Got 401, my employee number. My lucky employee number. Man, Jim, you're cool. You get to eat ribeye steak, trade stocks. Whoa. Looks like SPX has added another one of my supports, but I don't know which one it is. Oh, just broke it. Ah, it's that one. Oh yeah, much better. Down, down, down. We were calling them puts out the other night, Friday, Thursday. Mm-hmm. Uh-oh. There it is. The next one. We finish it off with 3 Black Crows. It's 3 minutes after 11 Eastern time. And I'm going to cut up a ribeye right here. So I'm at another one of my support levels on 5. $69.0. No, gotta go higher than that. Lord. Got way up there. Too expensive. $68.90s. $68.75s. Let's go. We got Dragonfly on Doji and Roy on the /ES. The bottom. Yeah, I screwed up twice. I don't want. This last one's got to count. Man. Tariff worries. Nip $3. $68.75s. This is on the 5 minute. And on the 1 minute /ES, we got a doji and a long leg doji. Dun 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 dun. Let WM keep going down. All of them going down. $68.75s for today. The SPXs, I'm watching them at $3.10 to $1. The 68.70, there they are, $3. $3. Hello.
Really appreciate you taking the time to be with us this morning. Always great to have you on the show. Ted
Marley
at Bright Lake Wealth Management. And we've got plenty more for you today on Trading 360.
What do you got, baby?
Next, we've got the big three coming your way. 3 stocks, 3 charts, 3 trades. Mr. Cat will take us through the technicals. Scott Bauer will take us through the trades for JP Morgan Chase, SanDisk, and the 20-year Treasury Bond ETF. That's next on Trading 360 on Schwab Network.
I'm excited. 68.70s at $3.50. Oh no, will it go? What kind of steak are you eating, James? I'm eating ribeye from the Harder House. $68.70s, yeah.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange.
We're now at 320.
The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right where it counts.
What time, baby?
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies. Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got
There's Marley.
3 charts, 3 trades. Rick Ducat will take us through the charts as usual. Here to take us through the trades is Scott Bauer, the CEO at Prosper Trading Academy. Great to have you both with us. Scott, thanks for being with us to start the week. Would love to hear your thoughts on how the markets are starting the week.
Yeah, it's pretty tough.
You put your jinx on it, Marley.
Again, around tariff talk, it's not. I would say it's not as volatile yet as Liberation Day was, but there's certainly a ton of uncertainty. So
let's sell off on the 5-minute.
Uncertainty, and that's why we're seeing the VIX rising and the market, really just selling off, because when people panic, people are uncertain. What do they do first? They sell.
Sell.
Well,
right,
they sell
let's
gold.
talk about this first trade here, and if it involves you selling anything here. We're talking
There's a
about
joke.
JP Morgan Chase. Excuse me. Walk us through that pick.
No, I'm actually very bullish in JP Morgan, especially down here. The stock is really right at the 200-day moving average, which, if there's ever been a support area for JP Morgan, it is this 200-day moving average.
Oh, it is? The 200-day.
A Texas hedge, which is kind of.
They actually said it.
Talk. What it means is, in this case, it's an uber bullish trade. So I am buying the March 20th expiration 310-320 call spread. I'm selling the March 20th expiration 290-285 put spread to help finance some of that call spread. So I can do that somewhere in the range of $1 or $1.25. My max risk for this would be if the stock is below 285 at March expiration. But, I look at these technicals. I also look at the fundamentals of what's going on here. And this, to me, looks like a ripe opportunity in JP Morgan.
All right, Rick, so as we look at the technicals for JP Morgan, are you also seeing the potential for a ripe opportunity? They are trading lower on the year so far.
JP Morgan looks good.
We have our eye on some pretty similar price levels. First, I have 292 highlighted to the downside more specifically here.
292?
Needed low point there, bottoming out there 3 separate times here. So roughly, 290 is a notable downside area to watch out for. Then to think about that 320 area, 318 to 322 is our green line here, and then our red line as well. So we saw that this kind of zone here, we saw price
Man,
frequently
come
stop
on.
in this area. It
You
was
can do
often
better
a
than that.
source of support or resistance here.
That ain't it.
Where we topped out again most recently. So kind of a similar boundaries
Rick.
that Scott and I both
Get
had
an
our
F.
eye on here. To kind of dive into the chart a little bit more.
God.
Overall,
He's gonna
our
dive in
upward
it.
sloping channel here is on the verge of being broken here. The day's still pretty young, but we are starting to dip below
Oh,
that
got a little
300
flag.
level. We haven't really made any kind of significant
Descending
new
triangle.
relative lows beyond our previous low points here. But
Descending
we are breaking
flag.
below that 300 level as well as our trend line there. We can also see that our downward sloping trend line beginning with those highs near 337. We are still seeing
Got a
that
head and
now.
shoulders.
So you could kind of argue it's starting to form into a symmetrical triangle type shape here.
No,
if we do start to recover and if price moves
No.
back within those boundaries, that could be something to
No, it's
consider.
not.
So now, if we look at our moving averages,
Descending
our,
triangle.
3 shorter-term moving averages are right on top of each other. They're starting to accelerate to the downside more. So this area near 305 to 310, that's where these 3 separate indicators are all lining up together. I don't have the 200 SMA, but we do have our 251.
You don't have your 200 SMA?
Yearly long-term moving
What
average
kind of person?
289. So another idea to consider
Rick.
to help inform your trading. RSI starting to break to the downside. Green trend line being broken. We are below the 50 midline once again here. So that would be something worth noting if price and RSI both start making new relative lows. Finally here, volume profile. Quite a bit of heavy activity areas here, but one that stands out right about here, our borderline to the downside would be roughly 303 to 297 or so, right about this here. And then 289 to 294 would be this area as well. So some points of heavy trading activity to consider. Meanwhile, 308, our point of control, the heaviest area of all.
Oh, come on. You're
Right
way
now, we
off.
are trading at 297.11 for JP Morgan Chase and underperforming the markets more broadly, trading down about 7%
Okay.
right now. Now, your next pick, Scott, couldn't have a more different chart. Sam.
Yeah, let's look at this.
Percent, I think, in the last year, up, I think, close to 200% just this year. Top performer on the S&P. Are you still bullish even with those giant numbers?
Yes.
You know, probably in the long term, I'd say yes, but in the short run,
Ooh.
I think this move that we're seeing, just this, one-sided volatile move to the
How dare
upside
you.
is way too much, too quickly. I know earnings were really good. The sector is hot. I'm just looking for some reversion to the mean here. So I'm going out a couple weeks, March 6th. I'm buying the 625, 600 put spread.
Oh.
Probably pay somewhere in the range of
Put spread.
$6, $7 for that, depending on where you get in. And
Okay.
again, this is not maybe an indictment.
I disagree with both these fruitcakes. I believe that if the 200 EMA is very important on the daily, and it is creating a descending triangle. That means it could pull back. But also, you're at the sweet spot of any triangle, which is the number 3. So if you can count to 3, you can trade with me. And that's off the 200 EMA. Let's see what this meathead wants.
695 roughly. We're approaching that point.
SNDK.
Out of this, symmetrical triangle type shape, kind of wide,
overbought.
dispersed range there, but kind of converging toward each other. We've now pushed out to the upside. So kind of this bull flag, bull pennant type of price
It's kind of
activity
bullshit.
here, where you have a very sharp rally to the
Oops,
upside.
sorry
a
about
brief
that.
period of sideways to
Overbought.
downward consolidation, and then the hope is, if you are bullish, for example, that the trend would then break above those initial
Okay.
highs and continue on in that
I'll be right
direction
back.
here.
I'm
So
gonna get mad.
725 was the intraday high, even that quite a good bit beyond that closing high as well here. Some other notable points to the downside: 572 a relative low, 541 around where we had another low point just beyond that as well. So when we look at our moving averages, our 5
Little reversal here, 68, 70s.
Here, 641 lines up pretty closely with our old trend line here. So we're starting to break above this notable point.
We're still not above the 9.
Moving averages are still diverging farther apart.
If we break above the 9, we move much higher.
Contracting and for price to start closing below RSI. Breaking out very modestly to the upside from its downward sloping RSI trend line here, but not in the overbought area yet.
No, that's a stake.
The overbought area, a movement into that region above 70 in a trending market is typically viewed as being more of a bullish sign. Finally, our notable volume areas here.
I think we can go break out here soon.
About
watch it close.
To 620,
68,
and then a
70s.
much smaller one here, 465 to 513. Those are kind of the standout heavy trading activity areas here. Notice though, many volume spikes, very heavy overall activity in this name in recent weeks.
All right, and as you look, even with the markets down today, SanDisk still moving about 4.5% higher here, trading at 679.43 right now. Now, your last pick here, we've moved into an ETF, Scott. We're talking about the 20-plus year Treasury bond ETF. Take us through this one and if you're bullish or bearish.
Sure. So in TLT, which, as you mentioned, is the ETF for the 20-year bond, I'm actually bullish, which means that I believe rates are moving lower in the future. So works inversely, just like rates and the price of bonds are inverted to one another. So I'm buying the March expiration 90 strike calls. So we're right at what, 80, 89, 80 almost right now. These are the 90 calls, pay 75 cents, and this would pay off if we do see rates start to move lower. Now I know we're not going to see another Fed announcement for a while here, but just given the overall macro landscape here and kind of with the 10-year touching last week down almost under 4%. If we approach that again, these calls should come in handy.
All right, Rick. So might we approach that again?
Well, we have our eye on a similar level once again here. The 90 level seems like a standout potential breakout point here because it lines up roughly with where our gap to the downside began. We also tested that area just about a few days ago, a few sessions ago here. We didn't quite manage to close above it, but now we're approaching that same point again. So the gap has been filled. Price has had a very sharp upside move here, so that seems like a potential breakout point to consider if you did have a bullish outlook here. Overall, though, longer-term trend line sloping down here in white, connecting those old highs near 94 with these lower subsequent highs there. So the trend line in question could be something else to consider if we start moving further to the upside here. To the downside, 89, we can see that was our old high point. That was where our gap began after it moved lower, and that's about where we saw some support more recently here. When we do look at our moving averages, once again, our faster 5-day EMA has made a very quick recovery above its slower moving counterparts here, so things are still accelerating more to the upside. You can also see that recently our orange 251-day EMA near 89 was supportive here, so our longer term moving average held the line there, so look to see if it can be another source of support going forward here. It seems like that could also be a potential breakdown point to the downside here. RSI slowing down somewhat though, still trending upward, but our shorter term trend line has been broken in this case. When we do look at volume profile, the heavy volume areas, we are within one right here between about 89 to 90 roughly. So if we do keep moving higher, 91 to 91.5, kind of a very narrow range there. Perhaps would be another area of interest due to the heavy trading activity. To the downside, 88 is where things really start to pick up again. 87.30 is our point of control.
Now we're trading just below the value of that 90 call right now at 89.87, up about 0.5% today for this ETF. Scott, we want to thank you for being with us today for Big Three and for bringing those picks to us. Scott Bauer, CEO of Prosper Trading Academy, and of course Rick Ducat, our lead market technician, for always breaking down the technicals for us. Coming up next, we're going to spotlight AI disruption and how the market is repricing tech.
Man. Sometimes, you could have done better.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com,
Well, it broke out.
Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Stay connected to what moves the market.
We're at the
Download
50
Schwab
SMA
Network
right
app
now.
and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the market's repricing of AI. Joining us now, Bart Smith, Managing Director and Partner at Performance Trust Capital Partners. Bart, thank you for taking the time to be with us this morning. We continue to talk about this AI disruption. Last week, we saw a great deal of volatility across multiple sectors tied to the potential of AI disruption in each of those sectors. From your viewpoint, was that just a positioning shakeout, or do you think that this is the start of a longer-term market repricing?
Yeah, well, first of all, thank you for having me. I do think that volatility is going to continue. From an investor standpoint, I believe we're moving from a period of AI hype to an area of AI reality. We all agree on the power of AI, but the question is, when will the integration happen? How is it going to happen? And who are the winners and losers in this ultimate end game? I think all those questions are far from decided. So as businesses gain clarity on how to actually use AI, and they begin reporting accurately on how they're using it, which frankly is a bit of a problem at the moment. I think when all that is fleshed out, I think we'll have better information to make better investment decisions. Until that happens, unfortunately, we're a good bit away from that happening. The short-term guessing and volatility will continue.
There's so many unanswered questions tied to that, and I think that's where some of the fear may be stemming from. But as far as from the investor perspective, where do you think investors are still underestimating AI?
We're not underestimating shit.
We've certainly seen moments where it may have
We're on top of the world.
These knee-jerk reactions and then these pullbacks that we're seeing. But where are we underestimating the potential impact?
I'm not.
Well, that's a good question.
Speak for yourself,
I
girl.
think we're much more on AI is going to be a dramatic disruptor than AI is going to be something that's actually useful to different companies. I think that's what we're looking at. And I think the companies are going to kind of come out of this from enablers. AI enablers who can help companies to solve real solutions are the ones that are going to do well. Kind of going into kind of deep dystopian views of where the industry moves in AI is not, I think, the right way to think about it. But it's very difficult. And even Bank of America reports last week from leaked emails between NVIDIA and Bank of America. They kind of likened the AI that they're using to be a Formula One race car, and the people who are using it to be kind of local mechanics. So I think we still have an integration.
That's a good one.
We have things that really need to be flushed out. And at the moment, it's very difficult to
I'm watching the 6870s.
Let's talk about Bank banking. You know, we saw those emails.
I see it hold
the
to
big
63.
conversation about, you know, is it going to be a headwind? Is it going to be a tailwind here?
Marley.
As far as the banking industry, do you
told you not to
view
ask that
AI
question.
as more of a threat to traditional banks, or is it potentially a productivity tailwind that could actually boost margins in the long run?
Yeah.
Can't trust you.
I don't think AI has much to do with current bank stock valuations. I don't know it's going to have much to do about it in the future. When you look at what's driving bank valuations, they're down a little bit today. But what kind of pushed them up a little bit was a steepening yield curve, easing economic issues, and improved regulatory outlook, and the potential for resurgence in M&A. All those things are the things that really are the drivers of value in the banking space. When you look at banks in particular and how they make money, they already are running very efficiently.
Oh, they are?
Banks have net overhead that's less than 2% of their
Yeah,
assets.
look at the interest
And
rates.
The largest companies have net overhead that's below 1% of their assets. So the idea that AI is going to generate mass efficiencies to reduce those numbers, I don't know that that's realistic. There's a much bigger earnings and value opportunity in banks with or without AI from managing interest rates and allocating capital effectively. That's where banks make their money. So,
Oh, you think
if
so?
AI can help with that,
Interest rates.
instead of just operational efficiencies, I think that's where we see great value. But in the near term, AI and the efficiency story in banks is difficult to show a really big impact.
And how about more in the regional banks, Bart? You know, with the bigger banks, you know, their
We're
efficiencies are
stair-stepping.
different. But in the regional banks, how much of a
It's
role
time.
can AI potentially play? We've seen them have a nice bounce in February. They're not seeming to respond to a lot of these
I'm
AI
giving it a
fears.
shot.
Is that bounce what we're seeing? Is that in response to
68.40.
rates and credit
Thank you.
trends, balance sheet repair? Is that what we're seeing? Or is there potentially some more
Shut up.
AI optimism for the regional smaller banks?
I'm trading now, Marley. Oh, look what she did. We need this to hold right here, please. Squeeze between the 9 and the 63. Come on. Don't look like it. Gotta do it. Squeezing. Back to even. Blake. Will you break it? I'm about done. Very good. Could be all she had.
Experienced investor
No.
or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis
Okie
webcast
dokie.
series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. It's time now for the disruptors. Joining us, George Tillis, our senior markets correspondent, here with today's company, Alphabet,
George.
after getting an upgrade at Wells Fargo. George, I'm taking a look. Alphabet just trading slightly lower on the day, down about 0.4%,
Oh.
but certainly performing better than the broader market is. What specifically is cited in this note about the reason for the upgrade? And I see they have a price target hike as well.
Yeah, I think it's a good point to bring up, Marley. Initially, if you look at price action with Google relative to markets, it is performing better. So I think there's essentially some pullback that we've seen in the name. And again, if you look at their comprehensive platform, it's just tremendous across all of its ecosystem.
How special is it, George?
YouTube has done extremely well. They have the two largest search engines. AI with Gemini has really caught up with other major platforms like OpenAI, ChatGPT, and even Anthropic. So there seems to be really a threefold leadership in the AI race, at least from a software standpoint. And Google's Gemini is right there and really locked in. And they're actually gaining now subscription revenue from that particular business as well. But if you look at Wells Fargo, they're still constructively bullish on the name. They increased their price target to 387 from 354. They, of course, increased their rating to overweight from equal weight. And they're looking at this threefold area transition growth that Google is going into. One, they certainly have a monopoly on customer data. Two, the distribution of their platforms is becoming widespread globally. And the computing capacity that they're increasing the spend on has been tremendous in the last year. And they actually see a lot of growth in the computing capacity, not to mention the hardware elements of their business with semiconductor chips called TPUs that they've been selling in the marketplace to compete with companies like Broadcom.
I think I said that the other day about
the integrated circuit space. But nonetheless,
takeover from
if you
PayPal.
look at the capital expenditures for Google relative to last year, 2025, in 2026, they're estimated to increase their spending
That's
to
interesting.
$180 billion from $91 billion
Ain't it?
last year.
Say yes.
Which puts that capex to ratio to sales around 46%, which is actually more in line.
Does anybody remember me saying that last week? Or a couple weeks ago? Takeover? Tony remembers. Or is he saying yep to what I'm saying? Probably not. Woo! That's a good one. Sheba remembers. Somebody better remember. That's what I thought. I remember, Jim. You said it. Marley. Seeing a lot of stuff you're not supposed to be talking about.
Are they going to have to start showing ROI to start seeing more positive price action in response to this CapEx spend?
Another good
Well,
question.
That's one thing I'll point out here, Marley, on what I think is happening. I do think that Google is facing some competitive ad challenges now, and that comes from OpenAI. In fact, OpenAI is now advertising on their platform. So I think that's maybe why one of the reasons why we're seeing some short-term weakness in the name with Google, if you will. I do think that, you know, if there's some alleviation of tariffs after there was an escalation last week, you know, communication services, discretionary names will probably pick up first because advertising, of course, is tied into consumer spending. So I think that's something to keep in mind from a bullish catalyst. But nonetheless, I think Google, if you look at Apple, using Gemini as one of the premier AI constituent platform integrations. So I think that gives you an idea that even Apple is using Gemini's AI technologies, gives you an idea that Google's, you know, providing promising technologies and confidence in the business, because it's not necessarily a business that's growing based on hope of revenue. They are generating tremendous amounts of revenue, $400 billion on a trailing 4-quarter basis, versus ChatGPT or OpenAI, which again is still losing money.
Yeah, and that's a great point that you bring up there too. But you know, knowing year to date, just sort of performing flat, but having been the top performer in 25, how would you structure an example trade for Alphabet right now, George?
Yeah. So I think, look, the market's it's been on edge. It's been in a trading range. It's been a very difficult market. So with the volatility above 20, I'm going to sell premium. So that's something we have to keep in mind from a strategic standpoint. And if you look at Google, it seems to be now respecting the 100-day moving average. So for what it's worth, I'm going to use that as a shelf or a proxy of support. So again, I'm going to basically look at selling a March put, just cash secured put, very simple. 295 put. Now altogether you could sell it for about $5 a share, $500 a contract. So the whole premise behind the trade is price maintenance at the 295 level by expiration, to which point that $5 premium will roll to zero. Now, if you do get assigned shares at 295 or lower, your cost basis on the trade would essentially be $290, which essentially also, you know, gives us about a 7.5% wiggle room to the downside in terms of price. So it allows us to buy shares at a lower price if it does go lower, but if it not, you're earning about 1.7% yield to strike price
George,
for 25 days.
That ain't good.
And lastly, the probabilities make sense too, because the delta on these options are approximately 27, which implies a 73% probability of profits, or in other words, you could look at it as 73% probability that the stock will, the option will expire with the stock above the 295 strike.
All right, and right now Alphabet trading at 314, just about on the heels of this note, trading down about 0.3%, but better than the broader market performing today. George, thanks for being with us for Disruptor today. That's George Tillis, our senior markets correspondent here on the network. Coming up next, it's time for our 360 round. We'll take a look at the energy sector amid geopolitical tensions. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss oil and energy in 2026. Joining us now, Ellen Wald, PhD and author of Saudi Inc. and president at Transversal Consulting, and Robert Yauger, director of Futures Division at Mizuho Americas. Great to have you both with us. Ellen, let's start with you. I'm just looking at oil prices right now. They are relatively stable as reports say that we're going to enter this 3rd round of talks with Iran. What is keeping a lid on crude right now?
Well, I think the fact that we're fairly well supplied in terms of global oil supplies is really helping keep things fairly steady. I mean, we've definitely seen some upward movement, and I wouldn't be surprised to see more, ups and downs surrounding these talks. But overall, we're fairly well supplied. Iran isn't really a major part of most of the global oil market. I think the biggest concern is, will Iran impact traffic leaving the Persian Gulf? And I think that that people are finally coming to the realization that it's not all that likely. They can't necessarily do all that much damage, although there's clearly some heightened military presence in the area.
Yeah, we definitely need to talk about the supply risk in the Strait of Hormuz. But Robert, I want to bring you in here too. I saw in your note that you sent over that you are keeping a close eye on the significant military buildup that we're seeing in the region there. Do you think the market is right now underpricing some of the geopolitical risks right now because of some of the other headlines involving tariffs?
No, I think that if there is a military event, that we will trade up towards $78 and change like we did in June. You got to keep in mind that despite all the chaos that has surrounded Iran over the years, they have never taken production off the market. They have continued to produce at 3.3 million barrels, export 1.5 million barrels, no matter what kind of mayhem is happening in Iran. Keep in mind also that the IEA last week put out that the market, the global market, is oversupplied by 3.8 million barrels a day. There's 3.8 million barrels more supply than there is demand every day. So you could even take Iran's 3.3 million barrels of production off the market, and you still have 500,000 barrels of oversupply. So it's a very well supplied market with a geopolitical event that, historically speaking, has not taken barrels off the market.
All right, Ellen, so you just said that you think it's pretty much off the table that Iran is ever going to fully shut down the Strait of Hormuz. You even go so far as to argue that they can harass the shipping, but they can't actually do it. I have had very different conversations where people have real fears about this happening. So I'd love to know, what is giving you the confidence that that sort of worst case scenario isn't on the table here?
That's a great question, and I think that a lot of the fear that Iran might close the Strait of Hormuz comes from a very different time and a different paradigm in the global marketplace. A lot of these ideas are coming from the 1980s and things like that. And if you look at Iran's capabilities, it's not even clear that they actually have the capability to shut down the Strait of Hormuz. The international shipping lanes do go through Iranian waters, and that's or very, very close and a little bit through them, and that's really the point of most concern. This is a very challenging area to navigate through, but it is possible to navigate in other areas. The shipping lanes are where they are because that's the best and easiest place. Even if Iran could militarily actually, manage to kind of blockade or prevent ships from going in through its waters, there are other ways that ships can get around it. In fact, many have been doing this. They've been, rerouting themselves and going in other areas through the UAE waters in order to just avoid harassment from Iranian ships. So I don't think that militarily it's really all that possible. Then I think also from Iran's perspective, if they blockade other ships, in turn they won't be able to get any of their ships out. So they're not going to take any kind of action on this unless they have absolutely nothing left to lose. As long as their ships are going out, they're not going to prevent Saudi or Emirati or Kuwaiti or Iraqi ships from leaving either.
So, Robert, from your viewpoint, if demand holds steady and we stay at this ample supply, I think you said about 3.8 million a day in terms of our oversupply, is the market essentially stuck in this mid-60s range unless there's some sort of massive geopolitical event?
Well, this is the geopolitical event. It is. You never know. There's outliers. The Iranians have managed to take 5 million barrels of Iranian oil off the market. Actually, it was the Houthis supplied by the Iranians. A couple of years ago, they took some UAE barrels off the market. They could have a lucky shot, hit a big super tanker. That red headline would spike the market to a certain degree. But yeah, I don't see this thing going to the moon. There are $100 calls trading in the Brent market, sometimes for size. The other day, 50,000 of those $100 calls traded in one day. That's 25 VLCCs. That's a lot of money just to cough up for the premium on those options. But I think that is, and I do not think that is possible. You're going to have the Abraham Lincoln and the Gerald Ford in waters not too far away from Iran very shortly. The Gerald Ford will arrive any day here now. That's the most sophisticated aircraft carrier on the planet. That is going to add 150 strike aircraft to the U.S. arsenal in the area. If Iran tries to stop shipping in that area, harasses shipping, or anything along these lines, those 150 aircraft are going to be on them quickly. And their targets will be the Iranian missile program and also, obviously, the nuclear program, which we have already bombed. But if they're shooting missiles at shipping, those targets are going to be in U.S. crosshairs quickly.
And while I have you both, I do want to quickly touch on Venezuela, of course, because we saw the moves in oil with the conflict in Venezuela. But even if the U.S. loosens restrictions here, Ellen, do you see this moving the needle at all?
I do think that Venezuela is an extremely challenging situation for American producers. Yes, there's definitely interest, but at the same time, this is a very difficult kind of oil to produce. There's all sorts of bad blood going on. Plus, we're having trouble, they're having trouble moving the Venezuelan oil that's already on the market. And so it really doesn't make sense to put more Venezuelan oil on the market now. I could see in the really, really long term, companies being interested, in the next, say, like 30 years. But I really don't think we're going to see a huge amount of interest in moving Venezuelan oil on the market this year.
Well, we appreciate you both being with us this morning. Sadly, we've run out of time. I could talk about this all morning, but appreciate you both being with us. Ellen Wald, PhD and author of Saudi Inc. and president at Transversal Consulting, and Robert Yauger, director of Futures Division at Mizuho Americas. I also want to thank all of you for joining us today on Trading 360. I'm Marlene Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. I'll be back with Market on Close at 3 Eastern, 2 Central, but stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks. bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, I had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Right here on Schwab Network. I'm Nicole Petalides. It's noon right here at the New York Stock Exchange on the corner of Wall and Broad. We're glad you're with us. I'm in for my friend Diane King Hall. Quick look here at the major indices. We've seen some down arrows after a winning week last week. We actually snapped some losing streaks last week, but back in the red here again. The S&P right now at 68.35, down 1%, losing 74 points. The Dow is down 739 points, losing 1.5%. And while healthcare is a winner, most of the drag comes from financials and also consumer discretionary, industrials, tech, and so on. NASDAQ is down 1.5%, and the Russell down 2.1% for those small caps. We'll have a big look at all the top stories, of course, covering Iran and tariffs and some of those wild cards. And we'll have example trades for you, option strategies for a name like Alphabet Google, following the upgrade that we saw from Wells Fargo. And the team from Folio will join us and take a look at the latest sentiment data for Home Depot ahead of the company's earnings that are due out tomorrow. And we'll break down Hims and Hers. This beaten up name releases its quarterly figures after the close. What should we expect? And we have a roadmap for today's trading action. It's time to bring in my co-hosts here, Kevin Hinks joining us, and Kevin Green, senior markets correspondent, also here. Great to see you both. So Kevin Hinks, I'll start with you. I mentioned the tariffs, and we went from 10% to 15%. Kenny Polcari thought it was a lot of noise. We know that the SCOTUS basically turned it down, and so the president still has new plans, and Besson does say that revenues will come in as expected for 2026. How do you think the tariff story is affecting the markets? Your thoughts?
Yeah, I think the tariff decision on Friday is kind of like an unavoidable toll booth, right? It doesn't mean they're not going to get their tariff revenue. They're just going to have to get it a different way. It was a stumbling block for sure. I was frankly surprised, Nicole and Kev, that the market rallied off that news, because I think the uncertainty that it brought gave that to the overall market, put a lot of uncertainty on the market. So I'm really not surprised too much by this sell-off. And it looks like to start the day, they're just pounding away on software again. But that uncertainty at the end of the week isn't going to be the story, I think, of this week. I still think it's going to be NVIDIA's earnings on Wednesday afternoon. That, on the closing bell Friday, that'll be the biggest story of the week. This tariff, I think the person you said, I think it's exactly right. I think this is a lot of noise. I don't think anything really has changed from before. I think it's just a different avenue to the same place. So I think you got to look back to the economy and everything that's going on there and earnings. And I think NVIDIA's earnings are going to be massively important for the overall market, Nicole.
Yeah, so we're now global tariff rate 15%. In the meantime here, Kevin Green, I know you're taking a look at some of the charts. I mean, it's really evident that there's some nervousness in the market. We're seeing the VIX above 21, so that's up 10.6% today. The 10-year bond yield has come down for 4.03, and people are running to gold, as we see, as a safe haven. What are you watching when it comes to the levels, Kevin?
Well, I mean, obviously we are still seeing some volatility, and we have seen volatility over the last couple of weeks. From a seasonal standpoint, Nicole, we actually don't see vol actually crush to the downside until around March 14th. And so I think this is just par for the course. We have lack of liquidity in the market. You could see Bitcoin kind of moving to the downside. That's a good liquidity gauge. And right now, you're seeing liquidity coming out of the market. You have institutions selling out of positions. I'll take the other side of Kev's trade here. I think Friday, the tariff news should have brought a lot more enthusiasm to the upside. I think why we are seeing this move to the downside is because of the rhetoric coming from President Trump. It's very erratic right now, and it's creating a little bit of uncertainty. And what's going to actually be very interesting, it seems like we're kind of saying, oh, tariffs are going to be here for the long haul. I'm going to take the other side. I think there's still going to be legal battles. These intermediate tariffs that we are seeing is 15%. It's only going to last for 150 days at this point in time, and it's probably not going to be possible for Congress to actually pass something that's going to be concrete. And what's also very interesting, Nicole, and I'll just top this off, and what market participants need to focus on here, President Trump, throughout this whole process, or his administration, has been arguing against going through this path. So they've already kind of made the legal argument as to why not to actually have these in place for a very long time. I think the market's going to kind of digest the erratic behavior for now, but I think we have a cap at this 15%. I mean, the only other thing that he can really do is place embargoes on countries, and I'm not sure if he's going to go down that route here. So right now we're digesting. If you look over
digesting. That's the word I was looking for Friday.
I'm not be surprised if in the next couple of months, this could be a tailwind for GDP. You see shipping, imports, as well as exports rocketing higher here because those China tariffs are now brought down to that 15% level, and that's going to be really conducive for a lot of trade that's been kind of going elsewhere throughout the global economy.
Yeah, and we heard from the president on Truth Social just saying to the other countries, don't play games and sort of this is the way it is. So we'll have to see, to your point, 5 months, 150 days, 15%. That's where we are right now. Getting back to the NVIDIA story and the AI play, we know software stocks are being hit again. We talked about the NASDAQ here down 1.3%. In fact, the NASDAQ, though it had a positive week last week, is actually having its worst month in a time, right, since last March. So we are seeing some pressure here for the NASDAQ. With NVIDIA, you know, how does this trickle out, do you think, Kevin? What do you think people are going to be watching? I mean, obviously, the AI strategy, the CapEx spend are part of the big story. Anything else?
Well, if I think, when you look at NVIDIA, I think just like other big sectors of the U.S. economy, there's a lot of stocks that are going to move based on NVIDIA's earnings, like competitors, right? AMD and Broadcom, like supply chain, Taiwan Semi, Micron, those will move. How about AI infrastructure? Supermicro and Dell and Arista and Palantir and Vestiv. How about hyperscalers from Microsoft, Google, Alphabet, Amazon, Meta, all with big, massive contracts that put them in that sector that is controlled by NVIDIA. So I think not only is NVIDIA going to move on their earnings, and I think it's going to be fascinating because of what it did last quarter, right? When it felt like nothing was good enough. Will that same theme come up on Wednesday afternoon, that no number is good enough? They're looking for 70% increase in earnings per share and 65% increase in revenues year over year. Is that enough to take the stock back to, you know, the 212 level where it was previous to the earnings? I think it's going to be, like I said, I think NVIDIA will move. I think the rest of the market and everything in that sector will move, Nicole. I think it's going to be a really big one.
All right. Let's turn our attention over to OpenAI and Microsoft and all this that's happening. The reports out over the weekend suggesting that OpenAI could top $280 billion in revenue by the year 2030. At the same time, Michael Burry, who's often on the short side of things, has been worried about Microsoft, Google, and Meta, saying that they're using some sinister accounting to hide AI costs.
Oh, bullshit.
And profits by 20%. But let's stick with the OpenAI story, seeing its revenue to exceed this $280 billion number by the year 2030. Kevin Green, your thoughts?
He's lying.
Yeah, I think this is actually a very interesting development that we're going to see, not only this week, but the next couple of weeks. OpenAI is obviously a very big focal point.
We're going to be positioning ourselves.
There's a lot of optimism that they are going to be able to generate revenue or top-line revenue. And on the other side of that, you have a lot of competition. There's a lot of models out there. I mean, you don't really have to go with OpenAI. There's other things that you can actually utilize in order to kind of get the job done here. And so this is some near-term optimism, but I think we're still seeing this way down on a lot of these companies. Oracle being one of them, Microsoft still moving to the downside here. Is the CapEx spend and outweighing that compared to revenue? And I don't think the market's really confident that the return on investment is going to kind of meet the expectations that we had a year ago or 2 years ago, given the fact that we do have a lot of competition.
I don't know about that.
I think there's also a concern that the Stargate portion for OpenAI may not come to fruition as quickly as we would have believed. There's some news reports that they don't have the infrastructure in place to build that out yet. I think that's also
that's it, man.
A lot of competition. DeepSeek is supposed to also launch a model, I believe, tomorrow, so that could create a little bit of headwinds here. So there's optimism.
Yeah, you just had to prove it, didn't you?
I'm not sure if we are getting the return on investment kind of ease that the market had expected, let's say, a year ago, where we were, and I think that's the concern that we have right now.
You see it more clearly on the 5 minute.
Sell off because Microsoft has probably the biggest exposure.
You see the 3 white soldiers?
And their software development.
That could mean something.
So many of our guests come on and say everything AI is not going to succeed. AI is real.
On 5 minute.
And AI is happening, and we're seeing infrastructure and energy and all kinds of things that will happen. And
it could be leading to something very interesting.
I mean, OpenAI is a huge story. Hey, Kevin Hanks, what did you want to add to that?
I just think that I agree with what you said, and I've been saying that for a while, Nicole. 2026,
you have not.
2027 is going to bring a lot of winners and losers in AI, and there's a lot of.
No, you did say that.
Remember, when this all started,
I take it back.
The darlings of AI and Microsoft and Google.
You said it after I said it.
Wasn't even one of them. Right? It was an afterthought. They were screwing up.
I said it first.
And not getting it right. And now everyone's thinking that Gemini might be.
Gemini, don't be bringing me in on you.
Why? And we're going to talk about Google Alphabet in the first segment. But
how dare you?
I just think that there's so many racing for that top spot, and they're probably, let's face it, there's going to be more than one
Gemini.
AI, just like there's more than one cloud provider. There's going to be more than one AI provider, right? And
there's only one Washboardjim.
Are probably going to be right there battling, but there's going to be a lot of companies that lose out on.
Man, this guy's he's losing it.
Things are going to be enormous. I don't know who's going to win, but
how many times are you going to say this? Okay, I'm done with you.
Looks like one of the.
You're done. You're fired. Nicole, how do you put up with him too? Huh? Alan Green's smart. She looks like a good girl today. That ain't gonna work. AMD. Okay. Well, it's not getting much done today. Uh-oh. Punk's bringing in a chart. Do, do, do. Not holding. It seems like we're at a certain stage right now where something should be happening. Like snake breakout, pullback. And that's on the 5 minute. Down 71 bucks. Not bad. Not bad. Like Google could get down to 306. We've hit that once before, that 200. It's like a 306 for Google. Thrill 9.
and Kev, for him to be successful. So Kevin needs a move below that break even of about 271. I need to move up through 315 towards probably 2180, something right around there. And that's where, and the rest, you're looking for my $20 call vertical to go somewhere in the high teens or 20. The risk on both trades is the debit paid. The most you can lose is on Kev's trade is what you pay for it. The most you can lose on my long call vertical is the debit paid. And so there, you might want, here's one important part though. If by chance Google Alphabet would wind up on expiration day in between the strikes, you could get long the stock. So always be cognizant if the stock remains in between the strike prices. So the one strike would go out worthless, but the other one would get exercised into stock. So always be careful of something like that. But this is, at least on the downside, in terms of downside risk, it is the debit paid that is risk on both trades, Nicole and Kev.
Just quickly, I'm just going to jump in and say maybe NVIDIA will be the catalyst one way or another, because a lot of these Mag 7 names move together, and we'll see, maybe Google might move with NVIDIA and Sympathy one way or another. If it's going up, maybe it goes up 2 or down. Any final quick thought, Kevin Green? Give you 10 seconds, then we got to get to cash tags.
Yeah, I would say the difference between my trade and Kev's trade, he's also selling some premium against his long call position, where mine is outright. So I have a little bit more theta or time value exposure, decay exposure than Kev does, even though I have a little bit more time. So be mindful of that. And Nicole, lastly, I'll say NVIDIA. Let's say NVIDIA raises their guidance moving forward. I think that's going to be a negative for the Mag 7 names, because who's increasing their CapEx spend? That's probably going to be priced into their guidance. So I think it's actually a little bit reverse. If NVIDIA actually has a good earnings announcement, that might actually be negative for companies like Microsoft or Google or even Amazon.
That's true. We'll have to watch for that. Thank you. Okay, gentlemen. Up next is cash tags, and we'll meet with the team from Likefolio. Join us with the very latest sentiment data pertaining to Home Depot. So we'll look at an earnings preview for you. Home Depot year to date is up 9%. It's been on somewhat of an upswing. So let's talk about that. Fast Market. We'll be right back.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides alongside Kevin Hinks. It's time for
cash tags. And we're taking a look at Home Depot ahead of the company's earnings. For that, we bring in Andy Swan, co-founder of Likefolio. And so wanted to ask you, talking about this home improvement name, it's been on somewhat of an upswing since the last earnings report. Your thoughts, because, Home Depot might be a popular spot for Northeast, for rake, salt, ways to combat snow. What do you think here? What is the data telling you?
Yeah, the interesting thing about Home Depot and Lowe's, they could really use a lot more storms than we got last year. So, as consumers, I think it was nice to have kind of a quiet year last year, but for these companies, they're looking for a little bit more action, a little bit more reason to get people into the stores. When we look at our data on Home Depot, it's pretty flat, pretty neutral at this point. I think that when we go into these earnings calls, the biggest catalyst is going to be how the company talks about, first of all, tariffs and how they talk about profit margins, which are two things that Likefolio really doesn't have a lot of read-through into. But what I can tell you is that consumers are kind of stuck in the home that they've been in for a while. Most people have locked in mortgage rates that are really low. You don't move unless you kind of are forced to, and so that's now leading to a little bit of a resurgence in that, fix it up, remodeling type of activity. We're kind of on a cycle now. It happened during COVID when we were all stuck in our homes, and now here we are coming up on 6 years later, and we're stuck in the same house because we can't afford the mortgage of a new place. And so I think that there's tailwinds for both of these companies. Home Depot outperforming with consumers at this point. In terms of web traffic, it's up while Lowe's is down, but it really comes down to that pro user, the professional that's running into these stores every day to buy the goods that they need to do the remodel for the customers that they have. Are they picking Home Depot or Lowe's? I think that's the question that we need answered this week. And more importantly, what profit margins are these companies coming through with? Because everything's tightening up. And a lot of what we're seeing is extremely picky value shopping by the consumer. They really want deals. They're responding to deals. And at this point, it's which company blinks first and squeezes those profit margins the tightest in order to bring customers in their door. So far, it looks like Home Depot may be taking the lead in that.
It's interesting, Andy. Two of the notes that I read today talked about third quarter of 2025, fourth quarter, how the lack of storms actually hurt Home Depot. So two different articles mentioned exactly what you said. Now, I believe, and I'd like to get your opinion on this, I think Home Depot is a great proxy for the overall housing market. And I think lower interest rates, a better overall housing market would really benefit them, even if it's more new houses, because they'll benefit. Their focus on that pro contractor is really a key to them, and they would benefit from an overall boom or recovery in housing. So you want to see if the investors want to see where the overall market would get better if interest rates were lower, look no further than housing. Andy, my one question for you is, how important do you think their conference call will be and their overall look forward into housing going forward? Is that the key? They could miss and still rally, as this stock has, because of their outlook going forward. Andy, your thoughts?
I totally agree with you, Kevin. I think that you can take the headline print, the EPS number, the revenue number, unless they're completely, way off. You can take those and throw those out and just wait for the conference call. I think that's what Wall Street's going to do, because what investors want clarity on is, how the pro consumer is doing, the market share that Home Depot might be losing to Lowe's. Lowe's made some big acquisitions last year. They're going after the pro customer much harder than they have in the past. And how's that impacting Home Depot? And again, most importantly, nobody's going to be able to predict tariffs perfectly, but what Home Depot and Lowe's can tell us in these conference calls is what is happening with their profit margins. Because again, we're seeing real, almost extreme levels of deal-seeking behavior from consumers. And whichever one of these companies is able to lure people into the store with the best deal on the appliance that they've been holding out on, etc., that's who's winning the customer right now. And that's a tough place for both of these companies to be. You know, Wall Street doesn't like compressing profit margins, but the companies are at a point now, and especially Home Depot, I think, where that's the only thing that's going to bring people in that wouldn't have come in otherwise. And so we're watching that extremely closely, how they talk about profit margins, how they see the outlook for profit margins going forward, because we're seeing indications that the customer's getting a little tight here, and that it's going to be very difficult for these companies to maintain some of the profit margins that investors have gotten used to.
And Andy, I just wanted to jump in and say any of the Likefolio earnings scores here on Home Depot. I know we're going to be hearing from both Home Depot and Lowe's, and anything else we should be paying attention to. It was always that the pros went to Home Depot, but are more pros going to Lowe's lately? You know, and where do the do-it-yourselfers go? That kind of
Lowe's.
thing. Any earnings scores or anything else that you can share with us?
Home Depot just a bit ago. More
Our
drama.
score's pretty neutral going into this. Unfortunately, we don't see a lot of edge in the data, which actually I think bails us out from a trading perspective a little bit, because again, it's going to be about that conference call afterwards.
Double
and
bottom.
the way the executives express
Slash
their
ES.
forecasts and confidence in the future. But in terms of Lowe's, I do think that
Double
Home Depot
bottom.
has probably more risk in this week than Lowe's does, because I do think Home Depot's a little bit on the defensive, with Lowe's getting significantly more aggressive with that core Home Depot customer, which is the professional. And I think Lowe's is winning some of those over, and it'll be very interesting to see how Home Depot responds to that in their conference call and in their outlook going forward. We could get a little bit of a divergence between these two companies this week, and I'd be very excited to see that. So I think that there's definitely, for us, we think more risk on the Home Depot side of the trade than on the Lowe's side this week.
Interesting. All right. Andy Swan, co-founder of Likefolio, we thank you. Good luck there at Home Depot, and you know, nice preview there. Appreciate it. So, Kevin Hanks, before you go, I want to see an example trade. I don't know if you want to incorporate anything from Likefolio or just the data you've been watching. Your thoughts on an example trade here on Home Depot?
Yeah, of course. I mean, we always look at two things that Andy brings us, and that is, number one, the divergence between the price of the stock and the overall interest. That is attractive. And then Home Depot's doing slightly better, right? Up 6% versus down 3%. But there is still competition, and I think Andy's spot on. I think the conference call and how they map out housing going forward and their view on interest rates, their view on tariffs, are really going to decide what this stock does. Remember, it's $50 off its highs from just a few months ago. So anyway, what I looked at is something in the long call diagonal. I kept it very tight, only 1 week. I bought the March 6th 375 call, or 372.5, sorry, 372.5 call, and then sold next week's February 27, 387.5, so a $15 wide call diagonal. Why? We'll look at the expected move for the week, about $16. So I'm just slightly inside that expected move, but I rounded it to around a $15 call diagonal. Now I put that in for around $7. It's trading almost $7.70 now, so it's trading $7.60, slightly above. So it's rallied off the numbers
Another
from
double
early
bottom.
this morning. It's been down all day, but it's off
Slash
its lows,
ES.
Nicole. The risk on this trade is whatever debit paid. You do have some assignment risk up around the 387.5 level. If it were to get up there this week, that's pretty much in line. Now actually a little inside the expected move for Home Depot. But right now, this is one that collects data. It gets you along about 27, 28 deltas in Home Depot. And this is one that is risk defined to the debit paid. And like I said, you're spending about $7.50 for a $15 wide call diagonal. So you would be looking for a move up towards 387.5, Nicole.
Yeah, all right. Kevin Hanks, pretty incredible. And I know you'll be watching Lowe's very carefully as well. There's more to come there. Appreciate it, Kevin. Thank you. Also, you know, as we see now the stock, we're really seeing the worst day on the Dow in a long time. We're down 835 points. I mean, some of that is the tariff worries or maybe Iran worries. So I don't want to leave out what's happening in the market right now. The Dow is down almost 1.7%, and the S&P 500 is down 1.25%. So keep an eye, big picture on the markets with financials and also consumer discretionary being the worst of it. In the meantime, we're going to get to Hims and Hers, which is at new lows. I mean, the low is 15.16. It's trading not much above that right now. And George Sillis will go over some of the details ahead of the company's fourth quarter earnings report that's due out after the close today. I mean, 1 year, this stock is down almost 77%. Hims and Hers, fast market. We'll be right back.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Curious about how companies are performing heading into quarterly earnings, or how the macro environment is influencing the markets, or even specific sector performance and how they're faring? Connect with me on social at Marley Caden.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange, where we're seeing a sell-off, a pretty good one at that. Tariff worries, as the president says, he's ready to use some obnoxious level of tariffs in the wake of the Supreme Court's recent ruling against him, pretty much. Right now, you're seeing the Dow Jones Industrial Average down 814 points. That's a loss of more than 1.5%. The tech-heavy NASDAQ also down 1.5%, and the S&P is down 1.1% at 68.29. Won't leave out those small caps because they are down about 2.25%. We're seeing also financials and tech, industrials, consumer discretionary. Those are among the laggards. Any bright spots? Well, all right, I'll give you healthcare and also consumer staples, but not Novo Nordisk. That's down about 15% on the heels of a failed obesity trial. Deere is also lower. Workday is lower. Just some names to watch. PayPal's a winner. In the meantime, Hims and Hers. So it's a tough year. The shares of the online health company are down more than 50% in 2026 as it faces ongoing legal headwinds from the competitors. Hims and Hers pulled its plans for an oral weight loss drug after getting hit with patent infringement lawsuit from Wegovy maker Novo Nordisk. Now, the company reports its fourth quarter numbers today after the closing bell. The ticker is HIT.
Oh boy, well, them kind of days, slow.
Of 2024.
Time to go fishing.
Down a little more closely. George Sillis is with me, senior markets correspondent, and we were
See, here's
talking
another
about
breakout point.
It got a nice spot. At first, they were going to be able to sell everything. They do some compounded drugs and all that. Then they got shut down. Your thoughts on a name like Hims and what stands out to you, George?
Well, I mean, first off, when you look at the price action and you get some context over the last 3 years, it's basically where it was about 3 years ago. All the entire run-up it had has been washed out, associated with really the businesses expanding its offerings. I mean, it's becoming one of the premier digital health platforms for health and beauty across, mental health counseling and so forth. The other thing was there was a huge catalyst in growth estimated with the weight loss drugs that were compound based, and so there was some legal challenges now put forth against the business from Eli Lilly, Novo Nordisk, which we talked about earlier as a business itself, facing a patent cliff with Wegovy and Ozempic, and so they are already struggling because of that, and so essentially they're putting a legal barrier against Hims and Hers for essentially looking at patent infringement using their compound formulas to supply to their customers. That has really placed a tremendous pressure on the earnings estimates. And if you look at the earnings estimated for this quarter that they're about to report, it's relatively around 5 cents a share. Now that's down 57% compared to 11 cents last year. But nonetheless, they are expected to continue to grow their sales at around 28% to 617 million versus 481 million last year. So for what it's worth, I think what's happening here is that the earning estimates are down because they're not getting as much margin on these drugs that they're anticipated or were anticipated to sell. The other thing is that in the context of what they're doing, they're making an acquisition of the Australian digital health platform Eucalyptus, and that's about a $1.14 billion acquisition. That in of itself also will place some pressure on the earnings for the business, the quarter, because if you look at the market capitalization of Hims, it's around 3.15 billion. Debt of the business is around 1.2 billion, but they do have cash of around 690 million to help finance that acquisition.
We have to wonder how Hims and Hers will actually make a comeback, on what product, on what, whether it's mental health, as you noted. I mean, they're trying to give it a go in the world of GLP-1s and compounds and things like that. They're constantly shut down. They originally were going to be offering some of those at a cheaper price and working with, the major drug makers and everything. But really, at the same time, you've had Novo Nordisk now with the down arrow, 15% lower, had the did not achieve its primary endpoint when it came to its obesity drug, and also, redefined that for trial, the charisma that you were talking about earlier. Where do these go? You know what I mean?
Well, look, there's clearly a lot of demand for weight loss drugs, the semaglutide types of drugs. So that's something we have to consider. It's about a $7 billion per annum market. The demand keeps growing, but the challenge really lies in, who's providing the best product out there. Eli Lilly seems to be still the leader in that space, just the way the stock price is performing. Novo Nordisk, like I said, is facing a patent cliff, so they need to up their brands through new compounds, which again, they face some challenges in terms of their weight loss drug, the new one that they were supposed to bring forth. It's not that it's bad, it's just not as good than Eli Lilly. Then you got Hims and Hers, which was in the middle of this, trying to essentially look at supplying a product to their customers on top of the services which they already provide in a lower cost structure using compound drugs, which now they're facing challenges from Novo Nordisk legally as from patent infringement. So for what it's worth, Hims & Hers still has a growing business in terms of users. Digital services is still in high demand on their platform, but product service and product sales, the cost of those products may end up going up because they'll have to eventually distribute, if they are going to, premier high-end products that are supplied by Eli Lilly and even Novo Nordisk versus their own compound, which was a cheaper alternative than essentially paying for the premier products and not giving that benefit to their customers.
You know, it's like, I hope Hims & Hers does well. I mean, for the people who are holding it and going along, I mean, we talked about how terrible it's doing. But really, I mean, okay, so GLP-1s or weight loss is not really working for them. They have so many different products, it's like a soup. I don't know what's going to stick. You know, we can't say Hims & Hers has the best whatever product. They have moisturizers, they have scalp scrubs, they have things for intercourse and health and wellness and moisturizers and melatonin. And I mean, I don't know where to start or end on this. And none of them have I heard sunscreen, face oil, face wash. I haven't heard Hims & Hers face wash is the best I ever had. I mean, it's just not known for anything. And so that's what I'm waiting to hear, you know, what's going to be the thing. Anyway, George, I think I have to get going because I have to get to Kevin Hanks.
Okay.
Yeah. All right, George. Hold the thought. And then Kevin Hanks is back here. All right, so what do you think? I mean, is Hims & Hers have a chance? And what would you do with an example trade on a name that's really down? I think it was 75% in 1 year.
Yeah, I mean, when you look at why this stock rallied, right, it was all about weight loss drugs. And Eli Lilly is clearly winning in terms of weight loss drugs. I'm not an expert on this, but what I can tell you is, based on the price that was just almost $73, now it's $15.40, that a lot of the entry has been de-risked, right? And so you can play it based on that. And so that doesn't mean there's not risk. There's risk on a stock like this all the way to zero, but you did mention they have a lot of products. I don't know which ones are good. I don't use a lot of their products, but in terms of a trading perspective, an entry level, if you think that it has been de-risked, you can do something like this. The expected
68.70s
right now about $2.28. So what I did, something just a calendar spread, buying the March 13th, so 2 weeks out, selling the Feb 27th, $18 strike, and buying the calendar. It's trading about 40 cents. I put it in. It's trading about 35 cents now. So the one advantage is it's a very low entry point in terms of net capital outlay, Nicole. But this is one that the risk, if you do pay 35 or 40 cents for a call calendar, you would want the stock to move up towards $18. The risk on the trade would be whatever debit paid is, and you'd have to be careful if it does move towards $18 that you don't get exercised or assigned. So be careful there, but the risk on the trade, relatively small at $35 per one lot. So a risk-defying trade looking for a move to $18 in Hims & Hers, Nicole.
All right. Well, Kevin Hanks, great stuff there. We'll continue to follow the story. I know they also have consultations and, you know, things like that, services, so not just products. We'll see what Hims & Hers can really bring to the table. Reporting after the bell today. Thank you for the example trade, and my thanks to Kevin Hanks, Kevin Green, the Likefolio team. We had Andy Swan today and George Sillis. Great show, everybody. Thank you so much, and this is Fast Market. So glad you were with me. I'm Nicole Petalides. I'll see you at 2 p.m. Eastern Time for the watch list, and please join me then. You can download our Schwab Network app. It's available in the Apple App Store, 24/7, schwabnetwork.com. So stick around, because coming up next, Next Gen Investing is next, and we're down 757 on the Dow.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers
didn't
real-time
move.
market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Welcome to Next Gen Investing and happy Monday. I'm Jenny Horn. Let's check in on how markets are faring now about 3.5 hours into the trading day. We are seeing some collective weakness across our four major averages, with now the S&P is down 1%, Dow Jones down another 1.5%, which is pretty much in line with what we're seeing from the NASDAQ 100 as well. Russell 2000 also down about 2%, so some substantial pressure to begin this week, but the broad real reason is follows, of course, President Trump announcing over the weekend that he will increase the global tariff rate to 15%, up from the 10% that was announced on Friday. These new duties will go into effect immediately, and more levies could be coming still in the next few months. But throughout the next hour, we will focus on the individual stock stories shaping today's market. We will kick things off with a few movers to keep on your Monday radar. And then we'll talk the technicals on two pre-earnings stocks in the food space. Keurig Dr. Pepper ahead of its earnings tomorrow morning, and Cava Group with earnings expected Tuesday after the close. And Alphabet got an upgrade at Wells Fargo as it does continue to face some pressure alongside the broader tech pullback, but maintains its status as one of the highest conviction large cap names amongst sell-side analysts. And Bitcoin slipped below 66,000 as markets do continue to rotate away from these broader risk assets. And we'll close out the show with a clear winner today, which is Immunity Bio, a company seeing top-line upside due to its immunotherapy treatment. But now here to help us kick off the show today is Kevin Green, senior markets correspondent for the network. And so, KG, with tariff and geopolitical news we've gotten over the weekend, what are you watching to kick off the trading week?
I still think that we have a lack of liquidity in the market, and it's exemplified by Bitcoin moving to the downside, testing at $64,000 level, and as well as the lack of liquidity or book depth within the E-mini S&P 500 futures contracts just kind of leads to volatility continue to ramp a little bit higher. Now, obviously, tariffs are kind of the big headline, but there's other things in the background that is working as well, Jenny. I mean, you have private credit today getting kind of hammered. I mean, if you look at KKR, that one's moving to the downside fairly aggressively. Some of the other private credit players in the space also selling off pretty hard as well. And so I think this is just a little bit of a de-risking. We continue to consolidate in a range for the S&P 500. That 100-day SMA has been our floor. The 20-day SMA has been our ceiling. And until we can break out either to the upside or break to the downside here, I think we still try to trade in this range. But the tariff uncertainty obviously will continue to keep elevated volatility, at least for now, until we get better clarity and certainty. And I think right now, the market's trying to just hide and try to figure out what areas of the market might be a little bit more impervious to these headlines that we're getting, it seems like, by the hour. What are you looking at when it comes to the market today?
You know, I will say, I've been watching Bitcoin very closely, which I know does not give a great depth into the broader markets, but I do think with the broader software pullback, that has been something of note where we've seen a lot of these risk assets just take a bit of a pause from their momentous rallies that we've been on. So I think Bitcoin futures have been definitely a good gauge of that, although we are going to be joined by a guest later on to give even more insight into that. But wanted to start things off here with Domino's, which is actually a clear winner of the session. So we're starting off on a bright spot here. Domino's is rolling out new menu items, also had some of these limited time offers that they said did quite well just based on these quarterly numbers. So what really stuck out to you within this report? Because, hey, 3% move today feels like a definite win.
Well, Jenny, what stuck out to me actually this morning in Morning Movers, I didn't see that bright smile on your face when you talked about Domino's. This is usually one of the ones that you get very excited about, and rightfully so. The stock actually did perform really well when it came to the earnings announcement, at least for the most part. It did actually miss on the adjusted earnings per share, which came in at around $5.35. She was looking for $5.39, but the revenue did beat, and you are seeing same-store sales in the U.S. actually exceeding the street's expectations, with that coming in at 3.7%. She was looking for around 3.5%, give or take here. So some weakness in the international markets, very strong sales when you're looking at the U.S. markets. Their margins are being pressured a little bit when you're looking at input costs, especially for the food input costs, as well as labor eating into their margins. But if they're able to actually overcome that because of volume growth, then I think investors might be okay with that, at least for now. And right now the shares are up about 3.4%. So this is actually a really decent report, given the fact that it had a very low bar going into it. As you can see, the stock actually did slide over the last couple of months here. Maybe this is the floor for this company just based on the earnings that we got today.
You know, I think I was so skeptical that we were actually going to see a positive move higher throughout, I mean, all the pressure that I'm so skeptical to really dictate that any of these moves will be up or down, because pre-market it does feel like everything can change. I will say something that brought a smile to my own face was the fact their CEO called out specifically it's not true that people are eating less pizza. I know there's been this like health conscious crave in the United States, but they're saying that's not true. People are still definitely eating pizza, and I'm doing at least my household's worth of
pizza,
contributing to that overall sales. I mean, the figure that came in, hey, at least better than what the street was expecting. Now, our next name is a complete pivot into then what many have said is what's challenging a lot of these fast food, fast casual type of establishments, which has been all of these treatments from the GLP-1s and some of the weight loss drugs that have just curbed massive appetite. And so Novo Nordisk showing that this is not an evenly felt market, especially following this news that its obesity drug really failed to beat out Zepbound as a key competitor. And so shares are down another 15.5% today, now down about 23.5% this year. And I mean, 57% off of its highs made now almost exactly a year ago.
Yeah, Jay, if you're looking at this chart, February has just been a really hard month. It's been, 2 steps forward and 3 steps back, unfortunately, when you're looking at the price action here. These phase 4 trials here obviously did not meet the street's expectations. You are seeing the shares selling off here a tad bit. And that's because even if they are able to bring this to market, even though it's less effective than what Eli Lilly can provide, it still costs a lot of money to not only develop these drugs, but also to bring it to market. And so in order for them to continue to try to take market share from Eli Lilly, they may have to price it at a cheaper rate, which obviously then eats into margins. Rate of return on that investment gets drawn out a little bit more. So the shares are moving to the downside right now.
1207.
Able to find a floor, and this is kind of after having some other good results. I would say earlier this month that were not.
Here we go.
Great. You did get maybe some good news regarding the hims and hers GLP-1 debacle between this company and that company here. We saw some buyers stepping in, but unfortunately, these results are making this move to the
To the
downside.
200 now.
You start to question, Jenny, and I'm not sure if it's here, and we're just kind of speculating. But you
Which
start
we
to
broke to
question,
63.
when does this company become a little bit more attractive in a portfolio for somebody to potentially try to do a joint venture or potentially even take it over, because it does have a significant amount of patent rights that obviously are still innovative, but if the price action and the fundamentals really don't align, it kind of makes the stock continue to move to the downside.
Let's see what happens. If it pulls back or
feeders here trying to pick up this name for relatively cheap if they do have a portfolio in the future that can kind of turn this company around.
And to your point, not helping that we got news, earlier this month, predicting its sales and profit would decline between around 5% and 13% respectively now in 2026. But I think a great lesson that I have had to learn the difficult way that things that have been repriced this much to the downside, they can always go lower, as we're seeing in real time. We're down 15.7% just in today's session. But now to shift into actually what is a bright spot of our overall Mag 7 and just broader tech space, which is surprisingly so. NVIDIA is up now 0.7% today, so modestly higher, but alongside them and Apple, they're pretty much the only green shoots we see of these mega cap tech names. And of course, there's earnings this week. So seeing some analyst favorability, Alithia did upgrade shares to buy from hold at $250 price target. But there's so many expectations hinging on this quarterly report after the close Wednesday. KG, how do you make sense of all these analyst calls and just the big expectations for NVIDIA?
Yeah, this makes it very tough for this company. We've had high expectations for every single earnings announcement, for the last 2 years or so, and the movement after actually has been a little bit more bearish than bullish. So the bar is actually fairly high. The company has been able to beat and exceed the street's expectations, not only for the current quarter, but their guidance moving forward. They usually guide about 7% higher than what the street analysts are pricing in as far as their midpoint. But is that going to be enough to kind of break this out of this range, getting above this 190 level with some conviction and trying to test that $210 level again? If you kind of look at a chart, Jenny, NVIDIA has not moved since October. We've already had 2 earnings announcements. It's just trading at pretty much the same spot. So I think this actually leans a little bit more bearish than bullish, even though this analyst is very optimistic. They are talking about the global compute continuing to surge on a global basis, increasing by 75% on a year-over-year basis. Obviously, NVIDIA could get market share there. There's also some news reports that they could be stepping into potentially the personal compute space, the CPU space, maybe challenging AMD. That could be something that is also a tailwind for them. But I think it's already a high bar. Analysts have been kind of hip to their ability to beat and exceed the street's expectations. And I think there's probably a little bit more risk to the downside post the earnings announcement than it is for an upside move.
I do think as well, and I think a good call out the fact that while expectations have been hugely optimistic going into these reports, it feels like it's either been, a bit disappointing just based on post-earnings performance, or we've seen a very neutral move, which is also not really what markets, I do believe, are pricing in at least this point. So huge growth expectations for their top and bottom line, but we'll have to see. Can they deliver on what needs to be not just great numbers, they need to be, beyond anything that we've really seen, it seems like this quarter, as far as numbers versus expectations. We're already pricing in, like 70% bottom line growth, which is ridiculous. But we will close out here with our last name of focus, which is Apple. And actually, Apple has been truly a bright spot throughout today. We're up 1.6%. And so I know the broader markets don't reflect this, but Apple has been a really interesting story, especially Evercore now highlighting the fact that this is a free cash flow generation story for at least the reasoning behind their outperform rating. And so walk us through this note.
Yeah, we actually do see the fact that the company is going to have or potentially have strong free cash flow guidance and generation over the coming quarters and even years. And the fact that you can also kind of shelter away, or they believe that you can shelter away from some of the hyperscaler CapEx spending and debt financing concerns. Apple has not gotten into that arena that much. And so this could be one of those stocks, as they kind of highlight, that could actually shield the market a tad bit from some of those risks or fears. And it's actually something that we've seen in the past, Jenny. I mean, there's a lot of times where Apple's actually green on the session and we're down for the S&P or we're down for the NASDAQ. It's kind of a lower beta type of trade there because of its lack of exposure when it comes to artificial intelligence, but also because of its portfolio mix with not only services revenue, but also product revenue, which seems to be balancing here a tad bit. Also looking at getting into the visual intelligence space, trying to expand that out as well, maybe challenging Meta and trying to take some of that market share there. So this is a stock that's actually done a pretty decent job. Back in July of last year, it's so funny, everybody was beating this name up because they were not spending on artificial intelligence. We did not see it integrated into Siri. We still don't see that actually right now. But now you probably could see that sometimes waiting and looking and seeing who actually has the best AI product and then integrating it on the back end maybe the better solution, rather than going out and spending a lot of money on data centers and training your own. And that seems like that's where Tim Cook has a little bit of a slight advantage, at least for now, as we have some of these debt financing fears taking place with some of the other hyperscalers.
And that's always been Apple's, real strategy. And it seemingly has been, a reason for many to say, why aren't they spending bigger into AI? Why aren't they at the forefront of these developments? But right now, it's actually cushioning them from some of the broad software pullback we've seen because of the fact that they are truly still a discretionary tech player. They're not really as entrenched into some of the AI software. And like you mentioned, the debt risk now, it seems like that's plagued a name like Oracle, for example. But you mentioned something I did think was important, because it's really the major piece of news we see with Apple today, the fact that according to Bloomberg at least, they could be pushing further into these visual models with intentions to make that type of technology important to their upcoming AI devices. But this has not been the cash boom for a name like Meta at all. So is that really why we're seeing Apple a bit more insulated today, or do you think it's really because of the fact that we don't see them really as an AI player in the same sense that we do a lot of these other big tech names?
Yeah, I think it's both. I think it's one, risk off, looking at Apple as a company that has positive free cash flow, diversified business. They do have the potential to expand in AI, but once again, not having the overhead costs in order to get into that space. They also have the product revenue. The visual intelligence, that AI, it's not really that profitable for Meta, but if you look at those Meta Band or Ray-Bans, if you will, the demand's actually very high. In fact, I think they're only selling in the U.S. and they're cutting out some of the international sales because of that order backlog. So at some point in time, their product ramp up probably will have a meaningful impact when it comes to revenue. At this point, it's not right now. Maybe Apple also sees that opportunity and wants to kind of scale that up. They also have the ecosystem as well, that current users of Apple products may get into these visual glasses and other items as well, to have that a part of their portfolio, which could be a tailwind for them. So it's very interesting. I can tell you right now though, Jenny, too much AI for me, right? AI is doing half the jobs. Now it's going to be able to tell you what's happening in front of your eyes. At some point, we might not be needed anymore as humans.
It's a scary, scary world. I know. I like it for the ways in which it benefits me, and I know that there's so many use cases. I'm not entirely sold on everything else, because it does feel like we are just entrenched in an AI-driven even news flow right now. So I agree. I think I've seen a bit too much of even the words artificial intelligence maybe for one lifetime, but we'll keep talking about it as we do, and appreciate it, KG, for helping us kick off our show today. Now, coming up next, we've got a food-focused chart master on the way. We'll be looking at the technical setups in both Keurig Dr. Pepper ahead of its earnings tomorrow morning, as well as Kava Group with earnings out tomorrow afternoon. Stick around, we'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible.
It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV.
It's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master, and today we've got some food names on our radars. We're watching Keurig Dr. Pepper as well as Kava, both into their earnings events tomorrow. And so Rick Ducat stewarding us now for a fresh look at some of these technicals. And Rick, I will say two of my favorite ways to consume food is either via drink, which of course is our first name, Keurig Dr. Pepper, or at these types of places where you can customize your bowls for a large sum, it feels, but that being of course Kava Group. But Keurig Dr. Pepper is where we will start, and this name is actually amazingly so positive today. We're up about 1% despite the overall market weakness. We have seen more and more of this rotation favor some of these staples names, but obviously earnings will be the true test here.
Yeah, so this is one of those charts that had two pretty distinct phases when you look at it. First, we had this very consistent floor that was established here between, 32, 33 or so, closer to the 33 part. But when we had our gap down that formed right here, our high point was around that same area, 3270 roughly. From there, we transitioned into a rather large collapse. We bottomed out here near 25. From there, though, we formed kind of a similar ceiling type of activity around the 30 level here. So that's our most recent place where we kind of halted at this resistance point here. We backed off a little bit. We're moving up near that area again here. So we'll have to see if earnings can provide us with that necessary catalyst to make the jump above this repeated resistance level and form that breakout type of price activity. If it were to not happen that way for the bullish crowd, some supportive areas potentially would be around 29, 28, and 26.50 or so. Those are the ones that stand out the most in the shorter term perspective here. Overall, though, price activity, a very modestly sloping upward channel type shape is what you could draw if you were to put trend lines along those lower boundaries, duplicate it, match it up with those highs. It happens to fit decently well, so that could be a place to look for potential resistance as well. When we look at our moving averages, our orange 250 one-day EMA, our yearly exponential moving average, that comes in just shy of 30. So again, extra emphasis on this as a potential breakout level. Our longest term and thus most significant moving average lines up with this repeated price ceiling. So that's kind of the recipe for a potential breakout if it were to be breached here. RSI slowing down, still in bullish territory, but backing off a little bit as we approach earnings. Pretty common situation there. So if we were to look at our volume profile study now, we can see that our nodes in question are our heavy trading areas. One right about here between 28.50 and 29.50, a bit below that, centered around 27. But very little activity in this area here between about 29.50 to 33 or so. And then when we do start to hit 33 to 34, that's where we have our volume profile point of control, our heavy trading area that lines up with this old range that we pointed out earlier. So from a volume perspective, those are the most important areas.
Yeah, and the same as you mentioned, we pulled back pretty substantially from highs, but we still are also off lows by now about 19%. So, I mean, seeing also, again, a nice session to go into this earnings event, but as we know with anything, that can change very quickly. So when you think through trading this name here, for example, purposes, how do you think through a name like Keurig Dr. Pepper that obviously is not seeing a broad pullback with the rest of soft tech and the software tech? I mean, a very staple S type name.
Yeah, actually we're near our +1 standard deviation channel. You can see here's our linear regression line in white, our line of best fit. So really in the shorter term, things are making a bit more of a push to the upside. So for our example trade, we're going to look here at April 17th, our yellow box here, plus or minus 9.7% expected move is what the options market is looking for at this time here. And if we were to overlay the rest of our studies kind of on each other, we can see here that we have this repeated important area, this confluence near 30 of many technical factors here. So we'll target that with an example trade that is more bullish, looking for some upside here. So +1, April 17th, 28.33. Call vertical at a $2 net debit here. So we're buying a call that would be further in the money. We're selling a call that's kind of at the edge of that expected move area to give us a $5 wide vertical call spread here. So max loss, $200 is our debit paid. Our trade is risk defined. Max profit will be $300 here. So 2 to 3 in terms of risk versus reward here. So this would kind of reflect that we have that deeper in the money call that would be more probable, the higher probability to work out in our favor here. Although, of course, nothing is a sure thing, as always here. So our break even to the upside is 30, so pretty close to where our current price activity is here, versus that expected move could give us, looking for a potentially 10% range about within that general area. So this would be a trade looking to capitalize on that breakaway upside move here, and including the short strike to defray some of the premium paid.
Okay, so now to look at our next name, which is Kava, which reports tomorrow afternoons. We do still have a full trading session even before this print, but Kava has also seen a pretty nice recovery this year. I mean, we're up over 13.75% in 2026, but a name that had been repriced pretty substantially. So a gappy chart at that. I mean, walk us through what you see from a technical front.
Yeah, indeed. That's kind of one of the main things I was going to point out, was that this is a chart that has some prominent gaps here. So what I mean by that is, if you were to backtrack here, this is the gap that really stands out. This was another earnings gap back from August here. So from there, we gapped down. We had our highs come in right around 72 or so. That's around where we had this previous significant low point there. So we've never filled the gap. 82.5 is where the gap would be filled here. But we have retested that initial high near 72 a couple of times so far. We've kind of failed to break above that repeated resistance ceiling. You could also say a longer-term downward sloping trend line in white has been in play for the entire trading year here. You could couple it as well, though, with an upward sloping trend line here going across those lows, kind of forming a pattern here where we have it lining up with our relative low points here from a price perspective, 61, 58 here, and then also 52 here. So those would be some downside areas to be on the lookout for in this name. When we look at our moving averages, we have a situation where they're all kind of trending sideways and converging toward each other. They're clustered together rather closely, which speaks to a lack of strong trend directionality in this case. So kind of more of a sideways grind in the shorter term, increasingly narrowing range of our price activity here, a triangular type shape. So our moving average is between about 63 to 73 roughly, kind of all encompassed in that range. Finally, when we look at our volume profile study, in this case, our heavy trading range is right about here, 62 to 69. Our point of control, our thick red line, our heaviest trading area, 64.40. A similar situation to our last chart, where we have kind of this zone where there's not a whole lot of volume activity and things start to pick up again between 83 to 88. To the downside, another node stands out here between 52 and 55.
Okay, and so last but not least, as we do think through now trading Kava for example purposes, of course, we are lower today by about 2%, but I mean, for a name that has seen such significant gaps, usually related to earnings volatility, walk us through how you think through this name.
So again, we'll be looking to do an example trade at our April 17th expiration, 53 days out. That's our yellow box here, plus or minus almost 22% during that time horizon. So some volatility could be in the works here for this name. When we do overlay our studies on each other here, in this case, we can see that 60 to 55 there's quite a bit of supportive activity here. That's also where we start to see the edge of some of our expected move ranges here. In this case, it would be more like 53 for April. But if you do start to try to pursue those strikes that are too far out of the way, you won't get any premium or credit if you're trying to sell a put vertical, which we're going to try to do in this case, for example, trade. -1 April 17th, 60, 55 put vertical at a 125 credit here. So a neutral to bullish trade here, looking for us to stay above that break-even area. 58.75 is where that one comes in specifically. So about 13.6% to the downside in this case. So now we have that 1 to 3 reward to risk type of ratio that traders commonly look for. That's what I use as the starting point for many of these example trades, just to kind of keep it more consistent here. So our 125 credit would be our max profit, 375 would be our max loss. Once again, risk defined as we often try to do in these examples as well. So this would be a trade just hoping for some improvements from this rotation that we were discussing earlier, and just looking for just continued upside activity in this this particular name.
Yeah, and again, a name that has actually fared relatively better than the overall market, at least at the start of this year, but obviously had some room to make up because we saw some significant pressure in Kava shares towards the end of 2025. But appreciate it to Rick Ducat for all of that breakdown on two names with earnings still ahead. As I say, it's always earnings season if you are a believer. We do still have a lot of earnings to get through this week. Now, coming up next, we will talk broader software weakness as we're seeing, despite the fact that Alphabet did actually get an upgrade this morning at Wells Fargo, not entirely immune as shares are pretty much now unchanged on the session. So we'll talk through some of the sell side's conviction on this mega cap name coming up next.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO, and today we're focused on Alphabet, which is seeing some modest weakness today, but gaining some optimism, at least from a Wells Fargo analyst. Joining me now is Marley Caden, host for the Schwab Network, for some more on the, bullish explanation here behind Wells Fargo today. And so Marley, walk us through this note from the sell side.
And it is a very bullish note. We're not seeing a great move to the upside for Alphabet today, but certainly, as I look at the big board, they are performing better than the broader market is. So could make an argument that it did bolster them in some way. But like you said, Wells Fargo giving an upgrade to Alphabet today. They're up at an overweight rating now, up from equal weight, a new price target of $387. That's up from $354. The note says that the company has a leadership position in what they call the 3 key traits of an AI winner, which include customer data, distribution, and compute capacity. Wells Fargo says that its capacity analysis confirms that Alphabet has an opportunity to exploit data and distribution advantages for consumer and enterprise AI products. To quote the note, it says increasingly appears hyperscaler ambitions are bounded by compute capacity. They see Google as gaining competitive advantage as it widens capacity leadership versus peers, see capacity as enabling Google to fulfill its ambitions in cloud computing and search agentic autonomous businesses. They also estimate that Project Google expands the company's compute capacity to 35 gigawatts by the year 2028 from 15 gigawatts at the end of 2025, and that would extend its capacity lead relative to its hyperscaler peer group, adding that, quote, capacity is king. Wells Fargo also raised its Google Cloud revenue estimates to 60% year-over-year growth for 2026, which is 11% above consensus, Jenny. The firm also projects that its 27 and 28 growth will be 42% and 28% respectively, which are 16 and 12% above the consensus estimate. So a very bullish move, very bullish adjustments to their model. They're also estimating that Google Cloud will expand its capacity to 16.9 gigawatts in 2028, up from 7.6 gigawatts in 2025. Wells Fargo's cloud operating income estimates for fiscal 2026 and 27 are now 10 and 15% ahead of the street's estimates. Wells Fargo also went on to incorporate its projections a Gemini consumer subscription revenue business that it now expects will reach $12 billion in annual recurring revenue by the end of 2027, which is up from $4 billion that exists right in 2025. The firm also identified potential upside for the Apple-Siri relationship as a likely contributor. They say that probably won't be a contributor, at least meaningfully, until 2027 or later.
Okay, and so I think that's interesting timing of this note too, because to me it highlights everything that I guess the bulls have been making the case of, and doesn't really explain any like majorly new narrative for Alphabet, which is probably why we're frankly not seeing more of a reaction today from the overall market. But I will say that from looking at the overall coverage on this name, the street does still skew extremely optimistically, and hey, a $387 price target would be at the higher end of some of these recent calls we've seen made. But I mean, still, you could say by all the coverage, the street still believes in Alphabet.
The street definitely still believes in Alphabet. 387 is a nice move, especially from 354. The average right now is 376.86. So it's still upside across the board as where we're seeing analysts thinking that Alphabet is going to go. Also important to note, 22 analysts have revised their earnings upwards for the upcoming period for their next earnings report here. So that usually often indicates that they're expecting another strong performance from them in terms of their earnings report. So just bullish sentiment across the board as you look at the split between the analysts and what they're recommending. Of the 65 that cover Google, we're looking at 58 of them with either the equivalent of a buy or a strong buy recommendation.
Yeah, and I was seeing, 9 holds right now. The average price target is around 358 and 50, so that does imply about 14% upside, but the high is around 420. So it just goes to show again how wide that ceiling really is as far as expectations for the coming year. And I know that Alphabet has been making, the case has always been around Alphabet that it's relatively cheaper than say some of its Mag 7 peers. It trades right now at a PE of 27 times on a forward basis. On a forward basis, 27.5 times. Its trailing 12-month PE is roughly 29 times. But as far as its performance versus the Mag 7, I know that many have been so quick to say that they've been unmagnificent this year, which they have been, frankly. But Alphabet has at least hung in there a bit better than some of its Mag 7 peers.
Yeah, and I think it's tough, too, when you come off of being the top performer in the Mag 7. The bar is naturally already higher for you. And
well, you came on tough check.
Number for their capex budget, I think for this year is 175 to 185 billion.
Yeah,
in terms of what the expectation is going to be.
Snake breakout, pull back, double bottom, boom.
This was one of the first astronomical figures that the street got in this now 600 billion plus AI capex spend conversation that we're now having among the mega caps. But it was, met with a little bit of resistance. I spoke to George Stillis about this earlier, and he said they're proving it with their revenue numbers and all the numbers that they're putting up. They're already starting to show a return on investment. And Jenny, they have artificial intelligence capabilities across the board. Google is such a different company, or I should say Alphabet, at least in this case, is such a different company in that way.
Tesla.
They have AI everywhere. They have AI in internet search, in cloud computing, digital advertising. They own Waymo, in YouTube, in Gmail. They are much more Maps. They are much more diversified across the board than some of these other companies that we talk about. And then of course we have Gemini 3 in the conversation, which is just
Gemini
last
3
year, but has been just skyrocketing into popularity, and the reviews are across the board that it's
Stop bringing me up
ability to
now in
code,
subject.
search and create images is far superior to anything else out on the market, but it's still such nascent tech that it's hard to compare because we only have a couple of months of data to really stack it up against anything. So, you know, as someone once said to me, if you historically made a bet against Google or Alphabet, whatever it was called at that point, or you could probably put any of the Mag 7 in here, you would have been wrong.
Absolutely, and I mean, I think that it's even recent performance speaks to that. I know we pulled back now about 10% from highs, so we are like just pretty much at correction territory, but I mean, it's still up 75% over the last 12 months. I mean, it's still actually higher this year, which only is something that NVIDIA or Alphabet can say. I know that we're slightly higher on the year, but still, up 0.3% for year-to-date performance is something, and I do think that the narrative does seem to be capacity is king, as well as analysts did point out. So that you definitely have the capacity, just it's a matter of being able to execute now on this added capacity, I think remains a bit in question. But so appreciate it, Marley Caden, for that breakdown on what we're seeing shape up Alphabet today as we're down by about 0.2% in those shares. Now coming up next, institutions are doubling down on Bitcoin, but the real story could be the cryptocurrency's potential for some real earnings in the coming years. Stacks Labs CEO Alex Miller will join us with a big picture takeaway from Bitcoin coming right back.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up for a college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the
That's
day.
not true.
From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers.
It's like
only
coming
on
back to the
Schwab
200 here. But triple.
Welcome back to Next Gen Investing. We'll now turn our attention to Bitcoin, which briefly slipped below 65,000, now still below 66,000 as tariffs and geopolitical tensions reinforce the market's risk tolerance, or perhaps lack thereof. Bitcoin has fallen now over 25% in 2026 so far, but we could still see a path to it becoming a more productive and earnings-generating asset in the long term. So joining me now for some more on Bitcoin is Alex Miller, CEO of Stacks Labs. Alex, thanks so much for joining us and joining our show today. We are seeing more and more of this institutional focus on Bitcoin. And so what really has changed just in the way that institutions view Bitcoin versus, say, a year ago?
Oh, absolutely. Thanks for having me. Great to be with you this morning, Jenny. I think, the first thing that obviously happened was with the change in the administration over the last year and a half, obviously a very different level of acceptance on the regulatory front. There was obviously already a very big push into Bitcoin from a lot of institutions before that. You saw the ETFs, which opened up a huge part of the market, and obviously that was driven by courts and basically them telling the SEC that they couldn't keep people out of it any longer. But even more than that, there's just been this
150 for the 6870s.
Going to be around for a while. For
Here we go.
Now. And so you see
Here it is.
a range of institutions looking to get in it, right? Everything from hedge funds to consumers going in through ETFs and adding it to the normal part of their portfolio. You've seen
6870s.
I'd say looking to add it to their balance sheet, and then of course over the last year there was kind of the whole digital asset treasury company.
Oh yeah.
Is going on with institutions basically spinning up just to add Bitcoin onto the portfolio.
We're at the 200 EMA right now on the 1 minute, the SPX. That's your first support level in a way. It's a double bottom.
Did you see,
Uh-oh.
Did you see what I said about potential head and shoulders?
What's it? Yep.
That was the head on SPY 10 minute.
Very good. Because there it is. Look at all them puts. Should I go against it, Magnificent? Say yes.
I built a position in 680 puts for the second.
Oh, you did?
Yeah. I think if we break low a day today, we'll see. I think my next support level's down there at 677.
Okay.
That's a daily support over like a month, or I think month or weekly time frame. Daily candle support.
Yep. Very good. 1246. Mm-hmm. For the ground.
Exchange, and this is the watch list. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and we're looking at the huge upside today. We're seeing an Immunity Bio shares now up about 11%, and this is a company that specializes in immune-boosting cancer therapies. So for some more on this story, I'd now like to welcome in George Tillis, Senior Markets Correspondent for the network. So George, ImmunoBio shares have more than quadrupled in price just over the past
IBRX.
year. What's driving this big optimism today?
Well, if you look at the chart, you'll notice there's a huge catalyst that's embedded in the price, just going back to about the midpoint, if you will, of January. And this is essentially the drug itself. They have an Kiva, which is basically a drug that is used across multiple platforms for cancer therapies, including small cell lung cancer. But they got approval to use it for things like bladder cancer, and their products seem to be growing substantively in terms of sales and distribution.
700% growth.
I think a little bit of a short squeeze, which again is causing the price to move quite a bit to the upside. If you look at the last year, the stock is up about 200%. Most of the move is actually manifested in the last month, about 5 weeks, let's call it. So for what it's worth, they're growing. And if you look at the most recent report for the company, they posted still a loss of 6 cents. That was better than the 9-cent estimate. It's improving compared to a loss of 8 cents last year. Sales are still robust at 38.3 million. That's significantly higher by about 400% compared to 7 million last year. The company's still losing money, but if you look at their top line sales projections for this fiscal year, 256 million, and that's significant compared to last quarter's results, which they posted 38 million. Even go back to 2024, the company only generated 7 million. And if you look at next year, their anticipated top line sales number based on consensus estimates is 535 million. So in essence, what we're seeing here is a business transition, not necessarily just in product, but in financials. Because if you just compare next year's estimates at 535 million to last year's or 2024's sales number at 7 million, that's a tremendous increase. And so therefore, we're starting to see the stock price ramp higher, result of more distribution of a product that seems to be well accepted and has FDA approval.
And so I thought something was interesting was the fact that, Saudi Arabia is among one of these 4 major regulatory jurisdictions where they did see this drug, the treatment now authorized. So is this abnormal to see, this approval span beyond? I just tend to look at the United States and the UK, frankly, but we're seeing this in a market that is also, I think, leading to some of this upside today.
It's not unusual to see a lot of different regulatory panels, health panels, approve drugs. I think this is certainly a primary catalyst for Immunity's price. So for what it's worth, look, you need top-line sales growth to have any business. That seems to be the case here. I'm not suggesting it's going to continue higher from here. I do suggest this is an interesting name that's really developing. The challenge really lies, at least right now, is first you have to consider volatility, because if you look at the price action just today, the stock hit $11.15 at the high, low of around $9.68. So it's trading close to the low of the day. So there is selling pressure as we move throughout the day, most likely because they're going to be issuing another secondary tranche of shares because they're still losing money. Last year they lost 348 million. Cash on the books is about 258 million. So I suggest what's happening here is they're going to take advantage of this move as a company, which they should, issue some secondary shares. But I think it will be important here is if you watch this stock or keep track of it, the price action after the next secondary, if it gets bought up, that might be another leg higher. So again, this is certainly one to keep an eye on a watch list because top line sales are growing and eventually profitability will be there. It just happens to be that it won't be until 2027, to which point they're expecting a break-even year.
Yeah, and that's a good point as well. And I know seeing some upside today. We've given back some of that strength here in real time. We were up over 16% earlier, but did touch at least 4-year highs in a name that has been, one I was not paying attention to, but has seen again share price quadruple just in the past year or so. So I appreciate it, George Tillis, for all of that breakdown in ImmunoBio, which is up now 385% on a year-to-date basis. Just an astronomical move to the upside. And before we go, just wanted to check in on these overall markets, which we have seen this pressure persist throughout the last hour or so. We're still lower by about 1% in the S&P 500. The Dow still down just shy of 1.5%. NASDAQ 1.5%. Also contraction, but the Russell has come back a bit. We were down almost 2% earlier, about an hour ago, so now down about 1.7%. So at least easing off of session
double
lows
top
to close out our show. on this Monday. Appreciate you all for tuning in. That'll be
Head and
Next
Shoulders.
Gen Investing. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
This place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee,
Your giant TV.
it's everything in one place. It's like Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange in the corner of Wall and Broad. Quite snowy outside as the blizzard of 2026 hits all along the East Coast here. We have a big show for you today. A lot of down arrows for stocks for the major averages. We'll also take a look at the potential impact of the Supreme Court's tariff reversal across equities, fixed income, global currency markets, and multiple experts will be speaking about that today, the tariff impact. And in the options corner, we'll highlight some outsized trades that we're seeing on some recent news, including Eli Lilly, Rockwell Automation, and Fluor. And our panel ready to weigh in on what we've been seeing in crypto, the weakness in Bitcoin, just holding above 65,000 now, And what is the outlook for crypto overall? Are there some real catalysts? Does it get to new highs? Our panel will discuss. In the meantime, markets are lower. You have the concerns about tariffs, the concerns about the meeting with Iran on Thursday. I'll throw in there some Mexican unrest there with the killing of the cartel boss. There's just a lot going on, and the AI trade has just been under some pressure ahead of NVIDIA's earnings.
Dow Jones down 720 some points.
Software ETF hitting new 52-week lows. Kevin Hanks is joining me, host of Fast Market here on Schwab Network. And as I mentioned, tech overall has been having a bit of a tough time. We've seen upgrades, downgrades. We did see an upgrade on Alphabet over at Wells Fargo. Your thoughts?
Yeah, Google Alphabet down about 2/3%, despite Wells Fargo upgrading the stock to an overweight from equal weight price target, 387 up from 354. They think, as many people do, that Alphabet is most, best set up for the whole AI because of all the different parts of AI that they dominate. There's three main traits of an AI winner. They said customer data, distribution, and compute capacity. And they said it's all about capacity, and that's why they think that Google Alphabet's going to be one of the winners. They have Gemini, they have ways to deliver, they have the cloud, they have all the different things. The general statement is they have the entire stack. They're one of the only companies that own the entire stack in AI. So people are starting to get real positive on Google Alphabet's future with AI. And by the way, look at the price of the stock hanging in there with gains despite the rest of that sector getting really beat up, Nicole.
Understood. We think about the software sector and the continued selling, and we did have Dan Ives talking about the tariffs and how it could be affecting some of these names. There's no doubt that some may be lofty, but your thoughts here, just quickly.
Within the information technology sector that's down over 1% today, this is another ugly day for software. Microsoft, I've got it down 2.6%. Oracle down. Palantir, Salesforce, AppLovin, Palo Alto Networks, Adobe, Intuit, ServiceNow, all on the downside. I don't see any green in the software sector of information technology in the S&P 500. This is the sector that's really been battered the last few weeks, and they're hitting it again hard today, Nicole.
Understood. Home Depot is something in focus, of course. We had some conversations. We spoke to, like Folio earlier. We talked about Home Depot. There's a lot of excitement about a name like this, but it could go either way. What do you think the street's really watching for?
Well, I think a couple things. Nice news headline today that actually mortgage rates have dipped below 6% ever so slightly today. I think that's a key for Home Depot, as I consider it a proxy for the housing sector. But I think it doesn't matter about the earnings per share. It doesn't matter about revenue. It really has to do with their guidance going forward. How do they see the overall housing sector? They are such a proxy for housing that I think how they put out, how are they doing with pro contractors versus Lowe's, who's trying to compete with them for pro contractors. I think that this is a very interesting earnings play coming out. Why? Because I think housing is so important, such a focus of the Trump administration, getting those mortgage rates lower. That should help housing, that should help refinancing and home improvement, and that should in turn help Home Depot, Nicole.
Yeah, I just was seeing that real estate's actually hitting some new recent highs. Maybe lower mortgage rates might help with movement of houses, the spring selling season. Those kinds of things can really indicate that consumers are willing to do it yourself or make a move or things like that. They're going to need new appliances and fixer-uppers maybe, right?
Exactly right. All things get better for real estate when interest rates go lower. So if the Trump administration was looking for some way to stimulate the housing, it's all about interest rates, Nicole. Affordability of housing, lower rates if you're borrowing money, lower mortgages. I think it's all one thing. It all has a lot to do with interest rates. I think Home Depot is off its lows today. Still down on the day with the overall market, but off its lows because of that outlook about interest rates. 30-year mortgage rate hit below 6% today.
You know, and I'm just thinking big picture. You see people running to the safe haven of gold. They're running to bonds. Bond yields have come down. There's some uncertainty about the tariffs. I mean, and I see oil here, which is still at this high level we haven't seen because of the Iran story. So you have oil and gold telling a story, and also bond yields. Final thoughts?
Yeah, well, you can get a lot of information from commodities and how they trade, right? Crude oil, which has rallied because of uncertainty when it comes to the U.S. and Iran. It's actually down today as maybe they look for some dissipation.
All right, Kevin Inks, great to see you. Thank you so much. Now we take a look at the bigger picture. Brian Zeitel's with us, Managing Director and Partner at the Boston Group. Thank you for being here. So what are your thoughts? I mean, we know that President Trump is actually saying he's not willing to play games with these countries. We were talking about 15% tariffs, 5 months, 150 days after he was turned down by SCOTUS in the IEEPA ruling. So your thoughts on what happens going forward? Is it noise, or are you gravely concerned?
Not gravely concerned. There'll be some back and forth, as you know. There's volatility around tariffs and what rates will actually end up being. But if you look at where 15% actually ends up versus what IEEPA was, it's a lower tariff amount. And so you really need to start looking through different countries and different trade agreements to see who the benefactors would be. And in our write-up, we see both Mexico and Canada as being a benefit to the SCOTUS overruling the IEEPA and these new tariff rates coming into play.
And in the meantime, are you feeling that the market could still go higher? Is this rotation happening? Is it, we've had growth when we think about the Mag 7, then there's value, or is it like the 7 and then the rest of the S&P 500, the 493 type of thing?
I think it's more 493 story. There's a lot to be said year to date about rotation that's ongoing. We've got sectors like energy, materials, staples, a lot of the defensives that were just, left out of the party here the last couple of years, and we're just trading at more reasonable valuations into the year. Those things still look reasonable to us, and so we're still adding to those types of names. Again, we're dividend growth investors, and so we tend to play in those types of sectors already, but I think that's ongoing. So to answer your question, I think broad markets can do okay this year, but I think there'll be underliers within it that do actually very well, and there'll also be some losers in different sectors, and you're seeing that in some of the software names, and you're also seeing some of the shine come off some of those AI-related stories.
So, energy, materials, staples, those are areas you like. I saw utilities has been at a new recent high, new 52-week high, even real estate. Do you like either of those?
Real estate's an interest rate story and just something that's been stuck for a very long time. So coming off of 0 transactions to something more than that should be good. And then utilities, the need for energy in the country and in the world with a bigger draw for AI-related needs, but also growing populations and such is still something that we believe in. Those also tend to be more defensive names, and all of those sectors, by the way, that I mentioned, staples, energy, utilities, they're all later cycle sectors when you think about things historically. So it makes sense to us in that regard.
You think NVIDIA will control the market this week with its earnings? What are you expecting?
It's a $4.5 trillion market cap. It matters. The stock is still trading at 47 times. It isn't that there isn't a lot of capital expenditure in AI. We all know that there is, and so there's demand there with a long run rate to it. As far as it controlling the market, that big of a company, it matters quite a bit. I suspect they come out with earnings that are somewhat above estimates, but that the stock does something like normal returns here. It's just priced in at this point. Going forward, the question is whether that CapEx can keep up at the same pace, and I would say that it cannot. It'll eventually slow down to some degree, and so that's something to pay attention to with NVIDIA.
Yeah, and of course they say they're going to keep investing in AI. We saw NVIDIA with an upgrade today. Also, Alphabet got an upgrade today. So interesting how some of the names are definitely getting some positive comments. Apple too has gotten some positive comments recently from some of the analysts. Let's get back to midstream stocks. Are they attractive to you? Could you name a couple, or why?
Yeah, they are attractive, but they've been attractive for us for quite a while, several years. We like them from the standpoint of opportunity set. There's a lot of natural gas in this country, and there's a demand for it domestically and globally, and the ability to export it around the world that creates a very consistent business that we like. There's a high cash flow to it. A lot of those businesses have revamped balance sheets from the 2014 to 16 era, and so you're getting a high quality cash flow out of them and a growth thesis behind it. Also, you know, that sector is up 25% or so year to date, and so we like that midstream a lot. The way that we play it is with U.S. names, both partnership and C Corp, and then also Canadian names combined. And some of those names like Enterprise or Energy Transfer are very attractive to us.
I think about BlackRock got an upgrade today. It has a buy rating from a neutral and a 1280 price target from UBS. And so BlackRock's at 1071. And it's a name that you like in the financial world. Tell me a little bit about this name and what kind of upside do you think it has? At 1072, the high was 1219.
You know, I would look at BlackRock and Blackstone as very different businesses. BlackRock, you know, largest asset manager, there's upside. Capital markets have been very favorable, and so from an earnings standpoint, there's a lot of quality inside of that name. Blackstone, from an alternative asset manager, is a name that we actually own. And I would look at that one as somewhat of baby being thrown out with the bathwater with some of the private credit headwinds and things that we've seen. And it's just a high quality franchise that I believe you can pick up with a decent dividend yield, high distributable earnings runway to look at, and an attractive name to get into now that has sold off recently.
Yeah, let me clarify that. BX, Blackstone, which is really hovering around 52-week lows, and you think that has upside potential. What kind of do you think it gets a 10%, 15% boost in the next 6 to 18 months?
I think that's a reasonable, you know, assumption. If things all stay the same and there isn't a credit event and we don't go through a recession and growth still in real terms ends up being somewhere near 2%, then all of those things would speak to something like a Blackstone, which is diversified in credit and real estate, private equity, to perform well. And again, it's had pressures, but more on the macro side related to just private credit and the sector of it, when I think it's a little bit overdone here at this point. There's some media headlines and some negative news on some closed private credit funds recently, or gated funds, and that's causing some reverberation, but I do think there's upside in the name at this point.
When we think about the tariffs, just a final question. I mean, you know, for example, Europe was lower on this. We think about how the tariffs may take a toll, if at all. What's the takeaway for investors? I mean, should they be wary or watching certain sectors over others?
Well, good question. You know, we don't know exactly where this is going to end up, and so there's a little bit of a guessing game still ongoing with it and how it will matter. But if you think about businesses that in the U.S. that have a lot of exports to other parts of the world that would benefit from this, it can be anything from goods and services to consulting businesses and software businesses. You know, all of those things should get somewhat of a boost as tariff rates come down into lower levels, which is what this really is. I would look at it from the standpoint of bottom-up fundamentals on individual companies, and then I would think about it in terms of the countries that are the largest benefactors from this, which really I think is Mexico and Canada. And if you look at the total amount of a 15% tariff of, say, $70 billion less than what it otherwise would have been, you have to think that, you know, that is, you know, overall good for the economy and overall good for the U.S. dollar, as we've seen the dollar in correlations increase with tariffs as they go up and down.
Understood. Brian, it's great to see you. Brian Zaytel, Managing Director and Partner at the Bahnsen Group. Thanks, Brian. Coming up, Options Corner, and Rick Ducat is standing by. He'll highlight unusual options activity from the day and how investors are looking to trade on recent news of Eli Lilly, Fluor, and Rockwell Automation. So stay with us. We'll be right back.
Dow Jones down 793 points. Woo!
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
All right, welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. We welcome in Rick Ducat with us to take a look at a few names and some trades that you found. But first, just a big picture here. The S&P's down 1.1% after gaining 1.1% last week. Your thoughts on the market action or what you're hearing?
Yeah, not the greatest start to this trading week that we've seen so far here. But when I do look at the ES and the NASDAQ futures, for example, it has been a rather sizable decline for one day, but not really making a lot of significant new lows beyond some of the previous low points that we've seen here. The Russell futures, on the other hand, they did make a bit of a dip below their previous relative low, but we haven't had a big collapse yet beyond that point. VIX still elevated today. It was just shy of 22 earlier in the day, though, so it's calmed down a little bit today, but still elevated, still a bit of a painful start to the week so far, Nicole.
Yeah, definitely some big movers. I mean, I see Datadog, CrowdStrike, AppLovin, IBM. Those are some big laggards right now in the S&P 500. So we talked a lot about Novo, and that's been down 15% after a failed trial for obesity. And then Eli Lilly is the one that you're looking at, and this one's winner, up nearly 4%. Tell me about the trade you found.
Yeah, sometimes it is kind of a zero-sum game in some respects here. The Novo Nordisk's troubles are Eli Lilly's gains today. You know, they compete very directly with these obesity and weight loss drugs here. I won't go into the story too much again. You already kind of explained it. But really a very rough year for Novo Nordisk, down about 56% during this past 52 trading weeks, down, last time I checked, down about 16% today alone here. A Bloomberg intelligence analyst offered this very cheerful take that, quote, this outcome is the worst case scenario for Novo. So a difficult situation to be sure. And Eli Lilly, you know, poised to gain from this trouble here. But the trading question seems to be looking for more of a pullback over the next couple of months here or so in Eli Lilly. So this is actually a more of a bearish trade, despite the good news that relatively good news for Eli Lilly that we got today. The trade in question, plus 1,065 April 17th, 910 strike put at a 1113 debit here. So bearish trade, $1.18 million debit paid here. That would be the max loss for this trade here. Max profit, $95.7 million if it were to go to zero here. So what really intrigues me about this trade, though, not only are all these names high sizzle stocks today, meaning there's elevated volume activity relative to the 5-day moving average, but this one also was an unusually large trade here in this particular stock here. And what really made me kind of curious is that the expected move for this time horizon here, this 53 days out, is only about 11%. But just to break even, this trade would need a downside move of 14%. I just find it very curious when you see a very large trade looking for a bigger than expected move that seems to kind of come out of nowhere here. So just some food for thought. This trade in question was about 3% of the total overall market for Eli Lilly today. The sizzle was 2.3, so elevated activity and a large single trade for a decent amount of money.
Look, you're making it exciting because, you know, it just seems so out of the ordinary with that. So we'll keep an eye on this name. How about Rockwell Automation? This is a name that came to your attention, and you have a trade that you're going to share.
Sure, another S&P 500 name, perhaps not a household name here, but this, as it would suggest, it focuses on industrial automation. So manufacturing hardware like motors and sensors for factory production lines, but also the software that these businesses would need to connect their factory machines to the internet and hence develop automation, real-time data monitoring, that kind of thing here. So kind of an interesting topic here, this kind of automation and AI, kind of whole framework that we're trying to develop here seems to be something that this company would be focusing on in some ways here. So today we saw a price target boost from TD Cowen, 350 from 330. They kept their hold rating here. Earnings were a bit of a disappointment for the bulls. Recently we saw an almost 6% one-day drop. But right after that, though, the other analyst activity we saw was all price target raises from KeyBank, Mizuho, Goldman Sachs, Daiwa, Baird, HSBC, etc. So the longer-term analyst view seems more positive here. And this trade is a more neutral to bullish trade here that we found. Same time horizon as our last trade, 53 days out, minus 2,715, April 17th, 350 strike put at a 421 credit here. In this case, $1.1 million credit received. That is the max profit here. If this trade were to stay above that break even here, max loss $93.8 million if it were to go the wrong way in the max possible direction here. So in this case, again, the break-even is outside of the expected move range. This would be a bit more conventional, though, because this is a short put sale here, that this is kind of less unusual than looking for a long put to kind of exceed that expected move range here. So expected move about 10% plus or minus, break-even 345.79, roughly 12% to the downside here in this case for this more neutral to bullish trade setup that we found here. The trade volume in this case, this trade was about 93% of the total options volume in this symbol today. So again, not really the most heavily traded name. It just is, it really stands out when you see a trade of this magnitude and this dollar amount, especially in a symbol like Rockwell Automation. At the time I checked earlier this morning, the sizzle was above 20, but things have moderated somewhat here. Just when I checked before the show, it was around 4.8.
Okay. And last but not least, thank you for that. And it's down 1.3% right now. Next up, we have Fluor, and I saw that there was a neutral rating from Baird and a target of 48. But most of the names, Citi, D.A. Davidson, Truist, they all had buy, and the respective price targets were 61, 60, and 59. Stocks at 51. Tell me about the trade that you found on Fluor.
Right, so Fluor, engineering and construction company. They do large-scale infrastructure products for energy like oil and gas infrastructure, urban projects like roads and bridges and that kind of thing. But they also do some government types of projects like nuclear cleanup and national security projects here. As you said, mostly seeming like the analyst coverage is positive. Several price target raises in recent days here.
Double top,
12%
pull back.
after our recent earnings event as well.
Triple bottom.
Today's decline. So seeming like more of a positive setup here in the recent term for this particular company. And this trade was a more bullish trade that we found here. 7,500, March 20th.
Jim sees the play.
47.5 calls at a 573 average debit.
You just
so this
gotta
trade
wait.
was done in two separate lots. That's why the average debit there. Again, all these are opening trades here. The volume exceeds the open interest for these particular options contracts here. So
big old snake.
We always try to find, or I always try to find opening trades here because those seem to be the most significant in terms of kind of this unusual activity here. So looking for basically just a push back above those recent highs that we saw around that 48.50 level or so. A bullish trade, $4.2 million debit paid here. So our biggest dollar amount trade of all in this one. 25 days out means it's also our shortest duration trade. Looking for that next expiration here for our monthlies in March. Break even, 2.4% to the upside. Expected move more like around 11% or so. So well within that boundary with this trade's break even fall. call. So now we can also see that the trade volume for this one was about 61% of the total market in this name today here. The sizzle at the time I checked earlier was over 20, but now it's moderated again. It depends on the time of day. It compares that relative to that 5-day moving average. Now it sits at about a 2.1 for the unusual elevated activity for that metric here. So another one, a large dollar amount, especially given the relative lightness in the trading of this name.
All right. Well, everybody loves Options Corner. They love to see the real trades in action. Thank you for bringing those to us. Rick Ducat, really appreciate it. Thank you. Coming up, a closer look at what's going on with the tariffs and what it really means for not just the tariffs, but your portfolio, fixed income, currencies. You know, is there a trickle effect that could be happening? The watch list. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I trade options for good, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly.
Coming to my little spot.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls?
Prepare ye in the name of the Lord, 6825.
In one place. It's like Schwab. Everything investors need.
Triple bottom.
Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management.
6840s.
I think I'm gonna be sick.
Or the 6835s.
Invest your way with Schwab.
Grudging well. Ladies and gentlemen, I'm looking for 6825 with a triple bottom. Am I going to get it? These will be the 6835 strikes. You can do it. Got one order. Still waiting. Might not get it. Yep. There we go. Prepare ye in the name of the Lord. Well, what are we going to do? We got 20 minutes to power hour, and I'm getting right to my spot. There's a triple. Oh, here it is. He's waited all day for this. He's going for it. The 68. Okay, this is it. I've been waiting all day for this trade. Triple bottom. How'd he do it? I sat here and watched him. Oh, God. Oh, my vacation spot. Okay. We can do it. $3.50. Strike is 68.35. And right now, $3.20. $3.20. Okay, Jimmy. You can do it. Triple bottom. Okay. Do 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 do. Risky, risky, risky. Okay. This is called a triple bottom. Washboard's going against the odds. No. Can't take much more here. Just gotta hold. $2.95. $3. No. Now on the 5 minute, 5 minute, which would be a triple bottom? Okay. The crowd's going wild at the sports arena. $68.22.30. That's it on the 5 minute. So I've been doing a case study here with the 5 minute and the 1 minute. See which one's stronger. And in this case, I would say it's equal. With a little bit, well, yeah, equal. But definitely the 5 minute looks pretty good. Better than 1 minute. In this case, definitely. Because we failed the 1 minute, but we didn't fail the 5. Come on. They're now up $50 a contract. Have you ever thought about selling, Jim? No, I can't. It's triple bottom. Did you see what I see? On the 5 minute and the 1 minute? Look what I see. Uh-oh. Uh-oh. This could be a banger. Man, it could not. Oh, Jesus. Jim, your Texas already. Always clean, it's Jim. Yeah. I'm not here. Yeah, what's up? Man, come on. You can't keep me waiting when you call me. I have a busy life. Let's go. SPX calls, scalping the lotto strike, 68.35s at 320. They were at 4. Just a bit ago. The 5 contracts, oh. IBM calls. Jimmy's going against the grain. Now in the 1 minute, I'm at resistance. Whoops. See? I'm squeezing. On the 5 minute, man, I got a long ways to go. Shit. Jim, you're up $120 a contract. Have you ever thought about selling? No, I can't. 160. Okay. This is ridiculous. Yes, $4.60. Uh-oh. Just like that, back down. Go back up. They're at $4.60 right now. Should I sell? 480. 490. Come on. Go. Randy. $4.90. Come on. That was beautiful. Now can't hold its own. Nope. Let's go. Another flag. Still above the 9. Well, it was. Oh, yeah.
K, now it's crashing to 65K. I think in a few years it'll crash to a higher number.
Yeah, I'm sorry. In a few years, it'll crash to what?
I just said to some higher number. You know, if it crashed to 3, 16, 65, something in the hundreds, I would imagine.
Okay. Tyrone Ross Jr., CEO, Principal 401 Financial, joining me now. You know, is this a buying opportunity on Bitcoin here? There are a lot of folks who are believers. You just heard John Hart giving a slew of reasons why, you know, people are involved, you know, Harvard and Vanguard and Merrill Lynch and blah, 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 you know, that it's a real thing. Would you buy it at these levels?
Yes, I think it depends a lot. As a financial advisor, I think a lot of that needs context, your time horizon, risk tolerance, what your financial goals are. But I think if you're looking at this long term, which I think everyone in Bitcoin should have at least a 5-year time horizon, and you look at an asset that is down almost 50% from the highs, when the store is, you know, the items in the store are on sale, you go in and you purchase that. So I think it's a good place to start dollar cost averaging in here.
You know, the other thing is the leverage. There are a lot of leverage investors, and, you know, they have margin calls and they have to get in and out. Those are not long-term investors. There are long-term investors, to your point about the try and go in there for 5 years. You know, are there concerns? What would you say would be a headwind, Tyrone?
I think that is one of them. I think the leverage is an issue. I think if you look at what happened in the crypto space on October 10th, that huge liquidation event, and look how a lot of folks have utilized IBIT to leverage it and do some really wonky trades, that is a problem. And to me, I never was a fan of a Bitcoin ETF, and I think this is what you get when you get institutions that come in that are just looking to absorb fees and monetize a new and novel asset class, but not really here for the technology and making sure financial rails are more efficient.
Yeah, look, most of the people come on still like it, or, you know, that there's a hold around these areas, there's support by the banks around these areas. You know, they like Ethereum, they like Bitcoin for the most part. I haven't really heard too much bashing of it, but obviously it's been sold off in a big way. It's great to see both John Har and Tyrone Ross. Thank you. I'm Nicole Petalides. Glad you're with us every single day. I see you at 9 a.m. for the opening bell and 2 p.m. here for the watch list. I'm glad you're with me.
We're at the 50 right now.
Network. And keep it right here because Market on Close is next.
Schwab Bank Investor Checking.
1
a
minute.
checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account. Plus, cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide.
Walmart
No
pulled back
overdraft
to the
fees,
200
and enhanced
or
security features
oh.
to keep your money safe. Also,
Yeah.
because your investor checking account is linked to your Schwab
They had a
Bank
good
brokerage
run.
account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data,
Megaphone on a 30-minute.
and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters. Coming up on today's show, we'll take a closer look at the outlook for gold and crypto and where prices might be heading. We'll also take a deep dive into oil prices amid the ongoing tensions with Iran, as well as the latest in Trump's global tariffs. Plus, we'll have earnings from Hims and Hers after the bell.
Hims and Hers after the bell.
Today, though, Novo Nordisk plunging to nearly 4-year lows after its new weight loss drug failed to match up to Eli Lilly's. Patients in the latest trial showed 2% less weight loss on Novo Nordisk's next-gen medication than those on tirzepatide, which is the main ingredient in Eli Lilly's rival drugs. Shares of Lilly jumped on this news. Workday stock also under pressure today after Jefferies downgraded it alongside several other enterprise software names. The firm cut the company's price target by more than 50%, saying that there is concern about execution risk with the returning CEO, adding that the bar may need to be lowered again in the future.
Workday.
And Intel shares jumped midday following a report from Bloomberg that it has been meeting with banks to assess unsolicited takeover offers for part or all of the digital payments company. PayPal has lost nearly half of its value in the past year. We'll take a closer look at all of those stories and more, but let's see where the markets are standing as we go to the end of the trading day right now. The S&P trading still down more than 1%, a tenth at 68.2979. The Nasdaq down to 24,625. That's down 1.5%. On the Dow, we've shed 789 points so far, 48,836. And the Russell 2K is trading down 1.7% at 26.19 right now. The 10-year even lower at 4.03. The dollar at 97.64. Gold continuing to move higher at more than 3%. 52.38.70 a troy ounce. Crude oil sitting at 66.
No big breakout yet.
And Bitcoin continuing its descent down more than 5%.
Ooh.
Back below that 65,000 mark to 64,350.
That's what you get for trying to pump it.
Today, so I want to welcome in our first guest joining us now, Kevin Hanks, to take a closer look at our top movers today. Kevin, great to see you this afternoon. Let's start by talking about Novo Nordisk. They released the results of this open trial, and their latest drug did not stack up against Eli Lilly's in the way that they had hoped it would.
Yeah, winners and losers in this segment of the U.S. economy. And if you didn't know anything, Marley, about any of these companies, if you weren't a scientist, which I'm not, all you have to do is look at the stock price of Novo Nordisk and the stock price of Eli Lilly. And it's pretty obvious who the winners and losers are in this group. Not to mention Hims and Hers, which is a stock that's lost a big percentage of its value. So this is a company that when Novo Nordisk did their testing, it simply didn't add up. It didn't hold up well against Eli Lilly. And so one stock went firing up on that, and stocks in this category can really move on approvals and failures and successes in the testing process. And so to see Eli Lilly jump higher, Novo Nordisk, and really, if you honestly look at some of the data, they didn't lose by substantial amounts, just slightly, but they didn't beat Eli Lilly. And so Eli Lilly stock went up, Novo stock went down, and it's a pretty ugly day for the Novo Nordisk stock.
Yeah, like you mentioned, only a 2% difference, but my understanding is the entire trial had a primary endpoint of proving that it was more effective than what Eli Lilly currently had offered in the market, and it came up short. So that's why we're seeing Eli Lilly almost 4% higher today, Novo down more than 16% right now. Also want to talk about Workday, moving significantly lower as well today, down more than 7% right now after getting a downgrade from Jefferies, a pretty broad downgrade actually across several software names.
Well, analysts, when they do things like this, they're in terms of the price tag, they're definitely they're definitely trying to catch up. But they downgraded Workday to a hold from a buy, price target of 150, down from 325. It shows you how much this stock has moved. The firm says the app software name have been hit harder than overall software. Remember, software really under pressure in this environment. If you look at information technology and the software sector within information technology, just absolutely decimated. They're taking big percentages out. Workday, one of those names in that software sector, getting hit really hard. Jefferies sees ongoing risk of negative segment and downgraded 4 names in the space to reflect its new AI risk framework and the company-specific factors. For Workday, the analyst sees execution risk. So saying the new CEO and other executive changes means its medium-term growth bar needs to be lowered again. So not good news for Workday, a stock that's been, like I said, under pressure. The price target, 325 down to 150, Marley. Ouch.
Yeah, ouch is right. I mean, when you get a more than 50% reduction, especially when your earnings are tomorrow, it's not great timing in terms of the setup. But right now, Workday trading.
No, that'd be a great timing for a perfect setup, baby.
48. I do want to talk about one of the surprise winners on the day, though, Kevin. Domino's Pizza delivering its, I couldn't even believe this, 32nd consecutive year of same-store growth in international markets, and another point where it gained market share here in the U.S.
If you live where we live, Marley, near Chicago, we're a local pizza town, so it's hard for us to grasp the national version of a Domino's Pizza, but they are incredibly popular. This is the high-tech company whose overall delivery of pizzas and price target or price points are very low. They have a national
drop each,
and so this company reported earnings Revenue 1.54 billion versus 1.52, a slight beat. Earnings per share, a slight miss, 535 versus 538. Overall, the revenue beat and the guidance going into next year has the stock up on the day. But Domino's Pizza, you're right, it doesn't really compute in our world of local hometown pizza, but on a national brand, they have done things with delivery where they've broadened into some of the the delivery companies to make their footprint overall bigger, and this company put up some good numbers and guided better for 2026. Marley.
Yeah, I'm just fascinated by this, and some of it, yes, is that Chicago, much like New York, is a pizza town, and we take our pizza very seriously, and often Domino's not a part of that conversation. But good for them. A nice, strong quarter. Interestingly, when I was taking a look at the results, Kevin, and I was talking to Kevin Green about this earlier, I was surprised that in their U.S. stores, their gross margins actually narrowed about 540 basis points. With higher insurance and labor costs, increased food costs, none of which are going away anytime soon. But that just seems to be like a small blip in the move to the upside, whereas I feel like with some other companies we've seen, if it was even 100 basis points in terms of narrowing or contraction, they were met with some swift punishment.
Input costs and labor have plagued companies all over this earnings season, especially in the restaurant and retail space, which, as you know, now the second half of earnings season often involves retail. So those things, remember, we covered last Friday on our Fast Market show, we covered Chipotle, McDonald's, and all those. We're talking about two things, input costs and labor costs. I'm sure Domino's Pizza has that same problem.
Long day.
They certainly do, but still a good day for Domino's Pizza and those who love Domino's Pizza or are invested in it, up more than 3.5%. Another move to the upside happened midday today for PayPal. PayPal getting some unsolicited reports of unsolicited potential takeover offers after its stock slide. I mean, lost almost 50% of its value over the last year. And they're reportedly meeting with banks about some offers that they've received.
More drama coming in.
Yeah, it's interesting. This is one of those stories where it's so bad that it's attractive, right? They've lost so much of their market value, but that they're now attracting
buyers,
attention from potential buyers. Remember, PayPal as a online payment system hasn't done very well.
Nope.
But their franchise Venmo is enormously successful and very popular, and that may be what's attracting some interest. You would think, Marley, that in a world where everyone, cash is gone completely, and digital payment, digital wallets is what's taking over, how could this company not be doing well? But they've kind of lost their role in digital payment. However, Venmo keeps getting more and more popular. I imagine that there would be some interest for that company down the road. I don't know what price, I don't know what level, nothing is for sure yet. But yeah, the depressed price of PayPal for PayPal is actually bringing in interest, Marley.
Yeah, certainly. I mean, and Venmo is everywhere, to your point, Kevin. I'm the Girl Scout troop leader for my daughter's Girl Scout troop, and our Girl Scout troop has a Venmo. So even the 8-year-old girls aren't being left out of the Venmo conversation. But Bloomberg reporting at least one rival looking at the whole company, while some other suitors are interested in certain assets. I would imagine Venmo definitely one of those assets. But Kevin, thanks for being with us this afternoon to break down some of those top movers today. That's Kevin Hinks. Coming up, we will take a look at the recent action in gold, how investors should approach it, and how digital assets are playing a role in portfolios. Market on Close will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m.
Watch
Eastern,
List.
only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Ooh.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Market on Close. Shares of IBM under pressure today as it becomes yet another
Ooh,
legacy
IBM.
tech to fall victim to the rapid evolution of AI. Today's selling in IBM, which is down almost 12% right now, is to the latest Anthropic Claude product advancement. It's on track for its biggest drop since March of 2020 after Anthropic said that its Claude code tool can help with modernizing COBOL, which is a dated programming language standing for Common Business-Oriented Language that is widely used in business data processing, which is a core business area for IBM. COBOL continuous power systems responsible for large volumes of transactions, including payment processing and retail transactions.
IBM.
Transaction systems, making it a prime target for AI disruption. In an Anthropic post, Anthropic came out and said, modernizing a COBOL system once required armies of consultants spending years mapping workflows, but tools like Claude Code can automate the exploration and analysis phase that consume most of the efforts in COBOL modernization. And therein lies the threat to IBM. IBM is a huge component of COBOL is a big component of IBM's business, and that's why we're seeing shares down just in the time it took me to walk you through that story, down another 0.5%. We're now down almost 12.5% for IBM. But welcome back to Market on Close. I'm Marley Caden. Let's turn our attentions to the traditional and digital assets with our next guest. Joining us now, Harriet Brown, VP of Sales at Twin Stake. Harriet, great to have you with us. Let's talk about gold and some of the pricing that we've seen in gold. We are seeing gold move higher today. I'm just looking right now. We're up to 52.43 a troy ounce right now. But as far as the moves that we've seen, some pretty decent swings here on a lot of this uncertainty. What are your thoughts on the action we've had so far in gold in 26?
Hi, Molly. Yeah, great. Thanks for having me on the show. Look, I think what's really driving markets right now is this continued focus on both the macro and the geopolitical uncertainty that we're seeing. So investors right now, they're clearly navigating these combined effects. We're seeing, continued focus on inflation, interest rate policy.
Inflation.
Also, more recently, this geopolitical fragmentation. We've got global tensions rising, and today's a perfect day to talk about it because tariffs are once again back in view, and the markets are reacting accordingly.
And as we've
see some of this uncertainty here around the geopolitical concerns, around tariffs being back in view, and some of this whipsawing action that we've seen, we still have Goldman coming out. They still have 5,400 as their forecast. Knowing how high we've gotten and that we're at 52.43 now, do you still see that as a realistic number, or do we need to have adjustments there?
But I mean, I'm not necessarily going to talk about the price for gold per se, and I think we don't have a crystal ball and it's hard to forecast. I know that the analysts at Goldman's and other big banks, have various models in which they can approach that. But, I think in this environment, let's say, it's not that surprising that gold has remained a major focus for institutional allocators specifically. And I think if we zoom out maybe and look at this more from a macro standpoint, gold has risen significantly over the past decade. And this has been off the back of a number of kind of global events, which really reflect a period that began, let's say, with the global financial crisis, and what we saw was, incredible monetary expansion in that period that followed. And then it's been accelerated again, with the pandemic, where we saw an unprecedented amount of liquidity coming into the market, trillions of dollars actually entered the global system. So perhaps, I think, to talk about whether this is a sustained action, like I said, hard to say whether there's going to be a sustained price action, but what is an interesting data point, at least from my perspective, is, for the first time in decades, what we've seen is that the market value of gold that is being held by foreign central banks, for example, is now overtaken the holdings of US Treasuries. And so gold reserves are now valued at around $4 trillion. And that, I think, is a signal and a shift in really how sovereigns and institutions are now thinking about building longer-term resilience.
And you bring up a great point there, Harriet. When we got that statistic back, I think in the summer of last year, that we saw the central bank holdings surpass treasuries for the first time there. What does that signal, from your standpoint, to institutional investors who are thinking about diversification with gold?
Yeah, I think when we think about institutional investors, and particularly, the asset owners, as well as the allocators, when we talk about, central banks, we talk about pension funds, endowments, these guys are managing very large, long-duration portfolios. So I think it reflects, a combination of both monetary policy, but also the kind of forward-looking risk management. And so over the past decade, we've seen prolonged periods where we've had very negative or deeply compressed real yields. And so more recently, we're also having these higher nominal yields that sit alongside this elevated levels of global debt. And so that really sets us up for this environment where institutions are very focused, not only on diversification, but also on this preservation of purchasing power. And so gold as an asset, has historically played that role because it's been viewed as scarce. It's globally recognized. It's previously had a reserve currency kind of role in the economy. And it's also not directly tied to either the credit risk or the risk, let's say, of any single sovereign.
Yeah.
So I think that's one of the reasons why it continues just to be a focus for institutional investors.
And I want to shift to digital assets, because there was a point, at least at the end of last year, where we were talking about gold and crypto, particularly Bitcoin, almost hand in hand, and this digital gold conversation. I haven't said that term in a while with the action we've seen in Bitcoin particularly, but a lot of people view them as having sort of gold-like features, but with additional benefits or different market participants involved in them. As you look at a digital asset into a portfolio alongside a traditional asset, how are institutional allocators incorporating both of these things, especially in the pricing environment we have right now with Bitcoin and crypto so heavily under pressure?
That's a great question. And I think
it's a great question.
Highlight and start off by saying is that the institutional engagement that we've seen in this
you're good.
especially with digital assets, has really continued to mature, and it's
generate 750.
So in many ways, I think institutions are applying some of the same principles that they have historically applied to assets like gold. So, for example, diversification, long-term positioning, store of value, particularly where you mentioned Bitcoin being like digital gold. But at the same time, there's also this...
I'm out of water.
Blockchain itself represents a new financial infrastructure and a technology. And so institutions are not just looking at digital assets as something to hold in a portfolio, but they're increasingly looking at it as an infrastructure play. And so, for example, staking, it's a great example of this. It's a core part of the plumbing of blockchain networks. And for institutions, they can essentially participate in the networks, in the operational layer of the network, and in return they can earn rewards from the protocols for performing that function. And I think that is where there is a key distinction from something like gold, which really serves primarily as this like passive store of value, whereas the blockchain brings almost like an active operational component of running infrastructure. And so for investors, I think that is a different bucket that they can look at blockchain in, and a different way they can actually participate.
And Harry, I'm glad you brought that up, because blockchain and the infrastructure behind the digital assets has been evolving so rapidly, and regulation is now trying to keep up as it evolves so rapidly.
Aha. Frozen your tracks.
Perspective as we look at the digital asset space, that they meet the needs of global capital markets?
Yeah, this is a really great question. And really, I think when we think about something like this, we can talk to something like ETFs, right? ETFs have exploded in the last couple of years. We see crypto ETFs have become a major development because they provide essentially this regulated access through a very familiar structure. And so today we've seen like maybe 140 different digital asset ETFs that represent, I think, upwards of $140 billion in value. And I to the point earlier, that reflects this growing institutional engagement. But importantly, for the ETFs to continue to grow and to continue to be institutional offerings for crypto, they really have to rely on this broader ecosystem of institutional infrastructure. So things like custody, trading, and the thing I mentioned earlier, staking infrastructure that supports these underlying networks, which then enables further institutionalization of the space overall. It's almost this kind of flywheel effect. So we're seeing really institutions approaching the space very deliberately. Large teams are being built out, resourced, and the emphasis really around like risk management, operational due diligence, and really long-term strategic relevance. So even in this down market, what we're continuing to see is a continued focus from very large players in growing those teams, building that.
Jim was in a spy call, but he doesn't know.
Such as TwinStake.
SPX call.
To ensure that they have that operational robust structure and framework in place.
See if we're going to get a bounce.
So I want to bring us sort of full circle back. As gold and digital assets both continue to gain attention and investors
68.35s.
Complementary hedges, or are investors choosing or seemingly choosing one over the other in uncertain markets?
Funk been here today?
It's a great question, and I think it. To answer that question, maybe it's less about the what, but the why, right? And so why is crypto and digital assets still relevant alongside holding something like gold? And I think it again loops back into this point about it being a long-term frontier technology and infrastructure. It's more of a fundamental shift in how capital markets might be innovated in the future. And so we see institutional players wanting to continue to invest and put time and resource into this. And it's less than just being a portfolio diversification point, I think.
Well, Harriet, we appreciate you being with us this afternoon. Thank you so much for the insight on gold and on digital assets. Harriet Browning from TwinStake. Coming up next, we are going to check in on the oil markets as geopolitical risk has crude oil not far off from $70 a barrel for the first time since July of last year. Market on Close. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Boom, boom, boom.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden. Shares of CrowdStrike are under pressure as weakness in software stocks continue. Today, Stifel cut CrowdStrike's price target to $480, down from $600, but did keep a buy rating on shares. CrowdStrike reports its earnings on March 3rd, but still under some major double-digit
Jimmy said it was
today.
way overbought anyway.
11% lower, alongside
When it
several
was way
other
up there.
software names. AppLovin almost 10% down on the day. Datadog, the loser in that group, there down more than 12%. Workday down 6 1/3%, just about 6 1/4 now on a downgrade from Jefferies, and Intuit down 5 3/4%. Another bad day for software, another sell-off in the software stocks. But I do want to shift gears here now. Turn our attention to the oil markets with our.
Uh-oh. Internet problems. Fuck. Internet problems. Hello? Oh no. Oh no. Network issues. No. No. Man, this is not getting good.